Rebound in NVIDIA shares leading the markets higher yesterday. Joining us now, Marianne Bartels, Chief Investment Strategist at Sanctuary Wealth. And I actually was talking yesterday, and actually in a few of the interviews lately, I don't know, just have an unsettled feeling. It's just weird, 2% pullbacks, that the market keeps going up, there's liquidity. But I felt better about the overall market in 2023 when everyone hated it than I do right now. And you point out the same thing. Analysts, Wall Street watchers have finally caught up with their own market outlook and raising their target. Many of them are now at 5,600. So I don't know. They were so wrong last year. It makes me uncomfortable when they get bullish.
I'm in the same camp, Joe, but I don't think it's a big sell signal. I still think this year's going to turn out really well, and that's really based on a combination of earnings still remaining very strong, profit margins still growing, and the technicals of this market remain very bullish. So, I think we can get a lot of chop maybe in here a little bit. We're getting a rotation. We're getting some profit taking in technology, and you obviously saw that recently in NVIDIA. And we're seeing a rotation because industrials got oversold, energy got oversold, and utilities. But I still think that tech is the leadership and is still going to drive these markets into the end of the year.
And you like growth, so you're not thinking it's a value thing or in a mega super cycle for growth. So you think there are true fundamentals backing up these valuations? It's not just all the stimulus, all the liquidity.
Well, Joe, the liquidity and stimulus are definitely affecting risk assets, but the companies, particularly the Magnificent Seven, are producing earnings. This is not what I call air pudding and windsauce, rallies that we saw in '99 and 2000. These are real and substantial, and we're in a major shift in the global economy as we're shifting technology to AI. In that sense, it's very similar to 1995. But if you compare the NASDAQ 100 to the market period of the 1920s, we may have a rally that surpasses the 2000 rally and really have a rally that's very similar to what we had in 1925 to the peak in 29. That's where I get the super cycle for growth. I think this is going to be an unprecedented move that we see in the markets that go out to 2029, 2030.
Right now, a lot of what we're seeing with AI is like the build out. You need chips. I don't know whether the use case for every, for across the board, it's going to help every company be better, more productive, do more things. How many years before that's really a major contributor to just the prosperity of these companies and how well they do? Because right now it just seems like the people making the pipes or whatever you want to call it, the chips, the ultra fast chips, they're the ones benefiting. When does everyone else benefit from AI? 5 years?
I think it's before that. I think, by 3 years, we'll have a much better sense of where AI is really producing.
We're ahead of ourselves then, if it's 3 years away.
I think we're a little ahead of ourselves, but that doesn't mean that they're not going to build out the infrastructure. So this is going to go in cycles. So we still have to build out the infrastructure to run AI. We don't have that full infrastructure yet. And you see that with NVIDIA with their new chip, the Blackwell. The marketplace still has to adopt that. And what amazes me, I've been doing this for 40 years. I've never seen a company like NVIDIA before make this major transformation and then have earnings hit the bottom line so aggressively. They're definitely going to be the leader in the market. They're going to probably take about 80% of the share, but it's not going to be a straight line. But I do think this year is a good year. We may have a lot of chop next year, but I think when we go into the back end of the decade, you're going to start seeing companies move at a pace that we have not seen since 2000. These are very early stages for these moves in these companies.
But when people try to look at a historical precedent for NVIDIA, they come up with Cisco, which went to 600 billion back in the late 90s. I don't know if that, I mean, 3 trillion, and the speed that NVIDIA got to 3 trillion, I don't think anything compares. I don't think that holds up the comparison of. So I don't necessarily think that suddenly, NVIDIA goes back to having what Cisco had, 24 years of underperformance after 1999, whenever it was.
Yeah, I think you're correct, Joe. Absolutely. As I said, I've never seen a company in the 40 years I've been doing this create such groundbreaking technology that will eventually transform the global world.
Well, right now all you can do is write a college paper. I keep saying I need to expand. I need to read more. I need to find out more uses. I mean, drug discovery. It ought to be great at taking doctor-patient data and collating it all together and figuring out trends. And there should be a lot of things that it can do. Logistics to change our lives. And railroad. There's no place where AI won't be great. But at this point, it's still a build out of the infrastructure. So I don't know what you buy besides NVIDIA. Maybe that's why. Maybe all of the excitement is all concentrated in a couple of companies that are actually doing it now.
You need hardware, right, to build this out. So, you look at companies like Dell, an old name. Look at a company like Hewlett Packard Enterprises, an old name. You're really starting to see early stages of those stocks moving technically. So it's hardware. Well, it's the chips, it's the hardware, and the software.
Okay. Marianne, thank you. Marianne, and we finally got your name right. I guess because everybody had those wine coolers for so long, the Bartles and James. Because for years, and you never said anything. You're so nice.
No, because Bartles is actually a correct pronunciation of the name. So Bartels and Bartles are correct pronunciations. My family just pronounces it Bartels.
Okay. So you want us to pronounce it correctly, or you want us to pronounce it like your family?
Joe, it doesn't really matter. For years you called me.
It matters.
It doesn't
it's like
matter.
When people come on and call it NVIDIA, I'm ready to end the interview because they obviously have never been on I haven't been on a conference call either, but I know it's NVIDIA, right? Do you tell people when they come on your show? That it's NVIDIA.
No, everybody knows.
Oh, no, they don't. We have lots of people come on still call it NVIDIA. If someone calls the state of Nevada, I get off. I tell them to delete.
Thanks, Marianne.
What's coming up, Melissa?
Coming up, an update on the CDK cyber attack that has crippled auto dealerships. We'll tell you when the company's software could come back online. That's next. And later, Academy Award-winning producer Brian Grazer will join Andrew live from the Aspen Ideas Festival. Squawk Box will be right back. update on the cyber attack on CDK that has crippled auto dealerships across North America. CDK telling clients yesterday that its software outage may last until June 30th and warned them that they may need to make alternative plans on how to handle their end-of-month finances. The company did not comment on reports of a potential ransom payment. In other auto dealership-related news, Solera is reportedly seeking a valuation of $10 to $13 billion in an IPO. The company analyzes vehicle life cycle data for clients, including insurers and auto dealers, and provides fleet management services. A Bloomberg report says it may file publicly for its U.S. IPO as soon as this week. The company was taken private by Vista Equity Partners and another group of investors in 2016 at a valuation of $6.5 billion.
I promise you, we're going to talk about Whirlpool very shortly, but just, will you bear with me? Just give me like a minute. And I have to ask viewers to bear with me too. Now, I was asked to do this, and I was going to do it on a break where I could record it, but it's about NBC Sports, and NBC Sports Next has a series called Ask Rory. Ask Rory McIlroy, one of the great golfers of his generation, as you know. And this is where amateurs. Even amateurs like me get to ask him a question, okay? And it's on a Golf Pass website where you can, and so I figure why not talk about it so that people can look forward to it, maybe go to it, since NBC. I met Rory 10 years ago at St. Andrews. I get to ask him a question, and then he gets to tell me an answer that probably won't work, but Rory does a shot, and Rory, here's my question, Joe Kernan from CNBC Squawk Box. You do a shot from 30 yards out off a tight lie in a fairway, and you can skip it into the green, and it bounces once and stops. And I don't even know if amateurs can do that shot, but I just want to know, I want to try it. What loft do I use on the wedge? I don't know how you get it so low. Where do I put it in my stance, front, back, or middle? And how do I just not decel or skull it or hit it fat? Or it's really difficult for an amateur to do this shot, but it could cut probably 10 strokes off your game. So that is my question. Now everyone can look forward to Rory answering it on Ask Rory on this Golf Pass.
I would have asked a different question.
What would you have asked?
Does he have a lucky charm?
He is from Ireland, Northern Ireland, I think Northern.
Does, you know?
And he.
Maybe a rabbit's foot, or I don't know, a lucky
Rory is going to be back. He's going to be back so big, believe me, because in the recent major where Bryson was just awesome. I mean, Rory had it, but it happens to everyone. You know, these short putts can be. I should ask him about putting because I'm no good at that either. Coming up, NVIDIA's rebound. Some people call it NVIDIA, and then they're not allowed to stay on the show. It looks to continue after a jump of more than 6% yesterday. We're going to talk tech after the break, and at 7 a.m. Eastern, House Speaker Mike Johnson is going to join us about the November election, tomorrow's presidential debate, and as we head to break, here's yesterday's S&P 500 movies and news.
50% off.
Good morning and welcome back to Squawk Box, live from the NASDAQ market site in Times Square. Let's check out the futures. This morning you can see weird again. Dow's down, NASDAQ's up. A lot of it has to do with NVIDIA, which is rebounding, continuing the rebound that we saw from yesterday. We promised you some talk about Whirlpool, and it's worth it. It's $5 billion company. Everybody knows it. A brand name, yeah.
Right. Shares of Whirlpool, they're up by about 10% right now in pre-market trade. Germany's Bosch is considering a takeover bid for the appliance maker, according to people familiar with the matter who spoke to Reuters. The sources say it's not certain that an offer will actually be made. As of yesterday's close, Whirlpool had a market value, as Joe had mentioned, of about $5 billion, 4.8. Actually, the gain right now is 11.5%, so having an impact on the stock here.
The Southwest Airlines shares are falling after the company issued revised guidance that now says revenue per available seat mile, that's a key metric for airlines, is expected to fall between 4 and 4.5%. The company had previously predicted a drop of 1.5 to 3.5%.
Meantime, NVIDIA is recovering after it sold off over $500 billion in market value earlier this week. Joining us now, Tony Wang, T. Rowe Price portfolio manager. Tony, great to have you with us.
Great, thanks for having me.
It's unclear what the ROI on an AI investment is, but it is clear that companies are willing to spend on the hardware, at least at this point. How do you think about just the rush to spend and the possibility of pull forward of demand for NVIDIA?
Yeah, it's a great question. I mean, I think that in general, the companies that are spending see a lot of ROI here, and there's a reason why they are deploying so much capital in a pretty austere environment. And so I think that, there are a lot of companies that are experimenting and prototyping, but generally how it works is that you are trying to experiment with a small number of GPUs before you really deploy into inferencing and really spend a lot of money. And so I do think that we are seeing a lot of use cases with drug discovery, with autonomous driving, with like optimization of logistics, as well as if you look at ChatGPT, it's like really ubiquitous in terms of like so many use cases that it could be deployed on. So I do think that we are starting to see the ROI. Obviously, we need to see more ROI given the amount of capital that's being spent, but I'm optimistic for the long term here.
When do you start thinking about the AI halo and investing in the companies that stand to see the best ROI or the increasing ROI based on this spend?
Yeah, I think that, I look for, in many ways, like, what are we seeing tangible results, right? So you're seeing that in many ways, like Meta, for example, they're finding a lot of better ways to produce better ROI for advertising, for example. And so that's one area where you see the numbers going up. It's earnings based and it's not multiples. And so I think you're seeing areas where there is tangible improvement. And, I think that what I look for is like, where are there going to be long-term earnings revisions? And so it's not just multiple and valuation that's driving these stocks.
In the shorter term, are we just destined to see software, for instance, come under pressure as companies, parse out their CapEx and spend it on AI and cut back in other areas?
Yeah, I mean, I think that, usually what happens is that the secular narrative gets a little bit overblown. I think there's definitely a lot of cyclical pressures. But in general, I think that software has had such a really great run, and during times where budgets are expanding, I think software can do well. In times when things are tightening, I think it's more challenging. And so I think largely we do see cyclical pressures, but over the long term, I think that there are areas where there's questions where generative AI can change the software model to go from perhaps seat-based to consumption. And so it'll be really interesting to see how these companies make that transition, as well as looking at new entrants that perhaps offer a more generative AI first model. And so definitely an exciting space where there's going to be a lot of change. And so for active management, we're looking forward to that.
Tony, you're the PM of the Science and Technology Equity Strategy. And so I'm wondering, at this point, I would imagine that the portfolio that you manage is a little bit more tilted towards technology because that's where the returns are. Biotech and science has not been as, great of a winner. When do you make that shift? Because we are seeing some green shoots come up in biotech. We're seeing some big moves on some drug discovery headlines. And of course, you've got Lilly and Novo being just juggernauts.
Yeah, absolutely. So we're definitely more focused on the tech part, but we do also own some healthcare stocks like Eli Lilly. And so, like you said, I mean, that's a really great story with GLP-1s. And so, I think that my focus primarily is tech, and that's where we're seeing, good opportunities in this stage of the cycle and the innovation that we're seeing around in AI. I think that we're seeing a very, quite impressive list of companies that we can invest in there.
Yeah, and then of course yesterday you had the headline that Lilly's going to use AI to help find treatment for antimicrobial bacteria or bacteria that are resistant to antibiotics. So you got the convergence of the two biggest stories, right, going on in the market.
Yeah, I think that there's tech and science and science and
weight
tech.
loss. If it was the two biggest stories, it'd be AI to
right, Eli
give
Lilly
you,
and
Eli Lilly, not for the
organisms and-
antimicrobial,
Oh,
but for the weight loss. If we can get AI and one of those weight loss drugs together, Tony, I mean, it's probably worth $6 trillion.
Yeah, I think that's a pretty interesting combination, and in our portfolio we have both. So yeah, we like both these.
What's the perfect dose for me? How do we get it in? Maybe AI can get a pill, so I don't have to stick needles. I mean,
they're already working on the pill, Joe.
already sticking needles in,
working on the pill.
sticking needles in my forehead is bad enough.
Tony, thank you.
I don't do that. I don't do that. I have never done it.
And you don't dye your hair either.
I don't dye my
Yes,
hair.
I know.
You saw.
I know. It's
Thank
a
you.
witness.
Thank you. I don't. There's no variation. It is amazing. I don't have glasses either. Coming up, we're going to talk about the Veep stakes for former President Trump, and an NBC News report says he could announce his running mate as soon as this week. Before the convention, we're going to talk about the potential picks next. 7 a.m., House Speaker Mike Johnson. He might have some thoughts. He's going to join us live from Washington. Squawk Box is coming right back. Former President Donald Trump could make his vice presidential pick as soon as this week. And that's according to a report from NBC News. Let's bring in Eamon Javers, which would, I thought it was going to be at the convention. So this is new, Eamon. This new info, is it not?
Yeah, I mean, well, as soon as this week, does that mean today? Does that mean this weekend? Does that mean before the debate, after the debate? And there's a lot we don't know here. Joe, I got a text last night from Jason Miller, one of the spokespeople for the Trump campaign. He says to me, I think he's probably going to announce his pick on, and that's the end of the text, right? So the Trump campaign is not above having a little fun with reporters here on this.
Yeah.
They know that we're all interested in this story, and this is the one thing that you can control the storyline on entirely when you're a presidential campaign. This is much better for the campaign to have reporters talking about on national television than a lot of the courtroom coverage that we've seen of Trump over the past several weeks. So they might want to drag this out. I don't know exactly when they're going to make this pick, but you know, Jason Miller having a little fun with me last night over text indicates that they realize that you know, this is a good topic for them to have people talking about on television.
International television, my friend. International, don't forget.
International, yes.
Wall Street Journal might not be the first place Trump goes for advice, given how scathing they've been just about you know, his whole candidacy for 2024. They like Nikki first, and they said that that's who he should have been, and that he's still sore. She stayed in the race too long, but other presidents have looked past that. Second, they go for Virginia, Glenn Youngkin, because his popularity, experience, he would signal to college-educated Republicans that Trump wants to expand. And then they go to the next three and think that between Burgum, Rubio, and J.D. Vance, Burgum is the best with his private sector experience. Yeah. Do you think most people think it's going to be Burgum at this point? Have you heard that?
Yeah, you know, look, there's a lot of rumors swirling around. It's really hard to say. I don't think anybody outside of Donald Trump and a very, very close circle of insiders know who he's picked. He says he has picked somebody. Clearly that person doesn't know it yet because we haven't seen any leaks coming from any of these camps. Look, the traditional thing to do when you're picking a vice president, Joe, as you know, is to build your coalition, right? So you look at the last couple of vice presidential picks, you know, Joe Biden picking Kamala Harris. He wanted to shore up African-American voters and women. Kamala Harris, a natural fit for that. You look at Donald Trump's previous vice presidential pick, looking at Mike Pence, that was about shoring up evangelicals and merging Pence's evangelical coalition with Trump's more populist coalition and building sort of an unstoppable force into the election cycle. That's maybe not on Trump's mind this time around. I don't think Donald Trump has coalition building in mind here. If he did have that in mind, maybe the way to go would be Marco Rubio, who is a bridge to sort of establishment Republicans who might bring in some of those Nikki Haley voters from the primary.
He can't get out.
I can't see that either, right? Just because of the personal history.
Can't
yes,
get out
the personal history there is
from
too
little
tough.
Marco. We're gonna have.
I think if you look at the vice presidential experience from Donald Trump and you look at his relationship with Mike Pence was largely subservient to Trump on the national stage in public, so much so that, you know, talk shows mocked him for it, you know, in his demeanor around Trump in public. But at the end, on January 6th, Mike Pence had an independent decision to make, and he made it against Trump's interest. I think Trump doesn't like that. I think Trump wants somebody who would not do that. So you're looking for then somebody who does not have a national power base of their own.
If history is any indication, you're right. We have the speaker coming on at 7. We'll talk about all that. I love Glenn Youngkin. You know what the drawback is, and I'm not being entirely facetious or satirical here. He's too tall. He's about 6'4", and I just can't see Trump standing next to someone. I can't see someone standing next to Trump that's 6'4", where Trump wouldn't be.
Not taller, and not somebody with a big political base of their own.
Exactly, but what good is someone that's, you know, sort of a MAGA guy when the MAGA people, the 30%, whatever it is, they'd go out in a hurricane to vote for him. That's not.
He's got them locked up.
Yeah,
so
exactly.
Traditionally, you'd say he needs to reach out to some other constituency to bring people into the tent, right?
Right.
I'm not sure that's on Trump's mind. I think January
And the
6th
other
and
thing,
Mike Pence are on Trump's mind.
If Jake Tapper says who won the 2020 election, people are telling Trump right now, please do not go into grievance politics for an hour and a half on, can he
Tomorrow night.
resist? Can he resist saying, I'm not going to talk about that, I want to talk about Biden's policies? Can he resist? I don't think he can.
People have predicted a disciplined Donald Trump before.
I know, exactly.
It hasn't always happened.
But that, if you get him going on the 2020 election, thank you, Amy Jevers. See you later.
Coming up, the IRS is apologizing to billionaire Ken Griffin. We'll tell you why next.
You got this.
The IRS has apologized to billionaire investor Ken Griffin for the release of his tax returns. The agency said it is addressing the data security lapses exposed by the leak. The apology followed Griffin's withdrawal this week of a lawsuit against the government. His tax returns, along with those of Jeff Bezos and Elon Musk, were disclosed by an IRS contractor to news organization ProPublica and released in news articles beginning in June of 2021. The contractor who leaked the tax returns, Charles Littlejohn, is serving a 5-year prison term after pleading guilty to related charges, although he is appealing the length of his sentence.
Coming up, FedEx shares are sharply higher after the company reported progress in its cost-cutting efforts. We're going to talk to an analyst straight ahead. Then, House Speaker Mike Johnson is going to join us live from Washington, talk about the debate tomorrow, new primary results that we saw from yesterday. A lot to talk about, taxes, everything. Squawk Box will be right back.
FedEx stock soared after reported earnings and revenue that beat estimates and said it's exploring options for its freight unit. Joining us now, Don Broughton, Broughton Capital Managing Partner. Don, great to have you with us.
Great to be here.
Stock's up 14.5% or so this morning. Don, how much of that is news of the potential spin-off of the freight business?
Zero.
Zero, okay.
What this is about is the fact that we've had a lugubrious waiting for Godot exercise where they were trying to get the express margins where they needed to be. And that was virtually impossible when, if you look at worldwide air freight numbers, they literally peaked in October of 21, depending on which market, somewhere around that area, and then went on an exercise of almost 2 years where they declined by almost 30% in most markets, some over 30%. And no matter how well you run that business, when you lose 30% of the overall general demand, you are going to struggle with margins. I mean, literally, Express operating profit went from a peak of over 3.3 billion annual run rate to under $1 billion. And as we see, demand for chips continue to go up, and see worldwide air freight numbers start to really recover, especially in the Asia Pacific area, then Express's margins are going to do this, and the wait's over.
You mentioned, it's been a long way. It's 6 straight quarters, I think, of revenue declines for FedEx. So it's been sort of a painful road for FedEx investors. You mentioned chips.
Lugubrious.
That's an interesting part of lugubrious, good word. Interesting part of the story. When we hear about all the demand for AI chips and chips for all parts of the supply chain, autos, et cetera, you have to think about FedEx as part of the equation.
Absolutely. I'm glad you said that, because, when we look at it and go, look, I don't know anything about which of the chip suppliers you should be buying, but I do know who moves not only the chips themselves, but moves all of the devices, the gadgets that have chips in them, and that's FedEx. And if I can pay 12 times forward earnings for a company that moves all the chips, or whatever the valuation is on NVIDIA and some of these other companies, like I said, it's what I know, but I'm gonna pick that kind of valuation, because as earnings come back here, and they will come back in a firefight. So
right. You obviously like FedEx and the FedEx story. You're actually short UPS personally, as well as in your firm's portfolio. And so why are you short on UPS?
They have adopted a cost structure via their latest union contract that puts them in a permanent disadvantage. And not only do they have to pay higher wages, but they also, in that contract, if you read it closely, they can't really adopt technology initiatives without the union's approval. And that puts them in it permanently hamstrings them against a competitor who doesn't have those issues. They've spent billions upon billions on better and better technology over the years. I've often said that actually, if you look at FedEx, it's actually a technology company disguised as a transportation company. It's a technology company in drag.
Don, thanks. Great to speak with you. Don Broughton, Broughton Capital.
Take care. Thank you.
Yeah, it's just after 7 a.m. on the East Coast. You're watching Squawk Box on CNBC. I'm Joe Kernan, along with Melissa Lee. Becky's off today. Andrew's going to join us a little later in the show from the Aspen Ideas Conference Festival. Among today's top stories, Germany's Bosch is considering making a bid for U.S. appliance maker Whirlpool. That's according to a Reuters report. And the shares of Whirlpool are up almost 12.5%. Tesla says it's recalling most Cybertrucks in the U.S. because of issues with the vehicle's windshield wipers and exterior trim. The recall affects more than 11,000 Cybertrucks, though Tesla hasn't said specifically how many it has delivered to customers so far. Have you ridden in one yet, Emily?
No.
I have.
I've seen a few parked on the streets of New York City.
Can't believe the acceleration on that. I liked it. I liked the interior. They talked about the windshield wiper. A friend has one. The windshield wiper is the biggest thing I've ever seen because the windshield is so big, and there's only one windshield wiper, and it goes
Really?
it goes all the way. It's like whoa! And when it comes out, it kind of is shocking, but it's really cool. I mean, there's nothing in that car except like a computer screen. You pop the front, pop the back. The way you open the doors, it's pretty amazing. It's pretty cool. And the FAA, but it's being recalled, and the FAA is adopting what's known as airworthiness directive, one of those, for 13 Boeing 757-200 planes. These are legally enforceable regulations, to help correct something that's unsafe. In this case, the FAA is responding to reports of a cracking in a structure around a panel connected with the plane's lavatories. Joining us now, our newsmaker of the morning. We're pleased to welcome House Speaker Mike Johnson. Once again, Mr. Speaker, it's good to have you on.
Thanks so much, Joe. Great to be with you again.
We're looking at some of your notes. Serious mismatch is how you characterize the debate between former President Trump and President Biden. And you say if you've watched President Biden, he hasn't done well in some public appearances and speeches in recent months. Everybody who thinks he's going to do well and worries about him being underestimated talk about the State of the Union. You don't think that that's likely to be the take after we watch?
You know what? I expect him to be high energy. I really do, because I sat right behind him at the State of the Union, and clearly that was not his regular, daily, normal form now. I don't know if he took energy drinks or what, but he was much more on game. The difference is, and I think the difference maker in this debate will be that, of course, he'll have no teleprompter this time. So standing there for 90 minutes and speaking extemporaneously, I think is not going to be a good look for him. And I think the contrast between Donald Trump and President Joe Biden is going to be very stark.
The format, people have pointed out, is not necessarily doesn't play into former President Trump's strengths. No audience. They turn the mic off between, answers, things like that. When he agreed to the debate, there's some reports around now, Mr. Speaker, that he thought that the Biden camp was kind of setting him up to say no, and then everyone would have said no. In other words, it's going to be these two CNN anchors, maybe not, that might not be ideal, according to some people, not me, far be it from me to judge, the no audience, et cetera, but Trump said yes, to kind of throw him for a loop, and that he'll go anywhere, any place. Do you think that that's an accurate account of what happened?
I don't think it is. I spent time with President Trump last week, and I can tell you what, he's excited about this debate. He's ready to get on that stage, and I think the reason he accepted the term so quickly is because he had just said a couple of days before, anytime, anywhere, Joe, So to his credit, look, you can tie him up, you can put one arm behind his back. I mean, it's not going to make a difference. President Trump, I think, is going to lay out a very clear vision for the country, a very positive one, and I think that's going to be a stark contrast with the Biden record. The interesting thing about both of these men is that they both have been president. So everybody can put the rhetoric aside, the talking points aside. They can evaluate how their life is under Joe Biden and how it was under Donald Trump. And I think everybody in every demographic in every state in the country, if they look at it objectively, I think they're going to say they were doing much, much better under President Trump. That's why I think he's going to win this election, and we're going to grow the House majority and win the Senate as well.
Former President Trump the other night at one of his rallies actually posed the question who he should be to the people that he was talking to at that point. Obviously, want the sharp-edged Donald Trump. The Wall Street Journal, and as I said earlier, I'm not sure the former President Trump would take any advice from the Wall Street Journal. They haven't been, necessarily his biggest backers in this go-around. But they do point out if he engages in grievance politics about 2020. In other words, if Jake Tapper starts out with, do you accept the results of 2020? You talked to the former President Trump. Can he say, I'm not going to dwell on that, and I want to talk about how my policies are going to help Americans versus President Biden's? Can he avoid that? Are you sure? What do you think?
Look, I hope he does. We don't need to relitigate the past. We need to talk about what he's going to do for the future. We have to fix every single metric of public policy. And I can tell you, he keeps talking about how his success will be his revenge, and we love that, because I think that's exactly what the American people need. They need his success. Look, I've been traveling nonstop, Joe. I've been all over the country, over 130 cities, campaign events over the last 6 months in over 30 states now. I mean, we've been everywhere. Blue states, swing districts, red states, all across the country. Doesn't matter where we are, the same sentiment is expressed. People are fed up. They're fed up with the cost of living. They cannot stay ahead. They can't keep afloat because no matter how hard they work, the inflation rate and everything else is just crushing hardworking families. Then you got the rising crime rates. You got the weakness on the world stage. all these things that make us unsettled, and of course the open border. And everybody feels that acutely, and they're ready for a change. And I think because of all those factors and many more, you're going to see a demographic shift in this election cycle, and I think President Trump is going to win this election. And like I said, I think Republicans will have control of both chambers of Congress, and we're looking forward to that because we have answers to all these great challenges facing the country.
We're going to hear about January 6th. I don't know how that comes up, whether it's President Biden or the moderators. Obviously, we're going to hear about 34 felony counts, and no one's above the law, and a jury of your peers. You're going to hear all those things. But at the same time, I think the moderators have gotten so much flack about how biased they're going to be. They're going to try and throw some things at Joe Biden, I think. And Jake Tapper, to his credit, I saw him the other day saying in that last debate, Joe Biden looked right into the camera and said, "This is Russian." People, 51, former intelligence officials call this Russian disinformation. It's a lie. None of it's true. And Jake Tapper, to his credit, said that was a lie, what President Biden said in that last debate. You think we'll hear about that?
Well, I hope so. I've known Jake for, I don't know, quarter century. We go way back. He used to cover the cases I was litigating when I was a religious liberty litigator, and we've been debating for a long time, and I think he's acutely aware of the fact that he's got all these statements on video, on record, where he's been so critical of President Trump. And if they want to salvage any of their reputations and give any appearance of being unbiased, they're going to have to give some tough questions to both sides, and so I certainly hope they will. I think the American people deserve that. I think they deserve a fair debate, and even though the rules are stacked against President Trump, I think he's going to be on his A game, and I do not expect that Joe Biden will be.
So not just 16 former Nobel laureates, and some of them, I mean, Paul Krugman's a Nobel laureate, so, but 16 Nobel laureates said that Trump's plan would rekindle inflation in a big way. And you've got to admit, some of the stuff that he's talking about, 10% tariffs, the tax cuts are not going to expire. He's talking about going lower on the corporate tax rate. All these things are not going to be deficit friendly, and people point out that, in President Trump's 4 years, the deficit probably grew more. There was a pandemic, obviously, so that they don't mention that. That came in, a lot of spending on that. But this does not look like a Reagan Republicans or a conservative Republicans blueprint for running the economy. What we're talking about, does it?
Well, the two things I think are really important. First of all, I'm not sure the blueprint is finalized. I think he's talking about a number of ideas and sort of field testing some of it. He did that with the House Republicans just 2 weeks ago. He was here, had breakfast with all the House Republicans and lunch with the Senate Republicans. It was like a pep rally. I mean, everybody's unified and in a great mood. And he threw out a number of ideas just for thought. He said some of them with a smile. He wanted to gauge the interest and get everybody thinking and talking. That's part of the idea here, is that we do the round robins on all this and figure out what that final blueprint actually looks like. But the second thing that's really important is to remember, again, both these men have been president. Think how your life was after the first 2 years of the Trump administration, pre-COVID, right? We had the greatest economy in the history of the world. I mean, every demographic was doing better. Everyone, all boats were rising because we instituted and engaged the principles that we've all always believed in. We did cut taxes pretty dramatically, Tax Cuts and Jobs Act, but the big thing that I think spurred on the economic growth was the regulatory reform. And we were really serious about that, and I think very effective. And so those models work. We've already proven it, and I think as a general notion, that's what's going to guide the agenda. I think President Trump is ready to get the economy roaring again. And if we do those things well, I think that'll happen. I think you'll see it will spur on real economic growth.
But Mr. Speaker, do you think that you could really enact that same playbook in the post-COVID world? I mean, right now we have an inflation problem, and the measures that have been floated by former President Trump, even if it's with a smirk, even if it's with a smile, they're considered inflationary. We know that it would be bad for the deficit. So how does he answer those tough questions? I mean, this is where our country is right now. It's not pre-COVID, it's post-COVID, and these are the problems at hand.
It's certainly true. It's post-COVID, but the guiding principles are the same. And I think that maybe the calculations are a little different, but I think the principles are going to guide us. And what that means is generally to spur economic growth You've got to allow job creators and innovators and risk takers, the people, small businesses and the large companies as well, to be able to grow and expand. And how you do that is you get the regulatory burden off their backs. I mean, Joe Biden's administration has weaponized the agencies, truly. I mean, almost every industry. I mentioned I'm traveling around the country. I'm talking to not just the Fortune 500 executives, but small business owners at all levels of the economy. And I've sat down across the table with people who are fourth generation family businesses that are almost closing them now. And they say it with tears in their eyes. They cannot survive the regulatory onslaught. So if you get government out of the way and you allow this to flourish, there may be a little bit of pain in the front end, but I think you can spur on economic growth, and that's what's going to get us out of this. But I'm telling you, look, in the House and the Senate, the Republicans would be serious about not just cutting taxes, but cutting spending. That's the really important thing here. Spending has exploded in recent years, and certainly under President Biden, it's serious.
So, sorry to stop you. We had former President Trump on a couple months ago, and I asked him about Social Security and entitlements and Medicare and everything else. And he said, well, there's a lot that can be done. And then he went on to talk about not cutting any of these things or reforming any of them, but trying to get rid of some of the waste, et cetera, et cetera. The Biden camp immediately cut off the end of that statement, what he said, and put out President Trump is going to cut entitlements. And they're still saying it. They're still, nothing that you hear from either camp necessarily has to be true. You don't need AI to hear fake news because they both engage in it. But the fact remains, you won't, today, right now, you will not concede that entitlements need to be reformed. The Democrats, they use that as their biggest cudgel to try to say that Trump should not be president because he's going to cut Social Security. We can't cut enough spending to take care of this deficit if we don't do something, or this overall debt, if we don't do something with entitlements.
Mandatory spending is over 72% of the federal budget. That's certainly true. And I'm telling you, there's not a single member of Congress, Republican or Democrat, who doesn't at least privately acknowledge that reforms are necessary. But you can do modest reforms to some of these programs and change the trajectory dramatically. You know how the power of money and time works.
No, they're going to use your. I'm telling you, if you don't, it's the third rail. It's even worse. It's the third, fourth, fifth, and sixth rail now.
I know it is, but I'm telling you that there are Republicans and Democrats in Congress who talk about this every day about ideas. That's what we're supposed to do as lawmakers. Ideas to fix them. We want to solve and shore up Medicare and Social Security for recipients and keep those programs because they're an essential part of who we are as a country now. And it takes responsible measures on both sides. There's no ideas on the table. There's no suggestions here. No one's talking about, certainly President Trump, Republicans are not talking about cutting those programs at all. But everybody has to take a sober look at it. And I think when he acknowledges that, President Biden should do the same. Everybody of good faith has to say that we want to save those programs. And Congress and the President in the years ahead are going to have a lot of work to do to make sure that happens.
We're almost done. I know apparently you've got places to go, people to see, things to do, but do you have a favorite VP pick? We were just talking to Eamon Javers about the latest scuttlebutt. I think I might wait till November if I were the president. I mean, kind of, when we talk about it, that's all we talk about. And, I think you should probably delay it until the day of voting, maybe. Do you have a pick, a preference?
I like all the names. All these people are my friends, and we have listen. It's not a political answer. I mean, it's a great bench. We have a deep bench. We're blessed with that in our party. Unlike the Democrats, they can't seem to muster any candidates better than Biden and Harris. But we've got a long list of folks who would do a great job, and I think they all bring different things to the table. So Donald Trump is the only person who makes that decision, and I talk to him about all these things frequently. But we'll see. We'll see what he ultimately decides.
Well, nothing in this world is surprising anymore. And I mean, if it was it won't be, I'm sure. But if it was a total disaster, I think they could come up with someone, the Democrats, if they had to replace it. That's not. You think that's a 0% chance that could happen?
I think it's near zero. I think we're looking at the Biden-Harris ticket. I can tell you most people in Capitol Hill expect that.
Okay. Mr. Speaker, thanks, 717. Thanks for all the time this morning. Appreciate it.
Thank you. Great talking to you as always.
Okay, good talking to you.
Coming up, the price of gas in the presidential election. S&P Global Vice Chair Dan Yergin says it's a key topic in the presidential debate. He'll join us after the break. And as we head to break, check out dollar yen touching 160. Wow, 160.29, and we had hit the lowest level, I should say the weakest level for the yen since 1986 against the dollar. Of course, there will be renewed calls, maybe speculation about BOJ intervention in the currency markets. We'll see if that plays out. Spot Flash will be right back.
.com/men.
Let's get to Dom Chu with a look at this morning's pre-market movers. Morning, Dom.
Good morning, Melissa. Good morning, Joe. Let's kick things off for this Wednesday morning movers with a check on Southwest Airlines. Those shares are down big, probably just about 4.5% or so. Over 50,000 shares of trading volume. This is America's second biggest passenger airline by market value. It just updated its financial guidance for the quarter. It expects a bigger drop in a key operating and efficiency metric than previously forecast. That revenue per available seat mile, or RASM, is now expected to fall by 4 to 4.5% compared to a previous guide of being down 1.5 to 3.5%. But Southwest still expects to set a quarterly record for operating revenues overall during the quarter. Nonetheless, shares down 4.5%. Also new this morning, shares of General Mills down just roughly 4.5% or so. Over 20,000 shares of volume. This is the food processor behind big brands like Cheerio cereal, Betty Crocker baking mixes, Progresso soups, and of course Blue Buffalo pet products. It reported mixed quarterly results. Profits per share topped estimates. Revenues fell shy of the mark. Like other consumer products companies, General Mills saw headwinds as inflation-wary consumers traded away from key premium brands to lower-cost alternatives. The company also gave full-year guidance for 2025 organic net sales growth that fell below estimates, but it did announce a 2% increase to its dividend payment. So on balance, those shares down 4.5%. And we'll end with a look at a German and U.S. company tie-up. We have a done deal with regard to a big investment in the electrical vehicle industry, and that's U.S. EV maker Rivian, soaring by just around 40% right now on over 5 million shares of volume. Late yesterday, we got an announcement that both Rivian and German auto giant Volkswagen are teaming up. VW will invest up to $5 billion in Rivian with an initial $1 billion investment and up to $4 billion more by the year 2026. That money is going to be used to form a joint venture between the two focused on electrical architecture and software technology. So Rivian shares over the last year up about 24%, but still down so far this year on a big basis. Melissa, I'll send things back over to you.
All right, Dom, thanks. Dom Chu.
All right, still to come, why prices at the pump will be a major topic in tomorrow night's presidential debate. S&P Global's Dan Yergin is going to join us. Plus, a year after record high prices for vehicles, the industry is now seeing actual deflation that has some asking how much lower prices will go. Phil LeBeau will join us with that story. Squawk Box will be right back.
Time now for today's AFLAC trivia question. Wisconsin law prohibits the sale of this product in public eating places unless a customer requests it. What is it? The answer when Squawk Box returns. NBC. And now the answer to today's AFLAC trivia question. Wisconsin law prohibits the sale of this product in public eating places unless a customer requests it. What is it? The answer, margarine. According to the law, violators can be fined up to $500, imprisoned for up to 3 months, or both.
All Our next guest wrote an op-ed for the Financial Times highlighting the importance of gas prices in the 2024 election and at the first presidential debate tomorrow. Dan Yergin is here. He's vice chairman at S&P Global and the author of The New Map, Energy, Climate, and the Clash of Nations. Dan, great to see you in person.
Thank you.
So 345 is the most recent national average.
It's just jumped up a little more.
Jumped up a little more. It
349.
can't go much higher, though. So what can Biden do about that?
Well, there are very limited things you can do.
Right.
I mean, number one is, of course, which they've done is use this Strategic Petroleum Reserve, which they first used before the war began in Ukraine.
We got any left?
We're down about half. They put a little bit more back in, but that's probably the biggest tool. The second is go to some of the Middle East producers and say, can you put some more oil in the market? And then there are a few other things, but those are the kind of limits that you have. And the thing that really hangs over things now is not only the summer driving season, but of course is what's happening in the Middle East and whether there's going to be a war between Israel and Hezbollah.
Yeah, and that's what I wanted to get to next in terms of policy. It seems like foreign policy and energy policy are just at odds with each other right now. You want to be tough on some areas in the Middle East. You want to be tough on Russia. You want to be tough on Iran. But you don't want to be too tough because that will impact the price of oil.
Yeah, you don't want to disrupt supplies, and that's been the challenge right from the beginning of the invasion of Ukraine, because on the one hand, they want to reduce Russian revenue, but by the way, keep the oil in the market so we don't have a crisis.
You can't have it both ways, though.
Yeah, it's a really tough balancing act, and you get pretty unsteady.
So what do you think, I mean, you're not an oil forecaster per se, but this dynamic right now in terms of supply and demand in the world, are we destined for higher prices at this point?
Well, I think that the risk is that, yes, I mean, we have summer driving season, and that's always when prices go up. But the other thing is that what's happened in the Middle East, remember, when it looked like Iran and Israel were going to go to war in April, the price was over $90 a barrel. Then it got down, headed towards 70. Now it's in the mid-80s, and that's what's hanging over everything. And by the way, you also have the disruptions in the Red Sea, which means that half the tanker traffic that used to go that way has to go the long way around.
The whole framing of the op-ed and the segment is that the debates are tomorrow, and so this is going to be an issue that comes up because Americans are feeling the pain. But at the same time, prices in other areas in their lives are coming down. Does that make the issue of $3.45 or $3.45 plus a gallon less?
Well, I think at $3.45, it's an issue there. It's questions if it starts to go up to $3.75, and particularly if it heads to $4, that's when the alarms go off. But still, prices are up there for everything else. You know, the inflation rate's down, but eggs still cost 20% more, milk costs 20% more,
Right.
and that's what you hear in why the economy is such a big issue.
You see rent and I don't even know if it's true. What I said, they're like double the rent. And then houses, if it's an 8%, 7.5% mortgage, I mean, you can't blame that directly on, unless you realize the Fed had to go up 500 basis points to try to get inflation under control for whatever reason. Therefore, mortgage rates go up, so now people can't afford a house.
Well,
So
I think that's why you see prices in the economy are the number one issue that are out there for this campaign.
On the debate stage, what else will you be listening for in terms of energy policy?
Well, what I think is really interesting right now is in terms of electricity and the recognition that this growth of data centers, the latest numbers are data centers are about a little over 4% of our electricity. Within 5 years, 10% of our electricity, plus the electric cars and everything else. So how is our electricity system going to catch up and meet this demand? An industry that was accustomed to almost no growth in demand, now saying, oh my gosh, it's growing.
So, I mean, do you think Biden will step back from this transition to green energy? Because we just can't necessarily afford to do that. It's much more expensive.
Yeah, well, I think that this administration is very committed to it. Push. You know, obviously, a Trump administration would take a different course on it, but I think this one, they're locked into it. But I think they are looking now and recognizing that there are real constraints about getting the additional electric power and getting things permitted, which is very hard to do in this country.
You said getting things permitted?
Permitted, yeah, to get,
permitted, yes,
permitted,
yes.
Yeah.
What do you think happens, though, with what we're seeing forecast in terms of demand for electricity and our ability to supply it? Are we on the path to meeting that demand?
No, I think it's been a huge wake-up call, and it's going to be a race to get it done. And I could see, if you talk to electric power companies, they were used to growth of maybe 0.5%. Now they're saying 2%, something like that. So, and then there's a whole supply chains that have to be there. So we're just at the beginning of realizing that we talk about security in terms of oil, but we're going to need a lot of investment in electricity in order to meet the needs of a country that's going towards AI.
So there's a whole other sort of dynamic in terms of the impact on other commodities. I mean, we're talking about the demand for copper. We've seen copper rise too on this notion that you need copper to build out the grid in order to support the data.
Yeah, copper is a metal of electrification,
right?
And you don't do any of these things without it. And of course, then that gets us to this other world in which it's our dependence not only on oil, but which we're not really dependent anymore for imports, but we are highly dependent on imports of minerals. And that, by the way, gets you more tangled with China because China tends to dominate the supply chains for minerals.
Dan, great to speak with you. Thank you.
Thank you.
Dan Yergin.
Coming up a year after near record high prices, the auto industry is seeing deflation, and that has some asking how much lower will prices go. Phil LeBeau joins us with that story next, and then later, Evercore ISI's Sarah Bianchi will join us to talk DC policy and Wall Street ahead of tomorrow's debate. Squawk Box coming right back.
Dave.
Welcome back to Squawk Box. Now the Dow's down almost 100 points with the NASDAQ diverging and trading higher. Bitcoin and cryptocurrencies rebounded a little bit from a recent round of selling, week or two really, but did rebound, still above 61,000 after being down almost a percentage point today.
A year after car prices hit record highs, the industry is facing deflation. So how low will car prices go? Phil LeBeau joins us now with more. Hey, Phil.
Hey, Melissa, I get this question from a number of people because we've seen a number of these reports, 8 straight months with new vehicle prices, transaction prices moving lower. And it does raise this question, is this big deflation we're seeing here? Because we certainly saw big inflation as prices were increasing. Here's the latest from Cox Automotive. And in May, you see the average transaction price, $48,389. Still, it's high relative to where it was a few years ago, but it's down 1% compared to May of 2023. And again, 8 straight months where we have seen a year-over-year decline in prices. That's rare. You don't see that very often within new vehicle pricing. A couple of things are happening here. First of all, you've got new vehicle inventories climbing. Why? Automakers are building more vehicles, and as they are building more vehicles, the dealers have more inventory, and that's forcing the dealers, as they look at those inventories, to say, you know what, we've got to raise the incentives. And incentives are up substantially relative to the transaction price. They're up substantially in the last year. Now, on average, about $3,200. As you take a look at overall sales for the year, Cox is estimating that we'll come in somewhere around 15.7 million vehicles sold this year. That's the expectation. That would be a slight increase from last year when it was 15.5 million. Quickly take a look at Tesla, Rivian, GM, and Ford. And why are we showing you these guys? Because the EV market is the one area where you really see deflation kicking in, particularly on the used EV side. Those first generation models that you may find for sale on a pre-owned lot, those prices have come down substantially. And this is where we're going to see the automakers, those first EVs, particularly for Rivian, GM, and Ford, they were priced pretty darn high. And they're still high relative to an internal combustion engine vehicle. That will start to change here over the next couple of years.
Phil, what part of the equation, if any, is the cost of financing? I mean, obviously it remains high. You mentioned incentives offered by the automakers. Is that to offset the higher borrowing costs? Are they doing anything on the interest rate front?
That's mainly to try to convince the buyer to get into a new vehicle. Yeah, Melissa, that is a huge issue in terms of why you see some people still a little bit hesitant about buying a new vehicle. It's so expensive on the monthly payment side right now. It's well over $740. And you look at that, a lot of that is because of those higher interest rates. So yes, the incentives are to help offset that to an extent.
All right, Phil, thanks. Phil LeBeau.
Okay, up next, we're going to talk taxes and what investors should expect to hear in tomorrow night's debate. And then the role of artificial intelligence in our nation's school system. Can faculty get a handle on advances that seem to be coming faster and faster? We're going to hear from the American Federation of Teachers President, Randy Weingarten. We'll be right back.
CNBC.
At the center of the presidential tax debate, the question of whether you can cut taxes and still raise revenue. Robert Frank joins us now with more. Hey.
Good morning, Joe. Good to see you. Well, Democrats say the 2017 tax cuts cost $1 trillion in lost revenue and are partly responsible for the soaring debt. Republicans say revenues hit an all-time high after those tax cuts, and the problem is Democratic spending. Tax collection data, however, shows that neither side is absolutely correct. In the year after the tax cuts, take a look at this chart. Revenue from individual and corporate taxes was flat. It then fell in 2020 during the pandemic, started rising in 2021 with all that fiscal and monetary stimulus. In 2022, revenue hit that all-time record with individual tax collections topping $2.7 trillion, corporate income taxes reaching $440 billion. The main reason, as all of our viewers know, the stock market. The market was up 27% in 2021. All those IPOs, the SPACs, record stock sales, creating record capital gains. Since then, revenue, take a look at this, is falling back down. Individual tax collections are now flat compared to 2018. That's when those tax cuts took effect, even though the GDP has grown by over $2 trillion. So the best measure, Joe, as you've mentioned, is tax revenue as a share of GDP. In 2017, it was 17%. Now it's 16%. So not a big change. Revenue did not collapse, in fact, as the Democrats claim, but it has declined relative to the growth of the economy. So if you look at the $8 trillion that's been added to the debt, maybe $1 trillion or so of that is due to the tax cuts. It's still mostly, as you pointed out, a spending issue, but it doesn't mean that this is increased revenue.
Right. I mean, philosophically, the supply-siders will just tell you that for innovation and entrepreneurship, and the most ineffective way to invest capital is through the government. And we kind of know that. So in a perfect world, you try to keep money in the private sector as much as possible. Now, we do have bills, we do have a safety net that we want. We want to make opportunity the same for everyone in this country to succeed. So there's ways that we try to do that. A couple of things, though. Corporate taxes did go up, even after a corporate tax cut, the total.
That's
eventually.
right. That's right. They did.
Okay. And saying that it's because of a rising stock market, what causes the type of economy that delivers a rising stock market? Perhaps one where money's left in the private sector so that companies can succeed.
What caused that market boom in 2021? You know what it was. It was $7 trillion in stimulus. It was zero interest rates.
But also,
and it was all that pandemic pent-up demand and supply chains coming back. That's what caused it. That was the Biden economy, Joe. That wasn't a pro-growth, low tax, lower tax economy.
You're talking overspending and fiscal stimulus as the Biden.
I'm going to say overspending. I'm saying we know where that money came from.
Where did the inflation come from? I mean, some came from the pandemic. People would argue a lot of it just came from this ridiculous amount of money printing. I will ask Sarah Bianchi the same thing, Evercore ISI's chief strategist of international political affairs and public policy. But going back, Sarah, I just, maybe not with what happened with all the stimulus, but take any period in history. If you get increased tax revenue from strong financial asset performance, that could result from pro-growth supply-side policies. People argue with me now that all Reagan did, people that are 30 years old, 35, all he did was blow out the deficit. And they weren't even there. They read a chapter about it. But supply side, in my mind, and growing the pie is the only way to increase prosperity. Is that wrong?
Well, look, I think we did see some resulting growth from the tax cuts in 2017, but I think certainly we also saw deficit implications. I think the Congressional Budget Office and others have found that, on balance, the growth that you get from tax cuts does not fully come up with the revenue that you need to offset the cut. But I think CBO has said it's a fifth or less, so there's certainly some, but I don't think there should be any expectation that, especially if we were to extend these cuts in 2025, that we should expect to have some really serious deficit implitions. From that, I think that's why you're seeing Republicans, even on the Hill, talking about.
Well, if you cut, if we're at 16% or 17 or wherever we are, and you're spending 24, there's going to be a deficit. And over the years, we didn't spend 24. We spent 19. Maybe we're down a little. From 1923 till for the next 100 years, we averaged 17 and a half in terms of revenue. We have to live at 17 and a half, maybe not 16, but we can't expect 24 for that part of the GDP to be used as taxes, and we can't continue to spend 24. So who in the right mind, Sarah, can argue that we're spending too much if we're at 24 in an economy that's growing?
Certainly, I hope next year that both spending and revenue spending cuts and revenue are on the table. We do need both sides. At the same time, we have an aging population. We have a really dangerous world with a lot of defense needs. So it's not totally unexpected that we should see slightly higher than average on the spending side. But you're right, we need to have conversations about spending reductions as well, and a serious conversation on the revenue side. I think it has to be both.
That's all we do. I hate when people, not you, Sarah, but when people say we need to have that conversation, which means we need to talk about it, but we really,
No one else wants
really
to.
not going to do anything about it.
Sarah, I'm curious. You started to talk about, we're hearing comments on the Hill from Republicans that we can't just extend all of these tax cuts and incur, whether it's $3 trillion or $4 trillion added to the deficit,
Right.
whatever the number. I think Joe would even agree that this would probably add to the deficit if we extend all these tax cuts. What are you hearing about possible pay-fors that are getting even some minor consensus among Republicans right now?
Well, certainly you saw the House Ways and Means chair on the Republican side talking about even a higher corporate rate. That is probably less likely to get traction on the Republican side. But there's a lot of Republican think tanks that are out there talking about, ways to constrain the extension of the tax cuts, different tweaks you can make, and then potentially putting some higher rates on the table, whether it's on the individual side, and again, a little bit we're seeing on the corporate. But it's it's a hard conversation. I think it's really not going to start in earnest until we get through the election. And to your point, I do hope that spending will be seriously on the table next year as well. I do think a balanced program needs both.
Okay, Sarah, appreciate it. Thank you. Good to have you on, Robert Frank.
Thank you.
We have this conversation. We need to have this conversation. It's a longer conversation. It's
the most important.
It is.
Because this has to happen. This has to happen next year, regardless of all these policy things that everyone talked about in the campaign. This actually has to happen.
We're at 107% now, debt to GDP. Never been there since World War II. There's no way it's not going to 130 in the next 15 years. No way.
Yeah. Right.
I don't care how many conversations we have about it.
Coming up, a new report from the American Federation of Teachers establishing guardrails for AI in the classroom. AFT President Randy Weingarten will join us. Squawk Box will be right back.
Insurance.
Good morning. I'm live in Aspen, Colorado this morning at the Aspen Ideas Festival, NBC Universal News Group, the media partner. Coming up, we're going to bring you some highlights from a conversation I had with the CEO of Microsoft AI, Mustafa Suleyman, and then later in the hour, we've got legendary producer Brian Grazer, who's going to talk to us about storytelling in this era of streaming. Sam Altman from OpenAI is here. We'll bring you parts of that conversation tomorrow. Brian Chesky from Airbnb guys also touching down in Aspen a little bit later today. Charlie Scharf from Wells Fargo, the CEO of Wells Fargo, in town as well, and a whole number of other conversations. Tomorrow, I'm going to be talking to Peter Thiel right ahead of the big debates, and also Larry Summers. So we'll have a lot more coming to you over the next basically 24 to 48 hours.
I want to be a fly on the wall of that Peter Thiel interview, on and off camera, I think, Andrew. That should be good. Do you think Brian's staying, Chesky I'm talking about, is staying in a I bet the Airbnbs are really nice in Aspen. I'll bet you can find one.
That is
Don't you think?
That's a great question. That's a great question. I will ask him where he's staying. In fact, maybe if it is an Airbnb, we should ask him if we can bring some. I'm looking at the crew. If we can bring some cameras and see if we can go and find his Airbnb.
I'll bet you there's some really nice Airbnbs
there you go.
In Aspen.
Good thinking.
I've stayed in one in Telluride, and it can be. It gets expensive, Andrew. You know that. It's like pulse pricing on when you're trying to go across town, right?
Yep.
Looking forward to Brian, the other Brian as well. Brian Grazer. Can't wait for that. Can I ask you a question? He's got an IFB. I asked.
100%. 100%.
I want to go to the movies. I don't want everything to be on Netflix like once a month. That's what people tell me. That could. I wonder what Brian thinks about that. He might have an answer for what we need to do.
I'm sure he will. I'm sure he will.
Alcohol.
I have alcohol in movie theaters.
Okay. I don't know. Hot. Coming up, the American, depends on the movie, the American Federation of Pink Floyd concert, outlining guardrails for the AI in the classroom. AFT President Randy Weingarten is going to join us next. We'll be right back. It is. It really is. Almost exactly 8 a.m. On the East Coast. And you're watching Squawk Box on CNBC. I'm Joe Kerner along with Melissa Lee. Becky is off today. And Andrew Roth Sorkin joins us from the Aspen Ideas Festival in District 3 out there. Andrew, I found out that this morning because there was an election where Boebert no longer was running in that district. She had to move, but I don't know, she's going to be back. She's going to make it. Aspen might not be exactly like most of the voters in District 3 out there. I got really Wanger out here laughing. But somehow it is there, and we'll be back to you in just a second. Let me talk about some top stories. FedEx shares surging on fourth quarter results. The company snapped a streak of 8 straight quarters of revenue misses and 6 straight quarters of year-over-year revenue contractions. It's a new one. Volkswagen planning to invest up to $5 billion in EV maker Rivian. A release said that will start with a $1 billion infusion in the form of a convertible. Oh no, it's not a convertible note. Rivian doesn't have a convertible, does it?
No.
That's what I was thinking. That was a good idea. Rivian CEO said the support will aid the company on its path to become cash flow positive. And Southwest shares are under pressure. The airline cut its current quarter guidance for revenue per available seat mile, which is an important metric for airlines. One of Andrew's favorite things to talk about, which are airlines. And you probably have a flight back too, Andrew. Obviously, you're not walking.
United. I think I'm on United. But what I really want to do is be on Delta because I want to go to that new Delta
lounge.
terminal at JFK, which
You see
everybody's on
those
social media
chairs?
yesterday posting every which way.
Yeah, the big vibrating chairs in there.
Vibrate too. Phil didn't
They had
mention
big
that.
vibrating
Massage chairs.
They have massage chairs,
It's a
I think.
sit-down restaurant.
Yeah.
Phil said the food is good.
Really?
Yeah, because I talked to him at Fast Money at 5 o'clock. He'd been there the whole day.
Is that when that show's
Everybody's
He
talking
said-
about it. It's
He said the food
unbelievable.
was good.
Yeah.
Anyway, Andrew, we'll see you in a little bit. Let's take a check on futures because we are looking at a higher open for both the S&P as well as the NASDAQ yesterday. They both snapped a 3-session losing streak, so today it looks like we're going to build on those gains with NVIDIA continuing its reversal. It was up to 7% yesterday. Pre-market, it's up once again. Take a look at Treasuries, too. We have some firming in the 10-year note, 4.288%. The 2-year now at 4.735%. Let's get to Mike Santoli, who's at the NYSE. Mike, looks like we're going to continue higher.
Yeah, it looks like very steady action. I think that's been the rule. We've been hovering when we're not at new highs, kind of hovering very nearby with a lot of rotation below the surface. But look at the S&P, how it's set up. This is now a 1 year. So you see that peak in late July before that fall correction. It doesn't really look so dramatic on this chart here based on the upside we've gotten. And it's also kind of kept to this really pretty good channel that we've been in for a little while here. We're kind of right in the middle of it. It's slowed down a little bit. Some of the action in the past week or so has resembled what we saw at the beginning of March. That was when, of course, we had NVIDIA have started its own correction. The momentum trade really faltered for a little while. The rest of the market tried to rotate around and hold the market up. We eventually did get that 5% pullback. That was when Treasury yields broke out to the upside. We were concerned about repricing a more hawkish Fed and maybe the even economy kind of overheating and then stumbling. All that didn't really come to pass immediately, and we did recover. But you're watching the internal dynamics. Here's the S&P relative to the equal-weighted version. This goes back to last Monday. So this is basically when NVIDIA has that big kind of pop and then drop, and it's started its correction. And what you see here this week is the equal-weighted S&P just basically came right in to rescue the overall index. It's an NVIDIA market on a given day, or it's an anti-NVIDIA market on a given day recently, and we've had one of each this week, netting out to almost no movement in the broader index. So we see if that kind of choreography can continue in such a seamless way for a while. Take a look here. I'm sure you guys have been talking about KKR buying into apartment real estate this morning. Here is the residential real estate ETF against the home builder ETF. And actually, the apartment-based residential real estate sector actually nosing ahead of home builders. You have more existing supply coming out. Obviously, rates are trouble for affordability on the new home side. And then you actually see some, excess supply of apartments and rental deflation maybe abating on a forward-looking basis. So kind of interesting dynamic. Got to watch that. And of course, it has implications for the inflation readings as well, Melissa.
I'm glad you showed that chart of the RSP, Mike, because there was such hope that the market was broadening, that overall the markets really didn't fall too much when Nvidia really fell out of bed. But yesterday when we reversed, it was like the old playbook just came right back. As weakness in the banks, as weakness in all the other sectors that did not show any leadership.
The way it's been acting, as mentioning yesterday, is it's as if it's a seesaw, and the S&P 500 itself is right on the fulcrum, and it's kind of not moving as much, but everything is kind of going each way around it, at least for now. And again, that did happen back in the spring. There were a lot of people saying, finally, the broadening of the rally is here. And it was for a period of time, and it kind of held the market together until the leaders kind of refreshed themselves and then sprinted higher again.
All right, Mike, thanks. Mike Santoli. The American Federation of Teachers is out with a report laying out guidelines and safety guardrails for using artificial intelligence in the classroom. Joining us now with the details, Randy Weingarten, president of the American Federation of Teachers. Randy, welcome.
Glad to be here.
Was this a tough report? Was this tough to put together?
Well, what's amazing is that, about 7 out of 10 teachers in the United States use technology all the time. And so we have said for years, help us make sure it doesn't supplant, it's a supplement. And so we started this journey last year. We actually started by showing our executive council ChatGPT. And you had to see people's faces just drop when we just did a experiment of writing, a press release that I would write.
Right.
And then, and so once that started, people said, okay, let's figure out how we use it positively, how we avoid the mistakes of social media that happened before, and what are the guardrails. So we put out these guardrails. Teachers did this, 6 very basic ones, with lots of ideas about how to use things and what not to do. But the second thing we did was we also did professional development and something we call the AI brain that is on our Share My Lesson platform so that teachers can try things out. And we have $200,000 worth of grants that we gave to 11 districts and 11 unions to actually do some of these things. So we did both the positive and also the cautionary. Let me say one more thing. The most important caution, safety and privacy of kids and of their teachers. We got to fight back cheap fakes and disinformation.
How are teachers using AI right now most commonly?
So for the people who are using it right now, as opposed to just other ed tech, it's basically helping with lesson plans, helping with assessments, and helping with figuring out some new and different classroom assignments. That's the most common way that teachers are using it right now. The issue right now is really, truly social media and deep fakes and bullying. And so how do you figure out what it is and how do you stop it? So that's why the people who really know what they're doing, and look, I'm from the generation that didn't even start with computers. So everything I do is, I have to think through it. But the people who know what they're doing, they focus on safety, privacy, and saying to all of us, we have to learn to be fluent in this technology.
Andrew's got a question.
Hey, Randy, I'm out here in Aspen and spoke to the head of Microsoft's AI efforts, Mustafa Sullivan, yesterday. We actually talked a lot about education. We're going to show some of that interview in a little bit. But very interestingly, I'm curious how you feel about using AI to grade a paper, which today it could if you wanted it to, using AI to effectively fill out a report card. So instead of not just having grades, but sometimes teachers spend enormous time writing letters to parents and to others about how a student is doing. The AI will do a pretty good job of filling that out for you. Do you want teachers using it for those things or not?
So it's a really good question, Andrew. I would say that first drafts of recommendations, first drafts of, there's ways to do first drafts of grading, but the human can never be substituted by the machine. And so what the promise for teachers, like in terms of all the paperwork that teachers do, the promise is to reduce that work and to reduce that paperwork. But you can't have the machine be the substitute for human interaction. Human interaction has to always be front and center in terms of anything we do with kids. So, and we've been working with, as you know, the AFL-CIO, and we have a partnership with Microsoft, and soon to be some announcements for what we're doing together in August and beyond.
Randy, great to speak with you. Thank
Thank
you.
you.
Randy Weingarten.
When we come back, we'll bring you some of those highlights from my conversations with Microsoft's AI CEO, Mustafa Suleyman. He shared a number of interesting insights right here at the Aspen Ideas Festival. You don't want to miss. We're coming right back here on Squawk Box from Aspen to Times Square in just a moment.
Made affordable.
Welcome back to Squawk Box. We are here at the Aspen Ideas Festival, where yesterday I spoke with the head of Microsoft's Artificial Intelligence Unit, Mustafa Suleyman. He's probably the most important person now in the AI world at Microsoft, of course, in major partnership with OpenAI. We should mention that Sam Altman from OpenAI is going to be here a little bit later today. We'll bring you part of that conversation in a little bit. But I asked him about chatbot hallucinations, because we talk about it all the time, and whether he believes he could ever really take us inside the black box to actually understand how AI works.
I can't, in a way that would satisfy you. But I also can't explain why you chose to wear a blue shirt this morning. I can explain very little about who you or I are. The requirement for explanation is, I think, again, a little bit of a human bias. When I ask you to explain why you had scrambled eggs for breakfast this morning, you will creatively imagine an explanation in hindsight, and depending on your mood and the context that you're in and the other like associated metadata of the explanation, you're probably going to say it slightly differently, and it's not clear that it was entirely causal. There is some basis in reality for it, but this one-to-one mapping is a very hyper-rational imposition on the way that we think as humans. In fact, we just don't really operate like that. We operate, I think, far more by association.
Should we worry about that? I mean, should we worry that it's one thing to not understand ourselves. It's another to not understand how the computer gets, most people think that all this is just a big mathematical problem, right? 2 + 2 should always equal 4. If it's not equal to 4, we need to understand what's wrong with the computer, right?
Yeah, that's sort of not how sort of human reasoning and culture actually works, in my opinion. Human reasoning works as a result of behavioral observations. When you consistently do the same thing over and over again, I gain trust. You become more reliable. When you tell me that you are unsure about something, and then I look back and it turns out that your uncertainty was a correct assessment of that outcome, that uncertainty gives me reassurance, right? So I learn to trust you and to interact with you by observation. And I think that that's actually how we all operate in relation to one another, is how we produce culture and society. And that's how we'll treat these models.
So guys, we're going to have to start thinking about these models really very much in human dimensions, not necessarily in mathematical or sort of thinking about them as a computer. I also asked him about the issue of intellectual property, a big one here at the Aspen Ideas Festival, where there's so many authors and other creators, and especially given the reports that OpenAI and others have trained off of transcripts from YouTube videos. Here's what he said about the economics of all of that around content.
The economics of information are about to radically change, because we're going to reduce the cost of production of knowledge to zero marginal cost. And this is just a very difficult thing for people to intuit. But in 15 or 20 years' time, we will be producing new scientific cultural knowledge at almost zero marginal cost. It will be widely open sourced and available to everybody. And I think that is going to be, a true inflection point in the history of our species, because what are we collectively as an organism of humans other than an intellectual production engine? We produce knowledge. Our science makes us better. And so what we really want in the world, in my opinion, are new engines that can turbocharge discovery and invention.
We're going to have to get on the couch, because if you really start to think about it, Joe, and Melissa, I mean, who are we? If we are content creators in many ways, and if the marginal cost of content is going to zero, well, there's lots of industries, of course, that are going to shapeshift as a result. I want to show you one other piece of sound, if I could. Yesterday, the European Union charged Microsoft with breaching antitrust rules by bundling its Teams and Office products. Meanwhile, Apple now saying that it's delaying the launch of AI features in Europe, given the regulatory environment. So I asked Mustafa about the concentration of power in artificial intelligence among the big tech companies.
Makes me very anxious. The reality is, everywhere you look, we see rapid concentrations, whether it's in news media and the power of the New York Times, the Financial Times, the Economist, the great news organizations, or whether it's in cities, the concentration of power around a few big metropolitan elite cities, or whether it's in technology companies. And the practical fact is that over time, power compounds. Power has a tendency to attract more power, because it can generate the intellectual resources and the financial resources to be successful and outcompete in open markets. So while on the one hand, it feels like an incredibly competitive situation between Microsoft, Meta, Google, and so on, it clearly is also true that we're able to make investments that are just unprecedented in corporate history.
Can you speak to what I imagine is a friendly, or it could turn into a frenemy situation with OpenAI, which is you have this partnership now, but you guys are developing your own tech as well, your own AI, and in fact, they helped you get to the lead. I want to read you something. This is semaphore. I thought it was actually a fascinating analogy. Do you know this?
Of course.
Okay. With the Tour de France coming up, here's a bike analogy that I think everyone will understand. OpenAI and Microsoft are in a two-person breakaway, far ahead from the peloton. By working together now, they might be able to keep the lead. If either goes solo, they may fall both behind. Both companies have to think about their finish line strategy when they will have to ditch the other. You're on the bike.
Again, I don't buy the metaphor that there is a finish line. This is another false frame. It's actually very much also true in the context of our race with China. We're going head to head. It's zero sum. There will be a finish line, and when we cross it, we will have an AGI, and if we get it 3 years before them, we'll be able to disempower them. This is just... Stop it. We have to stop framing everything as an adversarial race. Like, it is true that we have ferocious competition with them. They are an independent company. We don't own or control them. We don't even have any board members. You know, so they do entirely their own thing. But we have a deep partnership. I'm very good friends with Sam, have huge respect and, you know, trust and faith in what they've done. And that's how it's going to roll for many, many years to come.
We went deep with Mustafa on so many issues. You can watch that interview online if you want to watch it in its entirety. One of the first interviews that Mustafa has now given in his new role at Microsoft. Of course, prior to that, he was one of the co-founders of DeepMind at Google back in 2010. He's an OG, if you will, in the AI space. Then started Inflection along with Reid Hoffman, which then, of course, got spun effectively inside now of Microsoft. And as I mentioned earlier, Sam Altman is going to be here in Aspen later today, and we'll bring you parts of that conversation tomorrow. Of course, AI here is the talk of the town, as it seems to be just about everywhere you go.
Andrew, during that one part of the conversation, I briefly thought about us. Content is worth zero. But what he described, if you were listening closely, was really the singularity, the Kurzweilian singularity, where mankind, where machines now have, what, 1 billion times the collective knowledge of mankind for the last million years, whatever it is, however long we've been. When machines get to that point, I don't know if we need to do anything for new knowledge and for new content. And I'm hoping it's a positive, because I want to be some kind of cyborg that, I don't know, is hard, maybe download my neurons to something that can last. We may just miss. That may be like 100 years from now.
I'll give you one. You'll appreciate this. We had a piece of the conversation was actually about the election and elections and the role of AI in politics in the future.
You just can't help yourself. You just can't help yourself, can you?
No. But this was interesting because Mustafa was saying, look, that he thinks that AI should be completely disconnected from politics and elections in the future, and the way they've set it up now in 2024, it's going to be set up that way, and he's hoping it'll be set up that way in 2028. But then he said, come 2030, come 2032, or even farther out, we are all going to have our own agents, our own bots that are ours. And he said, just like some people, want their pets to have sort of humanhood, if you will, that he thinks that bots, your agent, may actually get involved in politics on your behalf. And so even efforts that are made to separate politics and elections from AI, it'll be very difficult because the democracy, if you will, people will want the agents involved in that conversation. So it gets very interesting. Talking about the singularity, it gets very interesting very quickly the farther out you go.
Will any of us be happy? Did you ask him that? Can we, I mean, I'm happy now, but you're describing a horrible future to me. Right? Aren't you?
Let's just be hopeful. I'm going with hope. I'm crossing my fingers.
We'll prepare for the best. Hope for the best. Prepare for the worst, though. Thanks. We'll be back to you. Brian's going to be much more positive. Coming up, we're going to go deeper into the conversation we've been having this week about housing and affordability in America. Realtor.com's chief economist will join us next on exclusive results from the latest CNBC CFO Council survey, including what corporate financial decision makers see in store for the second half of this year. We're back in 30 seconds.
Welcome back to Squawk Box. I'm Frank Holland. Today we're releasing the results of our Q2 CFO survey. We asked the corporate financial decision makers from the biggest companies what sector they believe will see the biggest growth in the second half of 2024. You can see right here, technology was the top answer. They believe that will continue to show leadership. Tied for second, consumer staples and energy. Speaking of the consumer, we also asked these corporate financial decision makers what's the biggest external risk to their business. You see it right here. 54% telling us that their biggest concern, the biggest external risk, is consumer spending, followed by overregulation and then Fed policy. That read on consumer demand, that's the highest read since Q1 of 2023. So this Q2 CFO survey was taken between June 3rd and June the 20th. During that time, a lot of things happened, of course. We had a Fed meeting where rates were unchanged, but the cutout look was actually lowered. We also had a CPI report that was better than expected, and we saw the S&P 500. It topped 5,500 for the first time ever. It was in this environment that CFOs detailed their plans to focus on acquisitions along with research and development. 21% said that M&A and R&D are their priorities for CapEx spending this year. 17%, as you can see, said building new factories or facilities were their top priority. The majority also telling us that their CapEx spending is expected to stay about the same, a quarter expecting an increase, 17% forecasting a decline in their CapEx spending. Melissa, back over to you.
Frank, what are these CFOs saying about the Fed and possible cuts in the second half of the year?
You know, Melissa, a lot of optimism about a cut coming this year. We're going to actually show you the chart here. So just about 38% believe we're going to get a cut in September. They're very optimistic we're going to get a cut before the election. A large number of them, as you can see, 17% believe it will come in November. That would still be after the election. Also, another 17% believe it could come in December. But look down here. 29% believe that the first Fed rate cut is going to come next year, possibly even later.
All right. Frank, thanks. Frank Holland.
All right, the latest Case-Shiller Home Price Index showed home prices for the last 3 months at a record high. Prices are now 47% higher than they were in early 2020. Joining us now with more on housing affordability, Danielle Hale, chief economist at Realtor.com. Doesn't make sense to me, Danielle. Is it about supply, I guess? Because if it's so expensive to buy a house, how is anyone buying a house at 7.5% mortgages? It must be supply, right?
It is a bit about supply. It's also about the amount of equity that is in housing right now. So homeowners are sitting on a record amount of equity, and so those who don't have a mortgage, who aren't affected by today's borrowing costs, can make moves, and so they are able to navigate these higher prices without as much of a ramification. So supply, and also a bit of a shift in the mix of who is actually buying homes right now. So we are seeing a shift towards more expensive homes as opposed to less expensive homes among buyers in the market.
Yeah, Treasury's been criticized for not extending maturities with those low rates, but most people did, didn't they? Or are people that are in some arms, are they still going to, is the piper still going to have to be paid? Are they coming due, or have most of them already shifted?
So we are going to see some arms reset, but they are a very small portion of the overall total of outstanding debt. So I don't think it's going to be a big ramification. I don't think we're going to see a huge impact on things like consumer spending or even people's ability to pay their mortgage, but there will be some ramification.
Is this a median type thing? I mean, is it the high end that is dragging the price of housing or houses to records, or is it just thinking mean or median? Is it skewed by all the rich people within the coastal regions buying these $50 million houses? Or
we are seeing more sales at the higher end. And if we look at inventory, for example, we tracked the inventory at Realtor.com, and what we see is actually more lower priced homes on the market. So the homes in the $200,000 to $350,000 category, that's been the biggest area where we've seen growth. In part, that's a regional mix. While on a per square foot basis, these, we're not seeing lower prices, it is good for buyers in that entry level price point to see more options. They have more to choose from.
Yesterday, the market was digesting news from Pool Corp. I'm not sure if you followed this at all, but they basically said people aren't renovating as much anymore because of the high interest rates, and they're not, renovating their pools, they're not putting in new pools, etc. And we saw a sell-off across the board when it came to home retailers as well as home builders. And I'm wondering if this tells you anything about the psyche of the potential home buyer and where they are right now, because prices just, people were looking for relief maybe towards the end of the year, but we're just not getting it.
Yeah, I think the way 2024 has played out is very different than many expected. So people were expecting more significant interest rate relief, and we got a good break early in the year, and I think that raised expectations. We haven't seen that carry through. I think it's going to be a little bit higher for longer. We will eventually get that relief, but we've missed the heart of home buying season, and so we're not going to see as much activity as had originally been expected.
Well, what comes after millennials? Who are they? Generation something? I don't know. Will millennials or those people ever be able to buy houses if they don't have the equity you were talking about? Can anyone go into a market right now with a 7.5% mortgage and buy a house? What's it cost?
So we are still seeing first-timers get into the market right now. They're making up about 30% of recent home sales, but it is expensive. The costs have essentially doubled over the last 5 years because home prices are up 50% roughly, but the mortgage rates are up, and so that drives the cost up.
Think about what you just said. That's doubled in the last 5 years.
Yeah.
That's part of inflation, isn't it? Isn't that why people feel like they don't have any money? It's not just eggs. I mean, it's houses.
Well, I think inflation really depends on the perspective, right? So homeowners that are sitting on a low-rate mortgage that haven't seen their costs go up as much. I mean, the property taxes and insurance are up, but that's a small portion overall. But home buyers are experiencing it really. They're taking inflation on the chin.
Do you have a do you advertise not to say realtor instead of? I mean, do you tell people to? Is it a pet peeve of yours? Is it like
Making it like 3 syllables. As
yes, like nuclear?
There's not an A between the L and the T.
Why does everyone put an A there? And does it drive you crazy? Huh?
I don't know.
Do you say realtor?
No, realtor.
So you say it correctly then.
I worked at the National Association of Realtors.
Doesn't matter.
Before.
Doesn't matter.
It's in the orientation.
Yeah, they still say
Is it really?
You'll never say it
You
again.
say realtor instead of realtor?
Yeah, they do talk about the pronunciation of it.
A nuclear bomb goes off in my head when someone says realtor. Thanks, Danielle.
Thanks for having me.
Coming up, an extended conversation on the business of Hollywood with Academy Award-winning producer Brian Grazer. Think of one of your favorite movies and good chance he had something to do with it. You don't want to miss that. Plus, much more on the markets, the futures at this hour. Triple-digit losses now on the Dow. NASDAQ is actually now turned negative. Stay tuned. You're watching Squawk Box on CNBC.
165.
We're watching the yen very closely. 160.31 is the current level, but it did weaken to its lowest level since 1986. That'd be 160.38. Joining us now is Peter Bookvar, Bleakley Advisory Group CIO and CNBC contributor. Peter, great to have you with us. The BOJ will meet next month, I should say, at the end of July. They've got to be hawkish. What do you think happens?
I think they're laying the groundwork for not only a rate increase of maybe 10, 15 basis points, not as much as 25, and also trimming back on their QE. Still doing QE, but doing less of it. There's an extraordinary amount of pressure now on the Bank of Japan from not only the Japanese citizenry, from that is dealing with higher inflation and now a decrease in the purchasing power of the yen, but also the Ministry of Finance that doesn't want to have to deal with FX intervention because they know that usually fails. The question, though, is that even after those moves, is that going to be enough to stem this yen weakness? Because there's still a mile wide between U.S. policy rates and what will be in Japan.
1 month is a long time to watch this currency slide, Peter. Do you think they try and step in? I mean, traders it's been sort of the whisper for the past month or so that the BOJ would eventually have to step in. Or do you think that this slide is orderly enough that the BOJ would not?
Well, they've done it twice already over the past couple of months, and the impact was maybe a couple of days. And we're seeing now, obviously, the retest of 160, proving that those 2 times have failed. The only way to get a sustainable slowdown, at least in the depreciation of the yen, or maybe even get a rally, is actual action by the BOJ. So I'm not sure if they were going to intervene before that BOJ meeting and sort of front run it, but maybe in order to give any yen rally triggered by that meeting some momentum, maybe they intervene after that meeting, but in the meantime having to wait for further weakness.
Oh, interesting. The flip side, literally, to this whole yen weakness is the strength in the U.S. dollar, Peter, and the strength in the U.S. dollar is being seen, across crosses against every major currency in the world. And so, how do you think that manifests during earnings season, which is literally right around the corner? Are we going to hear more commentary? Is it going to be more of a quote-unquote thing during the season?
Well, it will be for some. I mean, many multinationals try to hedge, but it's impossible to really fully do that. In the last couple of quarters, we did see, like Coca-Cola and Microsoft and some of the big names that do business everywhere, that a few hundred basis points of revenue growth was clipped by the rally in the dollar. So you could see a repeat of that. But I think overall, the dollar strength isn't enough to really move the needle earnings-wise. I mean, even take the euro, for example. It's been trading seemingly in a 105 to 115 range for years now, and it remains in that range. And I think the dollar overall is in a long-term trading range outside of the outliers like the yen.
All right, Peter, got to let you go. Thanks so much for your thoughts this morning. Peter Bookvar of Bleakley.
Okay, coming up in just a moment, legendary Hollywood producer. He's going to be right here. Brian Grazer is going to join me in Aspen at the Aspen Ideas Festival. We're going to talk all things media, Hollywood, streaming, and whether he sees consolidation ahead, the changing economics of show business, and so much more. You don't want to go anywhere. Squawk Box coming right back from Aspen, Colorado after this.
starts here.
Or you? Okay.
Yeah, whatever.
Okay. Easy, huh?
Easy peasy.
Okay.
Welcome back to Squawk Box. I'm at the Aspen Ideas Festival. NBC Universal News Group is the media partner with Aspen, and joining me right now is Oscar, Golden Globe, Emmy, and Grammy Award-winning producer Brian Grazer. He's the founder and executive chairman of Imagine Entertainment. Easy peasy. We're here together at, I don't know what, it's early for you.
Yeah, it's early, yeah.
I know.
It is.
But we want to thank you for being here. I got a couple questions from Joe. He's got some questions for you about Hollywood and the movie theater business. I was actually even going to start there, which is...
Whatever you want.
Well, we want to talk about consolidation. We want to talk about sort of the changing nature of all of this.
Yes.
But what do you think about the fact that it feels like, despite Barbie and Oppenheimer last summer, maybe people aren't really going back to the movie theaters?
I happen to think that... No, well, there's some evidence that supports that.
Yeah.
Imagine has always played in the zone where there is that chance, high probability of chance that it will be successful in a movie theater.
Okay.
And so it's okay. It's great for us,
right?
Because we've built over 30 years over 100 different products, brands. You know, whether it's Backdraft, which I'm now going to do today with Glenn Powell, or whether it's 24, a movie that we're going to do in a very interesting way with Disney Fox.
Wow.
So these formats of the late 90s and the 2000s have become very important because the streamers or the people or studios are very, right now, even more risk adverse.
Right.
And so what they like to do, as you just pointed out, by doing Barbie, like a 100-year-old product or something, they like brands that are already established that people have high level of awareness to, that where you actually add a new twist or really interesting casting, which is of course what we're doing with ours. We're doing something with Sydney Sweeney, which I'm very excited about. We're doing something with Scarlett Johansson, also very excited about. I mentioned Glenn Powell with Backdraft. So we're matching things up like that.
How much of it is dependent, therefore, on this? It's not as a former generation, but generations of people who grew up in a different era, effectively, when it was a little bit less fractured, where you could actually create these moments. Backdraft was a huge picture. The question is, would Backdraft, if you had to do Backdraft as an original today, could it be a huge picture?
I think so.
You think so?
Well, because actually AI and digital effects have so far advanced themselves that you can have tiny little cameras, almost imperceptible, that will capture the physics of a fire in a way that's never been done before. So even when I saw, I'm sure you saw Dune 2.
Yes.
That blew my mind. I thought it was absolutely so state-of-the-art and amazing. And those are the benefits of AI and the advancement of digital effects. And so, you know, I think you can do that.
What do you think?
That's the goal.
That's the goal. What do you think is going to happen just to the streaming world right now? Because it feels like everybody's trying to make sense of it. There's a lot of talk about consolidation. We have an election coming up.
Yes.
There's a lot of folks waiting to figure out, you know, whether regulators should allow, will allow. Do you think that in the next year or two there will actually be demonstrable consolidation among the streamers?
I do.
You do?
I do. I don't want that to be true.
You don't want that to be true?
No.
Because it's not good for your business.
Well, it's not optimal.
Right.
It'll still be, they will still choose high quality entertainment. It'll always, we're now in a time where we're not going backwards and doing just shelf space content any longer. I don't think any streamer or any studio wants to do that any longer. They don't see that the super aggregator works. I think they see specific movies and television shows that are events or appointment.
So that's interesting you say that, because Netflix has become a super aggregator, and you think Netflix has made it work.
They're unusual. They are in another category.
But you think everybody else who's been chasing the fever dream of trying to be Netflix, you think that is a fever dream? Maybe.
Yeah.
I'm saying it for you.
Yeah, thank you. You're saying it for me.
What do you think is going to, I mean, we've all been talking about the future of Paramount. We've been talking about the future of Warner Brothers, this company, which is owned by Comcast, and Peacock. I mean, do you see, are those, when you think about the
This
chess
company's
pieces?
amazing. CNBC.
Love you. Lionsgate. I mean,
Yeah.
how do you see that all coming together or not?
Okay.
If you were moving the chess pieces.
Well, I think being a high quality, single independent that creates partnerships with their IP and emerging talent, stars. I think being an arms dealer to all of those streamers is a good business.
Right.
I think the smaller financing entities, the smaller or the companies that are the ones you just mentioned, they will probably have to be consolidated into bigger companies.
You mentioned AI.
Yeah.
And you seem very excited about AI.
I am.
But there's a lot of people in Hollywood you know who are super scared of AI.
Right.
What do you tell them?
I tell them that learn AI and win in and learn with learn and become a partner with AI and win with it. Because AI is never going to replace human experience, really. It's an executer, not a creator.
But how many people...
If you follow that, right?
Totally.
Yes.
But the question is, I think what has people nervous, there's the Scarlett Johansson of it all, meaning that somehow, an actor's voice or their likeness is going to be used.
Right.
But there's the other issue, which is, it takes a team, by the way. You can see behind the cameras right here, we have a whole crew here. And when you put together a film, it requires an enormous crew.
Yes.
In the future, this lighting setup took a while to figure out.
Right.
In the future, AI is basically going to tell the director of photography, you're going to put the light here, 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 and here, and here, and you're going to be able to do it very quickly. And so all of the sort of design elements I imagine is going to take down. The good news will take down cost if you're in your business.
Yes.
The bad news is, from a labor perspective, it's going to take out jobs. Or you think not?
Somewhat.
Okay.
Not by 50%.
Okay.
But by 10 or 20%. But you don't even know how that will work. In other words, because let's say the lighting you just talked about, you can pre-visualize, with your AI and your computer, you can pre-vis an entire movie. You can pre-vis the scene you just created.
Right.
But people are variables. The variables will change the lighting. So someone actually has to do that. So you can't really eliminate human beings.
Right. Let me ask you, I just want to go back actually sort of to the beginning, and then I want Joe, I don't know if you want to jump in here, because I know that Joe was talking about the movie theater business.
No, I want to ask
I don't know if you can you hear him?
I can.
The fracturing, though, of the business. That's, to me, what of the idea that making Joe, I can't hear you. That's what I apologize. Joe,
that's all right.
You jump in.
Yeah, I want to go back, Brian, and how are you? It's good to see you. Thanks for... Great seeing you, Joe. Thank you. Thanks for joining us. You described something that was just kind of troubling to me, and that was that some of the projects that are going to get greenlit are kind of the standard projects that they know they can make money on, which would mean some of your greatest achievements would be really hard to get money to make, I would think. We've had some of the legends of Hollywood say, I don't like what's coming out. Another Guardians of the Galaxy, another Deadpool, another Avengers. It's not a Parenthood. It's not a Beautiful Mind. It's not something like that. I mean, you might be able to get the money, but how do unknown people that want to tell a story that people have no idea whether it's going to be a big hit, but it might be, how does that work? It's just you're describing a paradox. Well, okay. I mean, this gets very granular, but how will artists, thrive in this world? I think a human being's, an artist's greatest value is to tap into their inner self, which can't be replaced. We are our own format. And so I think if you have an original, authentic voice, it'll always be a very high value. And you do have to integrate that in with
the ability to storytell, and the ability to partner with AI. I think that's essential. By the way, AI will help the beginners as much as it will help the seasoned veterans.
The question, though, and I think it goes to Joe's question, though, and it goes to the sort of Barbie of it all. Can you break through an environment where everything seems so fractured?
It's hard.
Right? I mean, that I think is the fundamental question everybody's dealing with. And by the way, the economics have changed.
But I think that's why the streamers are chasing brands, already existing pre-marketed brands, like the ones we were just talking about. Like 24, the movie, of using my own product, will be much easier than just starting from scratch and creating a really good action film with a title that we don't know. But 24 is a brand that has loyalty, has interest, and it has awareness. And so that's why they chase brands. That's why the 20 to 30-year-old IP is of high value.
Is it, though, to create a movie star? So Kevin Costner right now is a movie star.
Yeah, he's a movie star, and he lives out here.
And he lives out here, and we'll see. You know, he made his name over many, many years, and just recently with Yellowstone. We'll see what happens with this Horizon film,
of course,
or series of films.
Yes.
But do you think how hard is it to create the next Kevin Costner today?
Well, we think it's hard.
Right.
But there are people, some of them I'm working with. I mentioned Sydney Sweeney, and I mentioned Glenn Powell, and there's I'm doing a new movie with Luca Guadagnino, with Julia Roberts, and a girl from The Bear.
Okay.
That's new.
Right.
Io Eberry.
Okay.
And she's hugely talented on the cover of magazines. Have you heard of her?
I will admit I have not, and I apologize.
Every kid has heard of her. I went.
Showing my own ignorance here.
Every kid has heard of her. She's hugely popular. She was a stand-up comic when she was like 20, 21 years old. She's only, I think, 27 now, 28. And she's massive. Zendaya.
True.
She's
Absolutely.
huge.
Yes.
Our friend Sam Levinson gave birth to a lot of new stars.
Right.
And on Euphoria.
Yep.
And so you'd be surprised how much young talent is out there that are stars in their world.
Right.
And their world is crossing over into our world. If bringing up Dune 2 again, there were Austin Butler was in it. It was fantastic.
The next generation. Brian Grazer, thank you so much for
All right,
waking up
thank you.
early.
Did
Thank
we-
you.
did we do it?
We did it. We're not over yet, though, because I got to say goodbye to everybody, and we're going to take a commercial break. Brian Grazer, of course, thank you. Also, a programming note, we got a lot more coming up from Aspen. Tomorrow on the broadcast, Senator Joe Manchin and his daughter Heather Manchin, the former CEO of Milan, is going to be joining us ahead of the presidential debate. Of course, we'll bring you parts of the Sam Altman conversation and Brian Chesky as well, author Charles Duhigg and the CEO of GE Vernova. All that and more. Squawk Box coming back from Aspen and Times Square after this.
Let's get to Dominic Chu with a look at some of this morning's top pre-market movers. Dom.
All right, so Melissa, here's the headliners coming out. The big earnings story so far has got to be FedEx. Check out those shares right now, just up about 14%. The package delivery and transportation logistics giant company reported earnings and revenues that both came in ahead of analyst estimates. So take a look at FedEx shares. They're up by about 14%. Also, now watch what's happening here with shares of Apple. They are up here 2/3% on Rosenblatt. Analysts upgrading that stock to a buy on over 400,000 shares of volume. We are getting some help here because they think that artificial intelligence is going to be a driver because of some of the privacy concerns that Apple addresses. That's going to be huge there as well. And then check out shares of fun game stocks, Six Flags and Cedar Fair. Both of those stocks right now moving to the upside here. Six Flags up by 2.75%, Cedar Fair up by 1%. Their merger, combining both of those amusement park properties, gets a green light from regulators. Now it's going to trade on July 2nd under the ticker symbol FUN on the New York Stock Exchange. So keep an eye on Six Flags and Cedar Fair. Knott's Berry Farm meets those Six Flags parks. Melissa and Joe, I'll send things back over to you guys.
Thank you, Dom. Dom Chu. We've lost our gains in the pre-market.
Yeah, we have.
To the future.
I was going to actually ask Dom what his question no, if he had a question for Rory, but
you can ask him tomorrow.
I'm going to ask him tomorrow. We can ask him tomorrow because that'll be 3 straight days. Get some sleep tonight. And Andrew, you got, man, you're working. You got it's a lot of people out there. That's a good. It's a festival. I called it a conference. It's a festival. It's a festival.
It is.
All right.
And we got a lot more. We'll bring you tomorrow. Absolutely.
Yep. Excellent. Squawk on the Street coming up right now.
Good Wednesday morning. Welcome to Squawk on the Street. I'm Carl Quintanilla with Jim Cramer at Post 9 of the New York Stock Exchange. Faber has the morning off. Futures are under some pressure as yields bounce on some hot inflation reads around the globe. Canada yesterday, Australia today. That said, several upgrades today for names like Apple, Depot, Shopify, and more. Our roadmap begins with NVIDIA today, extending the rebound, returning to that $3 trillion valuation club. FedEx surging after posting that Q4 beat, reversing 6 straight quarterly sales declines. And there's Rivian soaring on this Volkswagen plan to invest up to $5 billion in the EV startup. Let's begin, though, with the markets. The Dow's coming off the worst session of the month. NVIDIA shares continue to rebound. Jim, are you thrown by Australia CPI running hot at 4? Is that what this is about?
I do believe that what we're stuck with is this endless running hot. There's always some component. And it's wearisome because we know that as long as there's one component, then you're not going to get the need to make a cut. If you don't need to make a cut, then you have things like what happened with this Pool Corp yesterday. I mean, this is a $12 billion company, but it just reverberated throughout housing, throughout everything in a house, throughout everything out of a house. If it weren't for the fact that you had Carnival, you would say the consumer's in trouble. Now it just looks like, well, the consumer narrative is they're not spending in their house. They're spending on trips, but they're not spending in their house because they can't sell their house and don't want to sell their house because they can't buy another house with a low mortgage. It's a very long conundrum which just says we still have inflation in the system around the globe, and central bankers, if they talk to each other, are going to say no, not yet, not yet.
That said, we do have mortgage rates at a 3-month low today. We did get D.A. Davidson upping Depot back to hold.
I thought that was a good piece because it did say you have to buy it at this point, at this juncture. With this, it just usually doesn't have this discount to its high and discount to its all-time high. I like the piece because I like Home Depot as a concept, but I don't think that this market likes you to buy a stock that isn't at its last bad quarter. You don't have it. I mean, I think that yesterday's Pool Corp was devastating for Home Depot. There's just too many aisles of Home Depot that get hurt.
Yeah, Mohawk. I mean, the list went on and on.
Oh my
yesterday.
God! And Furniture Brands got hurt, and Masco got hurt, and so what you find is this is part of the NVIDIA problem. Okay, you want me to go beyond NVIDIA? Well, let me go into housing. Head cut off. Well, let me go into banks. Whoa, man, the regionals are in trouble. But tell me, what kind of food set? Ooh, General Mills misses. I mean, you have to have something. Well, you can't just say, oh, it's going to broaden it.
No, but that's why FedEx was such a story last night.
Oh, my God. Okay, so FedEx was like a gift. I mean, it just said, wait a second, before you throw away everything, before you decide that what matters is a Southwest number cut, this was a tour de force. Raj Subramanian total real deal. And what he's doing is he's putting together whole divisions that used to have CEOs separately. He's thinking about whether to put up the truck business, the freight business, because the freight business is selling internally at 6 times, maybe he can get 13 times. I don't think we have to make too much of that. I think the analysts were shocked about that. What you have to make too much of is that how much money this company can make with a little bit of revenue growth. So let's say you get 2 to 3% revenue growth, you get Mexico kicking in and India kicking in a big way. I mean, you got a stock that it's not going to be 2022 for earnings. It's going to be 27, 28 for earnings. I love the story. I was jealous of it. Really, I saw it coming because Raj is so great. Just let it happen.
Yeah.
Didn't do it in.
JP Morgan today goes to overweight. They were at 296. They go to 359, Jim. And then this freight stuff. Can you explain how it rhymes, if it does, with the UPS move the day before?
Okay, I think that the UPS move was done out of desperation. I think that was a good business, the logistics business, and they are selling it at a trough. I don't think FedEx would disagree with me at all about that. They want to look at the freight business without, just because the disparity is so great about what they can sell it for. So you have, this would, I think, be what FedEx would say. You've got Carol Tomei, UPS, selling a business at its trough. You have Raj considering selling a freight business at its peak. And Raj is enough of a financial guy to say, you know what, maybe it's just worth it to monetize it somehow. But the way this man thinks is extraordinary, without ever compromising on the unbelievable, and I revere Fred Smith vision, he created it, of the mode. What he's doing is taking out airplanes, say. He's got enough flexibility in the system that he can get rid of these very expensive planes, including Boeing 757s, which are much more expensive than I thought, and be able to use the slack to be able to look at this. I mean, to be able to get in and save some money on the planes. Now, understand they're going to lose the post office contract. That was agreed. There's going to be $500 million coming out like that, and so everyone should know it. There's a couple of fewer days next year. Everyone should know that. But what is he doing? He's buying back stock, which shows you that the balance sheet is in terrific shape. I think he's taking very big share. UPS, by the way, apparently has kind of slowed down don't as many days rural America. You don't get the same you don't get the same level of service in rural. I think that this is the rubric of the industry. FedEx gives it to you. Europe is going to big cost takeout. Change in management in Europe. Europe is going to be incredibly good. There are no flies on this story and this drive. I call it overdrive. I know that Raj calls it the drive. Reformation for FedEx. It's the overdrive reformation. He is consistently under-promising and over-delivering. It's a thing of beauty. It is one of the best transformations I've seen in my lifetime.
It's a big leap from where they were, what, maybe 3-5 years ago, Jim?
All we ever knew was that if revenues went down, earnings were crushed. That's all we ever knew about these guys. You get a 1% decline in revenue, you swindle a loss. I mean, now you get a 1% increase in revenue. The delta's incredible. And by the way, they're not going to have 1%. It's going to be 2%. It'll be 3%. This is at a trough for revenue growth. The e-commerce still very strong.
Yeah. By the way, today, B of A takes Amazon to 220. Reiterate top pick. In their view, Jim, their 5 efficiency metrics, they think the company's got a lot of runway ahead.
Wow, that was an important piece, because they basically said, look, before you think that Amazon's done everything it can out of retail, there's going to be more coming. Now, the margin leverage, Brian Olsavsky, the CFO, he's fantastic. People don't talk about CFOs enough. We have CFO council, by the way, that seems to have already decided who's going to be president. Let's hold off on that. But I do think that when you look at what they're doing at Amazon, they are bringing down the cost of a package, which means they can do more same day, which means look out CVS, which means look out Walgreens, because what they're trying to do is make it so every aisle that you have in those stores, you can get same day. Remember, they're able to do a tremendous number of units. One of the things I'm shocked about Amazon is, right now there's like 17 different Old Spices for deodorant. There's like Teton Mountain, and then there's like Everest, and then there's like, Captain Morgan. I don't know these silly names, but every one of them is covered by Amazon. So, and I'm being facetious, but what Amazon has told me is we don't just have the basic Costco. We can do all these units, and if they can do these same day, why would you go to the store on the way home when it's at your door? Right. And that's what this is about. At your door, more cheaply, same day. That has been the holy grail for Amazon. They're pulling it off.
Jim, I'd love to get your reflections on NVIDIA's day yesterday. Best since 2021. Today, Cantor goes to 175 from 140. Got an upgrade of Apple over at Rosenblatt.
Oh my God! And the upgrade of Apple, we should just talk about that. Barton Crockett. I always enjoy him. You know, ex-journalist, so he always gives you a kind of a literary approach. I like good writing, so to speak. And he's talking about conversational AI subscriptions can grow, but he goes, it's very matter of fact, Crockett. I love it. He goes, oh yeah, there's 15 new features that are going to make it so you want the smartphone. Really, 15? I mean, Tim Cook doesn't know that they're 15, for heaven's sake, CEO of Apple. So I like the piece. And one of the things that Tim told me that is driving me crazy, I said, do you think that you did ChatGPT? Is that it? He goes, oh no, stay tuned. I've been staying tuned and nothing happening. But don't stay tuned much longer, because he says they're in talks with Anthropic and Alphabet, which would mean you have all these companies wanting to be at Apple, and it's an Apple have cake, eat it too story. Because without having to spend anything, they're getting the best of all these guys who are spending all this money on data centers. Yeah. Because people didn't realize when you have 2 billion customers, it's worth giving your product away just to get them interested.
So, yeah, the point out of Rosenblatt is, two things. One is that consumers want privacy in AI.
Oh my God, thank heaven that was right.
And Apple's push there will give it leverage. And then this notion that they are immune to some kind of cost pressures from the hyperscalers.
Yes, well, one of the things that, again, I referenced my conversation with Cook, because we were both kind of flabbergasted the stock was down on the WWDC, because the emphasis was privacy. And one of the things that Cook says, listen, that's what this whole new generations want, is privacy. Why were people talking about it? Well, Crockett got religion and he talked about it. That was very, very important. I think that that's probably the most important story that people don't realize, versus Joanna Stern's piece today about how, listen, you don't have to buy anything this summer. I disagree. You can buy the Max Pro. Remember, you can buy the Pro Max, the 15, and you can still get all this AI. I like that story, but I do think that this thing's got legs. At 165, they hated it.
Maybe the most important story this morning, Jim, is what Micron will say. There's a lot of chatter about a name up 70% for the year and implications for NVIDIA tonight.
I think that, all right, let me just say this first of all. Sanjay Mehrotra is the most unsung CEO in semiconductors for obviously Jensen's not unsung. But you look at what Sanjay did when back in the summer, he called the bottom. The way he calls bottom, and when you do DRAM, is to say, listen, you know what? There's actually inventory at a low. Then he reiterated that in December. You still could catch a double. I think he's going to reiterate it again. I think he's going to say that business is accelerating and the high bandwidth memory. Now they corrected me when I said that was going to be the whole company. He said, listen, remember, high bandwidth memory is really one aspect, but HBM will be considered a proxy for what we think NVIDIA is going to do. Now, a lot of people are saying that maybe today, Jensen Huang at the shareholder meeting might say something.
Yes.
Now, typically shareholder meetings have not met much.
I was just talking with Santoli about this. When did we start making a big deal out of meetings? I said when Jensen started coming through.
Look, I think if there's a robot in a leather jacket, I'm taking my numbers up in video. I mean, but Jensen is. By the way, there are a lot of people who are starting to say, all right, how many Jensens are there? Because Jensen's at every conference.
He is everywhere.
I mean, he's at Snowflake. Well, I heard he might be virtual Snowflake. Oh, wait, he was at ServiceNow. Well, wait a second. Well, he was at HPE. Well, he was at Dell. And how does this man do it? Now, I remember when I was out there, there was little Jensen. They had Jensen, they had little Jensen. But can Jensen be at all these places and be at the shareholder meeting and say great things? If there's one person on earth who can do it, it's Jensen.
Yeah, there's going to be a lot to watch at the meeting and with Micron.
But he has Sanjay. Everyone loves Sanjay. If you don't like Sanjay, come see me. I'll set you straight.
We'll see what happens. NVIDIA has lost some of its pre-market bounce.
Oh, no.
We'll see. After the break, there's Rivian shares surging some 40% today following the big Volkswagen investment. We're going to take a closer look at that and see what it means for the auto business as we do await some delivery numbers out of big players next week. Futures are still in the red. Squawk on the Street's back in a moment.
Good morning, retail traders. Looks like we pulled back right to support. Watch SPY it open. Where are we? Oh, yeah. Zippity-doo-dah, zippity-day.
Calm.
Volkswagen planning to invest up to $5 billion in Rivian, sending shares of the EV maker soaring today. Volkswagen is going to begin with an initial investment of $1 billion. The additional $4 billion expected to come by 2026. The word game changer being used a lot today, Jim.
Oh, look, I think that one of the things that people, I read a lot of financial notes today, but I think that they're missing the point. There are a lot of people after the cancellation of the Georgia plant, or on hold on the Georgia plant, started thinking, you know what am I going to do buying this if there is no Rivian? Why would I buy it and do, say, a little north of 50,000 beautiful vehicles? You can test drive one, by the way, locally in Brooklyn. It's terrific.
Really?
Yeah, absolutely. We went. I just thought it was great. But the objection has been, look, you can't buy a car if there won't be a network to fix it after. And we see, by the way, how hard it is to fix it at Teslas. We know from Hertz. Well, that's off the table. No one's going to say now, well, wait a second, I can't buy a Rivian. So I think the stock is not up enough. Now, be careful, it's a convert. So one at a time, people shoot against converts. That happened once before Rivians. Meaning that they sell the common. They short the common and go long the convert. But I will make this point, that if you take the survival of Rivian off the table, which is what you had to do, you were worried because where was Amazon backing them up? They needed to find someone to replace Amazon, and they got a company that I think the shareholders of Volkswagen may not be all that happy because they got a very, very good deal, Rivian.
Yeah,
but
Rivian VW's down.
Yes, but Rivian, their survival off the table. That's going to really help sales.
A little bit of a halo for names like Lucid today. Aptiv, Jim, people is down 9 as Volkswagen might not need a lot of third-party software.
Well, one of the things that the first thing that they said was that the iteration of the software that they use at Lucid is going to be, the result is that this is the Mr. Ben Said. I do not know him. He's the chief software officer of Rivian. They do talk about how this stack, there's a terrific software stack, and I'm presuming what he's saying is, listen, from now on, that's going to be the Volkswagen software stack. It's a very, very positive conference call, by the way. This was one of the great kept secrets in the world. Yeah. I mean, I was dealing with these guys, and I was like panicked. Yep. We were going to go to Georgia to do the show. Oh, really? I mean, what are we going to go to Georgia? What are we going to do? Like, go see the Falcons? No, thank you. I mean, come on, check me out. I don't want to go to see the Falcons. If I want to go see a bad team, I'll go. There's a lot of bad teams. I'll go to Chicago.
Big implications for their SUVs all the way into 26, the R2. Meanwhile, Jim. Cybertruck now over at Tesla. This is the 4th recall. Yeah. This is a plastic rim that can come off the car. Next, there's been some stories this morning on how they may lose their majority in the U.S. next week as delivery numbers come out. They sell more in the U.S. than all others combined. That may change finally.
Well, it wouldn't shock me. By the way, the F-150, which a lot of people were comparing Cybertruck to F-150. I think that's wrong. You should compare it to the Lamborghini, not the F-150. F-150 sales are fantastic. There have been a series of raids done on Ford saying that the F-150 sales have weakened. It's completely untrue.
You said this yesterday.
Yeah, because
completely untrue.
I saw it again, that Ford's having a weak summer. Now, my Travel Trust owners are going to talk about it tomorrow at our investing conference, but
we got 20 minutes.
Tough market anyway. And you go in and you're Musk. Why if you shoot the king, you got to kill the king. And the king is F-150, and they have that's not happening. I mean, they won't even make the. I used to have a Super Duty. After 15 years, they go. That's their time. But anyone who has an F-150 is not looking at the Cybertruck. The Cybertruck is for very rich people who work in Silicon Valley and don't go anywhere.
We did get another month of deflation year on year in new cars. We're going to talk some more about
CPI.
We're going to talk some falling prices as we look at Southwest's warning today, pricing over at General Mills. We have Kramer's Mad Dash and countdown to the opening bell in a moment.
Watch the spy, YouTubers.
Time for Kramer's Man Down.
Right open. We should get a nice bounce.
Throwback defending Ford. Now I'm going to talk about GM. Now, yesterday, GM Cruz named former Amazon, Microsoft, Xbox executive. By the way, he also worked at he's worked at Sonos. The guy's really been terrific. And I think that his name is Mark Whitten. We may not know him, but I checked in with Mary Barr this morning. You know I'm like a big Barr fan. Well, you know why I'm a Barr fan? Her stock's up.
I can only handle a few minutes to these people this morning. What can Biden do to lower gas prices before the election? I'm going, you idiots, don't you think we have a memory? How high they've been for the last 3 years? One thing he can do is stop spending. Another thing he can do is stop the war on energy. Number 3 thing he can do would be stop the wars, period. But he won't do it. He's in bed with BlackRock. He could close the border. Better have my platforms up. I've been failing that department. I'm eating walnuts. I love walnuts. So 27th on SPY. These are going to be cheap. I'm going to pick either one of these two right here. Which one has the highest volume? I kind of like the 444, 544. But we'll see. June 27th. Bring it back to the 200 if we break the 63. NVIDIA's got 24 million in volume, almost 25 million. Rivian Volkswagen going to put $1 billion in it right now. They got an obligation, or maybe $5 billion. And we got FedEx with a pop. So do your Fibonacci's on this one here. Rivian. So 50% pullback. If we get down to 1545, we'll see if that holds. We got 1 minute left. First thing I'm going to do is tackle the SPY and look at my volume. I really like this setup right now. Tesla it open. Yeah, they were pumping forward, I can hear this morning. I'm going to set an alert right here on them. Oh, too late. Okay, where's my... The 545s. The 545 strike. Same ones I had yesterday. $1.03. We got the debate tomorrow night. I'm gonna add 5 more right here. Blanket. Apple's up $2.90. Tesla's up $2.54. I've got the SPY. We got 3 hammers so far. That's on the 15-minute, you dick. Break it. Okay, where are you? Think. $63 EMA has to break to the 200 SMA. Then watch where the VWAP is. Yeah, VWAP would be easy to break. Ready, set, go. We're squeezing with divergence. Rivian pulled back. Now watch this 1463 area. Okay, think about the news that it had. It's not something that's going to make the stock run, but it is something that's going to make the stock pop. Okay, I'm going to look at the SPX too. Blake. Tesla new high. Rivian did pull back to that support. Tesla delivery results are coming. Mira is at 1948. ARM is up 91 cents, 93. Home Depot, Netflix is up, and Adobe. The worst losers are UAL, and we had CCL. Where's CCL on here? I gotta put CCL. Meta down $4. I need SPY to break out. Exit idea is going to be the 200 SMA. We got a midlife crisis right here, though, at 544.16. $544.17. Market not all that bullish right yet. How's it? Pump GME doing? A little spike on GME. Let's go. Blake it. NVIDIA pop. Nice little pullback this morning. It's got to break the VWAP. Come on now. Tesla's looking real nice. Good call. So we had a nice little flag on Tesla. Include Micron, MU, and Nike. Oh boy, I hope Nike bounces. That's my long I'm in. And I got a long way out on this one. Oh, Not good now. Huh. What happened? Shit. Come on, Spy, break it. We got a symmetrical flag at open. Any YouTubes in Spy with me? If we can build this body above this here 63, there's your pivot point 544.17 and your resistance at 544.60, a little bit below it. I got plenty of these contracts right now. I could sell right now and be up 140. Sophie. Bearish divergence on the MACD and the SPY. Good job there, Yoko. You'll get a snake. Fuck. That's not right. What's the deal here? I'm okay. Calm down. Oh, this is bullshit. That is so weird. I can't get it right. 113. Wow, this is strange. Wow. Okay, calm down, Jim. This computer can't be fucked up. Wow, what's going on here? Wow, that was strange. Let's get it. Okay, profit. Take profit. Man, that really sucked. I was having problems with my keys and I'm going, no. Thank you, everybody. I was having trouble with my keys. I couldn't. Ugh. I don't know what was going on there. I think I need to get me some new batteries. I'm just going to have to buy me a whole new damn keyboard. I'm going to do it. I can't have, Jimmy does not like to be delayed. That's a pretty good trade. If I can do that every day, it's $400 in the pocket plus 540. So people on YouTube, my strategy is chart patterns, symmetrical flag, and when you're in the heat, if anybody knows anything about baseball, there's a sweet spot on the bat. There's the same thing as there's a sweet spot in every pattern. And it comes to 3 and 4. And if you see a 5, you might take a nosedive. So I'm using these moving averages as I go on the way up to try to find resistance levels. And I use the 1 minute to scalp because I want to see them candlesticks and see if they act bullish or not. And we had 1, 2, 3 right here at open. So I was more or less going to jump right into the trade. And I didn't hesitate. And then when we dipped a little bit, I went ahead and added. But 1, 2, 3, 1, 2, 3, boom. And my goal was to break the 63 EMA and to hit the 200 SMA. Now, if we break the 200, we could be moving up to higher levels. You're welcome, Jay. It don't take, this is called my retirement strategy. When I get older, I might not be able to be as sharp as I am right now or the way I used to be. So might not have the energy to sit here all day. I can get in and out of these trades during that first hour and a half and be done with the day. And come and take the same trade again next day and the next day and the next day. Don't forget to look in the content if you feel like donating to my cause to take a vacation in September. YouTubers. I want to go to a real nice resort this time. And with your help, I can do it. That was kind of tense. That was definitely tense. So also said that SPX looked good. Same kind of flag. You got a symmetrical flag. 1, 2, 3, 4. Boom. 1, 2. McDonald's. Good call on Tesla, Yoko. A squad member down, one more to go. Uh-oh. What happened? Randy? Are you chilling? Oh. Good deal. Now I know what you're saying. And they got a dumber ass in taking his place. I mean, they get up there and ballerina on stage like, I'm going, what? This ain't no frickin' rock concert, man. The guy was hateful. I'd never vote for an idiot like that. So we came back and touched the 63 and the VWAP. Now I tell SPY traders to keep an eye, or any kind of trader, or any trade you're in, if you're scalping, to have that VWAP chart visible. Apple's got a flag. Thank you, Jay. SPY's still down 57 cents. We got SMCI, don't look like it's moving much. We got to see if we can get a pullback on it. Carvana, golly. What a run for Carvana. That's unbelievable. That's just got to be a pure 100% pump. The 545s are now back to 120. We hit the 200 SMA. That's how you do it. Do I get a good grade, Magnificent? Makeup grade? Mara boom. Mike's all over Mara. 127. Mike says the SPX is coming into the overhead resistance. Now, what do we mean by overhead resistance? Is that what you asked me? I'll show you. I don't think Mike will mind me using this chart. See that trend line? That's your overhead resistance. The SPX, I've got my overhead resistance is right here. I got two of them. I got one that's on the bodies of the candle, and then we have the other one that's on the wick. Now, this is the 1 hour time frame, and your 50 SMA matches up with the overhead resistance. So we got to break the bodies, and then once we break the body, we should be able to pile up to that there overhead resistance. Both of them are, I got both of them on there just to test. In case I'm looking good and I want to get out of it. Now, Apple is beauty today so far. Donald is down. I'm not feeling too much right now, market-wise. Let's see what Schwab has to say. Now, Schwab nailed NVIDIA and FedEx yesterday. Now we got, what is it, Nike and earnings, Nike and what? What are they? I said them earlier. You're welcome, Yaringa. Very nice. Got a nice anonymous tip today. Thank you. I'm going to match whatever we get. Right now I've got 200. So I'm up to 475.
Kind of ailing from a slower
MU.
cycle of devices.
Nike and
Not
MU.
need for basic memory parts. So this is really like part of, I mean, this is where the rubber meets the road. The stock has been trading based on a massive inflection. They've got to prove that out.
Fuck.
Yeah, absolutely. I mean, I think the things that we certainly see going in the favor of this company, right, is that, yes, there's been some disruptions in production. We saw that with the April earthquake in Taiwan, but average selling prices across most of what they sell are coming in fairly high, which puts them above expectations. This market, and we know it's cyclical, but right now it's going to be on the upswing. There's a growing demand for that high bandwidth memory. Their Q3 performance is going to likely be positively impacted from that demand. Data centers with AI using large language models are all using GPUs. That's going to boost the Micron revenues as well. And if we think about the AI PC and smartphone market, that needs more DRAM than some of the older devices. So there continues to be a supply-demand improvement there on NAND and DRAM. Those selling prices in the third quarter are going to be key to watch. Now, there are some concerns. As I mentioned, that Taiwan earthquake, what sort of impacts we're going to see from that. Softer spending and, on personal computers and smartphones, that could certainly be a headwind as well. But so far, everyone seems pretty positive. Micron expects that the high bandwidth memory market is going to be, multi-billion-dollar business by 2025, with over 50% of PCs being AI enabled.
Okay. All right, that's important too, because we saw some of the excitement around Best Buy and the PC trade, and I do think that's a key element of this, where there's going to be a whole AI conversation, but it is, for Micron, more closely linked to a personal device and an upgrade cycle conversation than it is for NVIDIA. That's a really big difference, is because we've already seen the massive demand from the hyperscalers to buy up all these NVIDIA chips to make sure they can create all these tools, whereas Micron is getting a little bit more speculative in the camp of needing to see products come to market that are very successful, because Micron does connect to the product side more from a consumer perspective. I know they're going to provide a bunch of memory for the data centers as well, and that's where the major growth is going to be, but there is still a cyclical connection to this company that's going to have to be borne out through successful products that are going to be sold.
Yeah, absolutely. I mean, you think about the hyperscalers, and you think about the companies like Microsoft, Google, Amazon, Meta, they are buying up all of that bandwidth memory, most of it that's been produced, and there's a shortage of it now. And of course, you think about NVIDIA, which has really been the highlighted company of this AI, race. That high bandwidth memory is needed for NVIDIA's platform to work properly as well. The DRAM and NAND side, which is more the PC side that we're talking about, typical AI PC is going to take about 15% more DRAM memory. Demand for solid-state disk, which is what NAND memory runs on, that is high as well. And that pricing is particularly high with this demand, which is something that we could really see push these earnings up.
Okay. All right. Thanks, Jeff. Appreciate the analysis. Let's do some trading. And let's go to Mr. Scott Bauer, CEO of Proper Trading Academy, looking at the shares.
Nike could rip? Well, I hope so.
This one's going to be fun, and it's really our only fundamental AI event of the week, so it feels like it could be a huge deal for the market, too, actually.
It will be, Oliver, and I really can't believe the expected move that is priced in here. I mean, it's not just over 10%, it's about 14%. So that move, which is obviously in either direction, up or down, would
Come on,
take
you
us to
beach.
some pretty significant points in Micron technically both on the upside and the downside. So I'm
Oh,
looking
magnificent.
at like that 160 to 162 area on the upside. I'm looking at 122-ish on the downside. I think those are both really.
Now, I'm in a shoe kick right now. I've spent a little bit of money on shoes, but I don't own a Nike and I never have. And I'm thinking about just having a pair to look at. Yes, they are woke. And I did try out the new Nike shoes in this outfit. So I want you to tell me what you think of it. Those were back in my tranny days. And for people on YouTube that are questioning if I'm a tranny or not, I was once.
Whoa, transvestite, back off!
Oh, gosh. Oh. Have me another tomato tartare here soon. I feel like I just want to, I can't wait for my vacation. I really can't. I just want to lay down and not do nothing for 3 days. Jimmy might have gotten a little too high on his little resistance level. This could be adjusted. Let's get 140 out of these calls. Come on, baby. CNBC is so far out of touch. I couldn't take much of it this morning. Oh, we got to get Biden to win. How can he lower gas prices? It's like, where in the frick have you been the last 3 years? I'm liking this. Come on. FFIE. Woo! They're going to regain NASDAQ compliance. So they got to get it up above $1. They are going to manipulate. I still have a few SPY. Yes, Randy. As long as we stay above the 200, if we go down to 544.17, don't hold, I'll get out of it. That's my stop. And I sold a lot. I don't have many left, but I have a few. Randy. But the market's going to slow down here another half hour. So we got to hurry up and get up here and shoot it. Blake it. I don't know. I don't know if you should get back in or not. Home sales have dropped. Come on, break it. Oh, you swing the spy. You got balls. Randy has balls. We are going to get there. Oh, yeah. Take it to the limit one more time, baby. Don't be shy. That's my battle cry. See how they got out of that trade on that spike? They know we're getting to the edge. It's going to take a big spender to come in here. she's dropping. It's that time of the day where they start to slow down a little bit. This is number 4. This is number 3. So this is a sweet spot. Now it's time to move up. This is a rising wedge, which is bearish.
To 40 something 737s a month, and they said we'll try, and Spirit couldn't. But Boeing said, send us the ones you have as soon as you have them, and you can keep working on them. And that, I would argue, violated one of the golden rules of manufacturing, which is not to kind of break your process.
Yeah.
And then the planes started crashing, and COVID happened. And so essentially, I think they're unwinding that whole mess now, years later.
Okay. I think it's a great discussion for what seems to be, for them, the most imminent kind of step towards a solution is the Spirit AeroSystems deal. So we're getting a lot of headlines. When do you think we would know, what is the timeline?
I think we'll know soon here, a couple weeks. But Airbus just mentioned they think the deal will close by the end of the year.
Okay. Nick, great stuff. Appreciate your time.
Thank you.
Thank you very much. Nicholas Owens, Industrials Equity Analyst at Morningstar, looking for Boeing shares to have a more fair value above $200 down here at the lows. Thanks, Nick. When we come back, we're going to talk some stock names, investing, and
Yeah, some kind of conference.
strategy as we look at a highly concentrated market, of course, returning that way today. NVIDIA and Apple doing legwork for the NASDAQ. We're in better shape than we were at the opening bell. We've got more ahead from the Morningstar Investment Conference coming up next. That's good stuff. Thank you.
I was born on the south side of Chicago. It has been a long road, but now I'm working
NVIDIA double bottom.
to help people understand the world through their lens and invest accordingly. You can call us Christmas Eve at 4 o'clock in the morning. We're gonna always make sure that you have all of the financial tools.
NVIDIA double bottom. I gotta get me something. Oh, there we go. Amazon popped. Meta had a new high, and so did Apple. They definitely want to broaden the market out.
That we're going to see a soft landing. You know, the anecdotal evidence we're getting from companies suggests that we are seeing enough weakening at the margin in the economy to get the Fed to maybe, you know, start thinking about cuts. It feels like the inflation data, it's mixed, but it feels like it's getting a little better. So I think in a soft landing scenario, we got a lot of opportunities out there for growth stocks in particular, because obviously lower rates favors companies that have long sustainable growth in earnings. So definitely see opportunities if we get the soft landing environment. I mean, that's a great backdrop for growth equities.
How do you define that? Because in some ways you could argue we've been soft landing for months, right? We had so many scares. We're in like the longest
I'm gonna say that guy had a toupee on.
without any real recession. So at
So
this
he's just
point,
trying to make his hair look the best he can.
without a big drop in employment, or how do we define it?
So I think a soft landing is where we see the short end of the curve come down, obviously, and we get a more normalized yield curve. And we see that the economy, it's slowing at the margin enough to maybe nip inflation in the bud, but not slowing too much where, you know, potentially we see earnings growth at risk. And remember, in the scenario where the economy is slowing a little bit and interest rates are low, companies that have secular drivers, you know, driving their growth, that yes, of course, are dependent on the economy to a certain degree, but also have, you know, powerful trends behind them, they're going to continue to grow, and they're probably going to get better valuations as they grow faster than the rest of the market.
That's pretty much where we're at with NVIDIA and the market cap concentration, right? I mean, we could basically just say that's because that's where the growth is. I mean, it seems like a pretty reasonable thing what the market has been doing.
Yeah, but there are other areas of growth besides AI, right? And look, AI is a very powerful trend. At Janice Henderson, we're you know, as we speak, trying to figure out how to implement it for our benefit. But we've got a lot of other trends out there in healthcare and biotech. You know, we've got this new class of drugs, the GLP-1 inhibitors, that are game changers in terms of helping people lose weight and get rid of all the negative associations with being obese. You know, cardiovascular, renal. So, you know, that's a huge trend. And yes, you know, Eli Lilly's done very well, and we love the stock. But, you know, there are a lot of other areas within healthcare. Travel and leisure. I mean, I don't know about you, but the planes are full every time I'm on them. The hotels are full. Consumers.
We just talked Boeing can barely get the planes out. Airbus is having trouble too. Southwest just had to cut their guidance.
Yeah, well, but the demand is there, and you know, Southwest, I think it's more of a unique situation to them. But in general, demand is there. People are flying. People are staying at hotels. So, you know, we like companies like Hilton Hotels, Booking.com, and definitely, you know, anything in the travel and leisure space, because the consumer is still spending. They may not be spending as much on, you know, washing machines and, you know, flat screen TVs.
But they're going to Walmart.
But they're going to Walmart, and they're getting on planes, and they're going everywhere. And it's not only in the U.S., also in Europe. I mean, I think Europe is being overrun by Americans as we speak. So anybody that plays into the travel segment, it could be the hotels, it could be the airlines, it could be MasterCard, that really benefits from cross-border charges. When Americans use their MasterCard in Europe, it's very high margin business. So a lot of ways to play that theme. But we like that. We like healthcare. We like the payment space. A lot of areas outside of AI and the Mag 7.
I love those specific examples. When it gets to the more cyclical, kind of core economically sensitive stuff, I haven't heard much mention about banks, commodity-linked sort of materials or industrial themes. We were talking to home builders, which have been looking pretty soft. Regional banks been looking pretty soft again. Do you dabble in any of the stuff that really needs the economy to be functioning at high power?
We do. But again, as you mentioned, they're economically sensitive, and so you've got to pay a lot more attention to the macroeconomy. And at the end of the day, we think what we're good at Janus Henderson is identifying individual stocks and companies that are going to outperform their peers and the rest of the market. We certainly have views on the economy and the economic cycle, and we absolutely play in those stocks. But your timing's got to be good, and you need the macro to support you. So yes, definitely a big part of our portfolio. But we always tend to prefer companies where there's a secular growth driver, and the economy is a bonus, not necessarily the end-all, be-all.
I like that point. I think that's a good point that you make. Looking for secular growth, having the economy as a bonus. The last thing, though, is thinking about timing. From here, basically, to the end of the year. We've got an election in November. Looks like the Fed can't go till September. Our economic data has been missing. The economic surprise rate is like the lowest it's been in a year. Is it a potential soft point until we start getting the presidential cycle and the cuts, like September, October? Could we be in for some weakness over the next couple months?
It's hard to predict short-term moves in the market, but look, I think the market will anticipate the Fed's actual cuts. So if the data comes out, the inflation and growth GDP data comes out and suggests that a cut is justifiable given the data, and the Fed has always said they're data-driven, the market's going to react to that, even if the actual cut doesn't happen until September or later.
Watching the SPY here. We're at a double bottom right now out of the wedge.
Remember, the Fed talks about a 2% inflation target.
So remember, YouTubers, this is called a rising wedge, and that's a bearish. They can break out.
I think that gives the Fed a lot of ammunition to cut.
And right now you're at a double bottom here. Triple bottom.
The election, I mean, that is definitely a wild card. Obviously, we're going to get the debate tomorrow night. I think a lot of people are going to be watching that. But, I think leading up to the election and then the way the election actually happens, I can't, people are talking about a contested election.
Right.
And
no guarantees anymore.
That would not be good for the market because the market hates uncertainty. So, you highlight a lot of good points about stuff that we've got to get through between now and the end of the year, but, we still feel pretty good about things.
All right. Mark, fantastic conversation. Thanks so much for the analysis.
Thanks for having me.
Absolutely. Much appreciated. Mark Pinto, head of America's equities at Janus Henderson Investors. All right, great equity to combine with our bond discussion this morning. We've hit all the major asset classes. When we come back, we're going to get some charts, taking a look at a few interesting technicals with the Chart Master team. We'll be right back.
Accelerate your market knowledge and shift your perspective into full gear. Real-time example trades, a full hour of trading insights. I'm Tom White. I'm Kevin Hayes. Catch me on Fast Market, weekdays at noon on the Schwab Network.
Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
#1 broker here for the #1 hitmaker.
Thanks for swinging by, Carl.
No problem. So, what all this for?
This lets me adjust the bass, add more guitar, maybe some drums.
Wow, so many choices.
Yeah, like Schwab. I can get full-service wealth management, advice, invest on my own, and trade on Thinkorswim.
You know, Carl is the only front man you need.
Oh, I gotta take this, Carl. Schwab.
Have a choice in how you invest with Schwab.
Ethan, I'm my favorite client.
Great. I started using Schwab investing themes, so now I can easily invest in trends, like wearable tech.
Trends? All that research sounds exhausting.
Nope. Schwab's technology does the work. So if I spot an opportunity in robotics or pets, I can buy those stocks in a few clicks.
Can't be that easy.
It is with Schwab.
Schwab investing themes. 40 customizable themes up to 25 stocks in just a few clicks.
Welcome back to Morning Trade Live. Let's talk some charts. Let's get technical with the Chart Master team and go into the studio in Chicago. Jimmy Horn and Rick Ducat standing by for some earnings. Hey, let's talk Walgreens first. Jenny, what are we looking for here?
Because I would say it looks brutal over the last several years. You zoom out, I mean, I was looking at a 10-year weekly chart. It is one of the most consistent downtrends I can recall seeing. It's just been this slow churn to the downside. So as far as their expectations for their upcoming report due out tomorrow, earnings are expected to contract another 32% year over year on revenue. That is expected to improve slightly, about 1.5% higher than last year at just shy of $36 billion. Now, when you look at their U.S. retail pharmacy segment, that's expected to drop about 1%, so continuing to lose there. But their U.S. healthcare segment is actually expected to rise another 7.5%. International revenue is also expected to rise about 3%. So we saw a pretty steep loss from the company last quarter as they did report this pretty hefty $6 billion impairment charge related to their investment in Village MD. They've closed about 140 locations of that segment of their business due to financial woes. So all in all, they did already reduce now their expectations for their earnings the rest of this year. That at least helps that the bar is set lower. But Walgreens is a great example of where the bar could be set low and they could continue to disappoint that. And that's what we saw last quarter.
Yeah, it's basically been a trend to your point. All right, so Rick, I mean, the chart, I feel like Jenny just chart mastered it for you there a little bit.
You know, Jenny was absolutely right. The long-term picture is pretty rough. Unfortunately, the short-term picture doesn't really look much better. We're down 50% from our yearly intraday highs, which were about a year ago. The recent price action, we can see that after a initial decline, we had some sideways consolidation, a brief rise. Then we've been trending downward within this wedge-type shape here. Two trend lines converging toward each other, but both pointed down. So now we're in a situation where we're below all three of our moving averages: yellow 21-day, orange 63-day, purple 252-day, exponential moving averages. They're all trending downward. We've been struggling to get above that 21-day yellow line there for several days in a row. We are kind of slipping below it now today. We aren't even making a stab at crossing above it today. So not really very encouraging price action for the bulls here. We can see as well we've got some very clear volume nodes nearby, around 16 and around 18. So those are some key price levels for us to work our way through, either to the upside or the downside here. You know, we're kind of right in the thick of this one near 16 right now. So looking at RSI, our measure of momentum, trending downward here, kind of matching this gradual decline in price here. We've got this red trend line going across the highs, a short-term bounce here as price has recovered somewhat here. We've got RSI rising. Still below the 50 midline though, downward sloping trend line still not invalidated here. So in terms of support and resistance, if we were to keep moving lower, 1462, that is our yearly low here. That's the obvious point to watch for further downside. If we were to keep moving lower, standard deviation channels, blue linear regression line, one standard deviation below that, comes in right here near 1213. So that would be a pretty rough move. So be on the lookout. But to the upside, a confluence right here, 21-day EMA, trend line, and linear regression line, all around 16. And then eventually we've got these highs right here near 1879.
All right, so, and look, I mean, if this thing breaks down, I wouldn't be surprised. If it catches a bid, I probably would be more surprised, but it seems like, you know, the potential when you're just beaten down is kind of, you know, shifted maybe a little bit to where the bar is pretty low, but I mean, to Ginny's point, they always seem to disappoint. Let's talk McCormick. It doesn't look like a much better situation, another staple-centric business that's been under some pressure, Jenny.
Yeah, another frankly disappointing chart. I won't steal Rick's thunder, but I do know as far as their earnings expectations go, they're not expecting any growth. I mean, earnings are expected to contract another 2%. Revenue expected to also decline another 2% on a year-over-year basis. Now, they did earlier this week declare a quarterly dividend of 42 cents per share that's payable on July 22nd. This is why I mentioned this is because this is their 100th year of consecutive dividend payments, which just goes to show, I'd say, the consumer staple nature in which they obviously operate. And to me, this is like the ultimate staple because this is like the staples of the staples. Of course, the parent company.
The staple of the staples.
Which is the brand I most notably know, but all in all, Flavor Solutions expected to contract another 3%. Their overall consumer sales down about 2.2%. There's very little to be excited about here. The only thing maybe that provides some upside is the average analyst price target of these 17 analysts is like $77 a share. That does imply some upside. So it doesn't typically warrant a ton of volatility or even volume on its earnings. I mean, increased volume, no doubt, but this is not going to move the needle by any means. This is that true consumer staple, low vol name.
All right. Hey, Rick, anything spicy in this chart?
Well, it's definitely not quite as bad as Walgreens, but really not great price action for the bulls here. Lengthy decline earlier in the year, bottoming out near 59, then rising here, kind of forming this triangular shape more recently, but then a downside breakout, moving sideways now, centered around the volume profile point of control, the area of heaviest trading near 68. RSI kind of showing a similar triangular shape here. You know, we looked like we were perhaps going to invalidate that downward trend line. We're kind of back within that point now. So support 67 based on these old lows and the low points that we reached earlier and today as well. The high point would be this red line right here, the high point of this range near 70, so between like 67 to 70.
All right, so look, not great charts, but not big companies, so maybe they will come and go without notice, but you know, there could be some potential swinginess, especially for McCormick, because the last two earnings, that's where the gappiness was on the chart. Thanks, Rick, and thanks, Jenny. The Chartmaster team keeping us in touch with the earnings schedule for this week. When we come back, we'll get our market meetup, talk about the session underway, NVIDIA fading back down. We caught a bid in the NASDAQ, but it's having trouble hanging on this morning.
It's all right.
Knock, knock. Number one broker here for the number one hit maker.
Thanks for swinging by, Carl.
We just watched your commercial. Why are you playing it again? Schwab. Got a head and shoulders on the SPX. I'm going to go in there and make my lunch in a second. NVIDIA shareholder meeting today. Hello, Zona. Nicola in KLA is also up. That's interesting. Along with Rivian. Or MBS up $2 and something. Good job on Yoko on Tesla. ARM up again.
On the market, and you're used to the amount of momentum that we've been getting. I think you're rooting for NVIDIA to be the leader rather than Apple. Not that you want to split hairs, but I think you get a more high-octane market when it's NVIDIA out in front instead of Apple.
Well, I agree with that. I think that's so poignant, especially with the growth that NVIDIA has. I mean, if you look at Apple's growth, it's not as exceptional, but I think there's a value proposition for Apple, and maybe from a risk-reward standpoint, it's more compelling, and I think that's what's happening here. I think there's obviously portfolio reallocation occurring as we move into the end of the month, just because of capital appreciation, with NVIDIA being highly concentrated across mutual funds and institutional portfolios. They have to sell. And they're rotating into perhaps the value-oriented tech names like Apple. And I think even from an earnings standpoint, one can make the case that NVIDIA is still cheap, but if you look at price to sales, for instance, it's trading at 40 times sales, where Apple's trading less than 10 times sales. From a value standpoint, I think Apple looks a little bit more compelling, and I think that's what the market is telling us. But there's also, like I said, a massive portfolio reallocation occurring, and I think that's also why we're seeing Apple catch a bid. And if you look across the board too, even companies like Google, you can't really register any 3 or 4 day correction at Google. It's still holding up quite well.
Okay. All right, George, outside of tech today on the calendar, well, we do have those Micron earnings, which I think will be important, but bonds are selling off this morning. The bond move is decent. Tell me what you're looking at for treasuries, because the pop in yields is notable after about a week of doing nothing.
Yeah. Well, yeah, I mean, we're just seeing some oscillations in the bond market, OJ. I think, I think this is from the standpoint of you looking at 10-year treasuries, we're sort of stuck in this trading range between, let's say, 5 and 4 right now, about 4.3 to 4.4%. If you look at the 2-year treasuries right now at around 4.75, that still, is indicative of at least 1 or 2 cuts coming up from the Fed. I think even from the standpoint
of SPY back to 120,
which is expected to be reported on Friday at 2.6%. There's room for the Fed to cut
off this double bottom, pull back to the VWAP
relative to core PC inflation. So again, assuming it comes in line at 2.6, down from 2.8% for last month on a year-over-year basis. So we do have a bond auction today. There's a 5-year Treasury bond auction, so that's going to create perhaps some volatility in the Treasury complex. But overall, I think rates have been relatively stable, considering what we've seen across the board. The economy looks still stable, and the market obviously is pulling back from some of the all-time highs that were printed last week.
Yeah. All right. Well, look, we'll watch to see if bonds shake things up. It doesn't seem like they should. It's not a big move, but with the dollar higher too, it's just kind of applying a little bit of pinch to the market this morning. Thanks, George.
So what time is the bond auction?
All right, thank you for joining Morning Trade Live. I'm going to go check out this conference, see who's here, find some more guests for us. No, we're all booked up. We got a packed show this afternoon and tomorrow, too. Good luck in the trading session. I'll see you for Market on Close, 2 p.m. Chicago time. Have a great day.
Trading at Schwab is now powered by Ameritrade, unlocking the power of Thinkorswim, the award-winning trading platforms. Bring your trades into focus on Thinkorswim desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization. And track market trends with up-to-the-minute news and insights. Trade brilliantly with Schwab.
Get each and every angle, the whole picture. Everything comes full circle on Trading 360. Catch us right here at the New York Stock Exchange on Trading 360, only on Schwab Network.
Accelerate your market knowledge
and shift your perspective into full gear. Real-time example trades, a full hour of trading insights.
I'm Tom White.
I'm Kevin Hayes. Catch me on Fast Market, weekdays at noon. On
Does anybody know what time the bond auction is?
Ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
I'm Nicole Petalini, live from the New York Stock Exchange. Catch me on Schwab Network, available anytime, anywhere, any device, for free. Schwab Network.
Young lady who was mid-30s, a couple of kids, recently went through a divorce. She had a lot of questions when she came in. I watched my mother go through being a single mom. At the end of the day, my mom raised 3.
And me. You just had to throw that in there. Like, which is today. When the fuck's the date at? I'm thinking 1 p.m. One p.m. Eastern time. A little more drama on the video. So NVIDIA's my baby. But the fat cats want to stir it up a little bit. I'm going to say we're going to hold at 123. I'm going to go in there and make my lunch.
Now we want to have that reaffirmed and kind of wrap our arms a little bit more around what that spending looks like for the back half of the
Ooh,
year.
a sneeze.
But there's the other side of it too, because Micron also touches PCs. They also touch the smartphones. We want confirmation there that the much expected AI on device upgrade cycle is that much closer to happening.
Yeah, you're watching inflation closely. I mean, I was saying that, you know, some people are leaving Friday and they may not come in next week, but there's really a big setup Friday. I mean, you have PCE, we have the Russell reconstitution, we had a busy triple witch and rebalancing last Friday here at the stock exchange. I mean, very busy Friday afternoons. Tell me some thoughts on what you're looking for when it comes to the PCE print.
So I'm not exactly overly focused on this. I know folks pay attention to it because it's the Fed's, one of their favorite metrics.
Sure.
I just want to see it confirm what we saw for the May CPI, PPI. But as you pointed out, Nicole, it's next week that really matters because we're going to get a swath of June data. Everything from manufacturing and service PMIs, the ADP employment change report, job cuts, and of course the employment report. That's going to give us a much more updated view on the state of the economy and inflation.
Right. I mean, I'm looking forward to all of those, and I will be here. But I think there's a sense that people are leaving. I mean, because I heard from like you know, the TSA and the bookings from some of the airlines. I mean, they have record bookings that are lining up from June 28th to, you know, through July 8th, really. So there are a lot of people who are going to be traveling, but those in business news really definitely want to watch this. So what do you say to folks who want to put some money to work? What's the advice to them?
Well, a lot of folks are talking about the market highs, right?
Yeah.
I would say most people don't buy the markets, right? They like to buy individual stocks or select ETF strategies. So the simple thing is, look for stocks right now that have great fundamentals, great tailwinds behind them, but you know their RSI levels are maybe they're less than 50, right? Or maybe preferably they're oversold. And we did just that yesterday with the Street Pro portfolio, where we picked up more shares of Builders First Source, BLDR. We like it because we do expect the Fed to start cutting rates late this year, do more in 2025, bringing down mortgage rates, kind of spurring some action in the housing market. But we also note that home builders are giving away incentives. They're concerned about their margins.
Yeah.
We think that is going to help them embrace the value add products that Builders First Source is bringing to market, driving its dollar content.
Watch Spy here.
Yeah, look, those new home sales surprised people today, and real miss overall. And what's interesting is I thought they were...
This is the slow time of the day. I talked about this schedule yesterday. I'll keep talking about it.
The 30-year fixed mortgage rate during May, I think that's the case. We only started our position in Builder for the portfolio middle through June, right? So we got past the Fed meeting. We got that favorable May CPI, PPI report, the good data that the Fed is starting to look forward to. So I would say you're right that the number missed for May new home sales. Right. But from our perspective,
I want to see if we can get back down to the bottom VWAP here and take this trade and run it back up.
People aren't moving out of their homes. They have good mortgage rates. They're too afraid to move out. For new home sales, the builders were sort of working with them on the mortgage, and that's what was moving more so.
Somewhere right around 543.33.
You know, the Magnificent Seven. Any thoughts there? Are there any of those names, or any? Would you consider the group?
well, we own most of them in the portfolio.
Yeah.
So, you know, do we own NVIDIA? Yes. Apple? Yes. Microsoft, Alphabet, Amazon. So we're kind of entrenched there, and we like them all. I think the question is, at what spots do you want to, if you're a new person coming to the story, where do you want to be a buyer? And I think that's the harder question, because like I said, we've owned them for a bit. I think if we see a market pullback through the summer, that might bring some opportunities. Folks were asking specifically about NVIDIA. For those who are more technically inclined, you'll see a gap in the chart around the $95 level. Gaps tend to get filled. They don't always get filled. So that's an area that I would be watching, even though it's 18% lower.
Right. All right, so we'll watch for all of that. Christopher Versace of Tematica, thank you so much for being here. Lots to watch, and I'm glad
You ready to load the boat?
Too. Thank you. Plenty more to come here on Trading 360. Up next, the big three. Restock Street.
Oh, shit.
Somebody just might go to the technical. Sean Kaufman takes us through the trades for Boeing, GLD, that gold ETF, and Netflix.
Here we go. You ready?
Trading 360, Schwab Network.
83 cents, baby. A little early, but I'm gonna. Oh. God darn. Should have got a better deal there. Do. Grab some more at 77. I hit my blue line, wherever that represents.
He's Alex Coffey. I'm Jenny Horn. Join us
Jenny
in
Horn?
Investing.
1 p.m. Eastern.
Is it true that you're horny?
The Schwab now.
She says I'm always horny.
Welcome back to Trading 360. I'm Nicole Pedalides, live on the floor of the New York Stock Exchange. It's time for the Big Three. 3 stocks, 3 charts, 3 trades. Ben Lichtenstein will take us through the charts. Here to take us through the trades, Don Kaufman,
Break it.
of Theo Trade. Glad to see you both. So, some of your thoughts, Don, about the market.
Yeah, right now it looks like, well, effectively tech may have possibly lost some of that mojo that
Oh,
it's had
shut up.
lately. NVIDIA is simply not getting it done, and I'm not just talking about a 3-day sell-off. I mean, yesterday had a rip and rally, but it
Who is this guy?
S&P's substantially higher, like it has, and you're seeing
You're a
some of that
dumbass.
in today's trading session.
All right, so let's get to your first name here. You're not talking tech, you're actually talking Boeing. Some thoughts there?
Boeing sucks.
Yeah, Boeing is, well, that's a challenging chart to look at right now because it's been down, more down, and I'm actually going to hop on trend with this one and put on a bearish trade specific to Boeing. Look, Boeing right now is literally holding on to that like 170 level like it was just grim death, and I know it's got a little bit of
I don't know about this guy.
There's some rough news in the entire industry. I know you guys were just talking about Southwest Airlines. Yesterday we heard from Airbus. We've got warnings all
Average is
over the industry
79,
right now.
not
Again,
77.
it's, suffice to say, a decent time for a bearish trade. With that, this trade's actually going to be out to the July 19th expiration. Again, the July 19th expiration. I'm going to be buying the 172.50 puts, selling the 170 puts. So I'm just a very small $2.50 wide put spread for a 95-cent debit, just predicated on the idea that it is actually going to break through that 170 level in the next few weeks.
All right, let's see what Ben has to say about the chart. Ben?
Yeah, Don's right. We are seeing a little bit of a strength today, a little bit of a lift today, but longer-term weakness continues to be well-defined to the downside here. The bears seem to be in charge. Let's just begin with the first and foremost more granular chart. More intraday type price activity, and then we'll kind of work our way into the bigger picture.
Who are these guys?
Some selling and a little bit of a move higher that's coming to play back above 177 here. But again, this still, from what I'm seeing, although we are testing the upper extreme of this range that we're in right now, we're still just in this bit of a range here, which has been forming around 175. So again, on the short term, weakness coming into play, possibly just providing another sell opportunity as we inch our way higher here, because on the more intermediate term, you're going to see where we start to establish a very bearish type pattern. It's not just that 5-minute candle chart here in the last couple days with the price activity. Now we're going back to, well, when the stock was trading up around 193, that was back in the beginning of June. And you can see on the way down, all the way to 176. Now, Don was talking about how we're kind of...
I'm really having a tough day with this computer.
Level, and you can see how we've tested it a couple times. That establishes our lower extreme of this range that we're in. We've got a well-defined upper extreme around 180. Again, currently balancing around this 176, 175 level, but in a balance,
Come on, you dipshit.
value, no rejection is lower level. Simply put, it does look like the bears are still in charge here. Nicole, I pulled up this longer-term chart. You're going to love this. Remember the day? It was back in, what was it? It was February when my mom sent me a text.
Your mom.
She was like, hey, is now a good time to buy Boeing? And sorry, that's the invitation of my mom, but... And I was like, Mom,
Bad voice, bad voice.
Lower and lower. Let's wait till we take out something significant that was established on the way down. And here you can see well-defined trend lower since that December high of last year. Continued even since then. We were balancing around 210 at the time. Look, 190, 175 is where we're currently balancing. As long as we hold below 190, Don's right. We are trending lower.
Yeah, you know, it's fun when folks get involved and they want to try and pick. I remember one time somebody asking me about Beyond Meat, and it seemed so hot, right, in the trend, and then I said, I don't no, I just don't, I never give stock advice anyway. Yeah, and look what happened to be on me. So yeah, it's hard to see, it's hard to know. Any final thoughts, Don?
Yeah, Ben needs to teach Mom about taking a short position right now, specific to Boeing.
All right. Okay, let's get to gold. Gold, 23.13 a troy ounce. You're looking at the gold ETF, GLD. Some thoughts there?
Yeah, one of the things that actually surprises me, and I know Ben looks at this a huge amount, is there's been incredible strength lately in the dollar, and gold has kind of held its own. Gold is still channeling back and forth. It's breaking down to some degree today, but it's still within that channel. And, in light of actually seeing the strength in the dollar, gold kind of holding its own, I actually want to put on a bullish position because this week we're going to get, obviously, inflation data towards the end of the week. And the slightest sign of inflation, gold's going to rip back to the upside here. And I just think it's opportunistic because gold is actually down specifically today. This trade, I'm going to go all the way out to the August 16th expiration. I'm doing that to just give myself some time. Look, I don't want to gamble purely on
92 cents
coming out later this week. So I am going to give myself some time. I'm going to be buying a 220.
Okay, I'm gonna give a lesson here.
Selling the 225 call. So I'm going to be buying a.
My name's Washboardjim. I once was a transsexual. So we come down. We got 3 black crows right here. So your resistance level to break would be this bottom right here. 10.4. Now you could get out now, and you're up quite a bit. You're at 92 cents. You got all these moving averages in your way. But it's in the slow period of the day right now. And that means everything when you're scalping. To understand what time of the day is it. The scalpers are gone. They're out to lunch. They're at the beach with Uncle Zimmy. So you want to be less risky with your trades. We know we got the bond market coming up. Now we've already pulled back to what I thought was a solid support. But playing the 3 black crows, and you've got that resistance right there. I mean, if we break these moving averages, this thing could really fly. We're at $1 right now. So I'm up more than, well. I mean, this is an exit idea once we hit the 200 SMA, right? Randy? Randy? May your circle be unbroken, my Lord, by and by, yeah. Mike, I don't know what kind of music you listen to, but you need to listen more of me. I gotta do something about my cord. This is really pissing me off. Jimmy knows K-N-O-W Noah. I wonder why that didn't look right. His three black crows. Randy. Jimmy knows his 3 black crows. You have 544.28 as a pivot point. How about 17? I'm going to call the 200 SMA a pivot point. So Jimmy's out a buck. God, there we go. How you doing, John? How you doing? And that was before lunch. That was during my treadmill. Very good job. Very good job, Randy. That's a 50-cent trade right there, Randy. Oh, Mike. Are you going to give Mike an A+? Yoko? Who called it first? That's my question. A baby A. Mike called the trade. Do. He called a 1, 2, 3, huh? Very good, very good. I'm going to tell you a story, Randy. I played in front of 3,000 people one time. And Pepe Gambetta was right behind me.
It's all fake news. It's phony stuff. It didn't happen.
It did happen. So that next day, I told Beppy, I said, hey, I want to name my dog after you. And he said, what? Yeah, I got a dog I named Beppy. I named him after you. So who is this Beppy Gambetta? No, I don't think that's going to be good. I don't like that.
So glad I remembered Uber Eats has office supplies, but I feel like I'm forgetting something else.
That's Beppy Gambetta. He's a flat picker and a half. So now we hit. Hey, did you hit your number there, Yoko? You hit it, did you? Yoko's good. I can only give so many A's away. I can only give so many away. It's a D minus? You gotta be kidding me. YouTube, did you take opportunity of that their call? Hello, Fabian. Now I'm going to go in there and fix my lunch and be back probably. I'm going to do a 10-minute walk on the treadmill and get that out of the way. I've kind of neglected my walks I haven't been, last time I weighed it was 173, and that's a record for me. If I go back 40 years, maybe 45, I could have been 173. I was probably at 173 then. But if I can get to 165, 160, I think my body organs will really appreciate that. And I went and had my blood test done, and I had another girl that masters in blood testing look it over too, and she was quite impressed. So my livers were fine, my kidney was fine, I don't have diabetes. So I think I got on a kick of eating a lot of sodium, and I think that was my issue, salt. I'm not sure. I don't use a lot of salt to begin with, but I went through a period there for about a month where all I wanted to do was just cook canned food and eat a lot of ice cream. And I definitely was dehydrated. I'm the only person in our family that drinks water. And I never drunk the way they do. They soda pop. I haven't had a soda pop in probably a year. But now I'm into tea, and I've got this oolong tea that man, it's a lot easier to taste than that green tea. And it will help me keep from getting breast cancer. So I'm going to go and do my little walk. Now we could probably break out here. We busted past these moving averages and we're retesting. So you got to keep an eye on these candles. That right there is a bullish candle. That's called a long leg doji. As you come out of the snake, type in long legged DOJI. They called it a dragonfly doji. So this is how I got to be good at scalping. I'd look for them candles that come out of the snake. And that's a dragonfly doji. That's an inverted hammer. So that's a strong buy signal for scalping or day trading. If you were on a daily candle or a weekly, and you're coming out of a trend. Called a dragonfly doji. Let's change its color here. Well, that's white. We'll just leave it like it is. I don't want to buy a new keyboard, but I'm going to have to. Good job, team. Mike, good job. Mike called the trade, "How dare you, magnificent."
Thank you very much. That's really nice. Thank you.
Oh. Yeah, no problem. Do you understand that, dude, YouTubers? Dragonfly Doji. For that, I get another tip. Who's going to be the next contestant to donate to my vacation? La 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 la.
Target. Now you have Citi raising the price target on the shares of Shopify. Some of your thoughts and details.
Understood.
Yeah, I mean, if you look at some of the analysts that call on Shopify, they're becoming more constructive on the fact that Shopify is expected to become profitable on a GAAP basis in 2025. So there's quite a bit of momentum happening with the company, and the company essentially is really one-stop shopping for front and back end solutions for small and medium-sized
Mike,
merchants who want to bring their products on an e-commerce basis to the market, and they have affiliate programs with
Is that
major,
the 200
major
SMA on the 1 hour?
stores like Amazon, Target now will bring retail products.
We almost have an ascending triangle, just a little shy of it.
Partnerships with Meta platforms and Pinterest as well. So this is becoming
Snake
a full-fledged
breakout
solutions company, because it's not
of a
just
wedge.
setting up a website and selling. They actually provide fulfillment, merchant services, and even capital finance and payment processing. So it's becoming sort of this all-encompassing e-commerce solutions player in a very competitive landscape. So you look at Citi, they actually raised their target just slightly to 96 from $95.
God, slightly.
Some
The fuck are you
improving
talking
revenue growth
about?
trends coming into the back half of 2024 and improving in 2025, with the other element that I mentioned just a moment ago, including they're expecting GAAP profitability.
We got 3 white soldiers. We missed a breakout.
So
We're at the 9 on the weekly. Shut up.
Profits and the unadjusted profit.
My resistance, he got 90. Mine would be 80. We have a head and shoulders. Okay. We have a head and shoulders. That's a resistance level. I mean, I'd really like to see it hold to 9 on the weekly. Interesting, James. Is it true that you had Farrah Fawcett hanging on your bedroom wall? Yes. Is it true that your girlfriend told you to go ahead and pull it down? Yes. Every time we made love, I'd say, Laura. Jimmy, don't let it close above that 544.8. How come? Oh. Uh-oh. Uh-oh. Jimmy crack corn and I don't care. We're at 110, 112. I just love trading. I'm so passionate about it. Yoko, we have a 1, 2, 3. Do you understand? What would Mike call that? Overhead resistance? Am I right, Mike?
Affirmative.
Yes. Oh, God, which one should I remove? I'm going to remove the wrong one. How dare you? Jimmy likes shop for a swing. Go. Okay. Shall we sell here? Yes or no? Shall we sell? I say we're going to pull back before the bond auction. Think it's ready? 1, 2, 3. Next time you say Farrah Fawcett, I'm going to break up with you, Jim. I'll tell you how tricky I was when I picked up Laura. Her and I went out on the first date. And we pulled over on the side of the dirt road. And I told her I had to step outside and go pee. She was really in love with me. So when I got
It's all fake news. It's phony stuff. It didn't happen.
So when I got back in the car, I started crying. And she all of a sudden started getting close to me and cuddling me. Oh, it's all right, Jim. What happened? And I looked at her and smiled and gave her a big old smooch. There we go, baby.
We choose truth over facts.
VICTORY. I'm up on this contract $50. Am I ready? Push it to the limit. Damn. I'll take 131. Next resistance on 545.45. I want to see a chart. I demand a chart right now, Yoko. I demand a chart. Tonight I'm going to go shopping for a new mouse. Here it is. 5:45:12. I'm taking it. I'm out of here. Time for me to have lunch. Come on, you bitch. That was beautiful. Oh my God, what happened here? Oh no. Oh, I left some on the table. Wow. Oh my gosh. Well, this is my life story. This is all I got to trade. I know you've heard it over and over again. But scalped it here, scalped it there, scalped it everywhere. Yeah, I was paying attention. You're starting to sound like Vegas. Pay attention. I used to hate that. Now I kind of like it. God. You remember that a lot? Pay attention, Jim. Well, I'd have to say that was a beautiful trade. Well, I still love her. Man, that was nice. Well, you want to hear us fight? You do. I got to get my walking in. That was nice. I think I become a master trader. You know, I still have a piece of bologna in my refrigerator that I've been looking at for almost a month and a half.
Fascinating.
I will never eat bologna ever again. Yesterday, I made my first tomato tartare. And the cheese, oh God, $10 for goat cheese. So I'm going to go in there and make a second batch of tartare. And this time I'm going to add some cucumbers in it. And a celery stick. Enjoy it. Don't forget to donate. I mean, I'll be so happy if I can get it up to my goal. Plus, it'd be a little rewarding knowing that I've sat here for every day for 8 hours a day and for 20 years. And I'm probably the only one out of the bunch that we used to trade with that don't charge. Everybody else charges. But I don't. I don't need to. And we'll catch you later. I'm going to go get my thing done. Be back for the bond opens. And we'll predict that one. But here, look at this. Here on the SPY. This is a weekly time frame. I want to point out 3 black crows right there. And we had 2 of them with a dragonfly doji right there. We had 3 more right there. Big bounce up. 3 more right there. That one didn't do too well, but it did bounce. Then we had 3 right here. Now these are all on the weekly. So you see 3 black crows on a weekly. That could be a possible good swing on any stock. That's 3 weeks of selling. That's beautiful, just beautiful. Where'd that trend line come from? Oh, that was this morning. See? One, two, three, and then we pulled back to that 1, 2, 3. That's another reason why I took that trade. So I had 2 confirmations. I actually had 3. The body held that support level. Then you have the 1, 2, 3, 4. Then you have the 3 black crows. 3 black crows on the 1 minute, so I had 3 different reasons to take that trade, plus maybe more if I look at it.
Dollar impact, and so we're keeping our eye out on it, but I wouldn't stress too much on the yen move. I would really kind of focus more on the eurozone, and let's see what the price action is going to be after these elections. That's going to be happening in about a week or 2 weeks from now.
Yeah, Japan's top currency diplomat, he stated that they will take necessary action if they see excessive moves, and this would probably be the second, maybe action that they might have to take over the last couple of months. It hasn't helped much at all. Kev, if you look at some of the data that came out, new home sales, not surprising, we're seeing continued weakness in this space. High mortgage rates are to blame. We've got the 30-year fixed mortgage just below 7%, but it seems like, would you look at that as maybe the canary in the coal mine, maybe that the economy is not as strong as it is, or is it just due to the fact that interest rates are so high and people are just sitting on their hands right now?
Yeah, it's interesting, Tom. And remember, when you talk about mortgages, you talk about home building and things like that. This is, not a good time of the year to be moving, right? April, May, June, that's when you really start to see people moving because it's in between the school years. Now we're getting to that area where, it's a little late in that season. That said, with interest rates, how they've come down, you would think housing would be at least firm here, Tom. So the question is that starting to worry us? Are you starting to see people hesitate? Is the U.S. consumer starting to run a little light on disposable income? I mean, housing, by definition, right now, coming out of May and June, going into July, should be stronger than it is.
Right.
So, yeah, you're right. Some of these, the weakness that we're seeing in some of the housing numbers, a little bit concerning, sure.
Definitely. Yeah, we'll see what plays out. I think they don't like these rates going up at this point. That 30-year fixed is now above 7% with the jump that we're seeing in yields. But Kev, if you look at one area of the market that's doing well today, that's FedEx, popping 14% to 3-year highs today. You know what, Kevin, I was looking at the numbers. It didn't blow me away. Was it just that the bar was so low? This stock was basically flat going into these earnings, and this is almost like a relief rally in one aspect, right?
Yeah, definitely. I mean, the majority of these gains. Oh, sorry. Go ahead.
Tom, sorry. I think you meant that for me. I'm not sure, but it looks like they gave you a lot of reasons to be excited about FedEx, and the stock has been beat up for a while. The stock buyback, the efficiencies that are starting to hit the bottom line, all those are good news. I'll let Kev join in here as well, but part of this is relief, Tom, but buying back stock isn't bad either, so they're making a bet on themselves also, and like I said, the efficiencies are starting to kick in here.
Yeah, that's, I think, the main driver. KG, jump in here on this one because, as I stated, I wasn't blown away by the numbers. I was pretty surprised by that move to the upside.
Yeah, once again, I'll second what Kevin Hinks just said here. It's definitely the cost-cutting side of it, reducing the expenses, and the acceleration of their initiative, their long-term initiative, this drive initiative, in order to restructure their business. And I think that's really has taken the street off guard here, if you look at it. When you're kind of looking at the volume growth, it's still lackluster. I think ground is the only one that actually saw maybe some incremental increases when it comes to volume or transactional volume. But overall, everything is expense side. I think there was a very low bar going into this particular report, but just be mindful and be cautious. The initiatives that they are putting forth to reduce expenses, there's a lot of variability for this. So analysts really cannot keep up with these adjusted earnings per share estimates because they might be pulling forward billions of dollars in savings in a quarter. They may be pushing some back. And that's why you see this erratic behavior when it comes to price over the last 3 to 4 quarters. Just be mindful of that. I'm not sure if it's really smooth sailing. This is not a top-line growth story right now. It's all about bottom line or basically managing those expenses. And until we get that top-line number and we get the volume numbers to kind of coincide with this price action move or the continued move to the upside, that's when this is going to be a huge tailwind when it comes to FedEx as well as UPS.
Yeah, and if we see any continued weakness out of the consumer, if they start pulling back even more as far as purchases,
We got a
maybe
bull
that
flag
can negatively impact them.
forming
So these cost-cutting measures working out
on SPY.
for FedEx. Kevin Hinks, let's go to Rivian, popping about 25% today. It's off its session. It was up over 50% on this news of the investment that we saw from Volkswagen. Kevin, you've got a EV startup that loses money on every vehicle they sell. They got a lot of debt, and then you've got Volkswagen, who is not doing well compared to other OEMs in the auto space. And this tie-up, yeah, it helped Rivian, but what's your take here on this and the pop that we're seeing in the shares?
Yeah, first thing that jumped out at me, Tom, strange bedfellows.
Yeah.
Volkswagen investing in Rivian. It just seems like two companies coming from two different areas, right? Rivian has been targeting more luxury vehicles, the big truck, and Volkswagen never really gets to that luxury level. Their trucks are very nice, their SUVs. So yeah, a little bit of an interesting, kind of a surprising investment by Volkswagen and Rivian. So I'm sure that gives Rivian a little boost. It allows them a little time and breathing. It sounds like they want to kind of move over into the smaller SUVs and get them going. So yeah, an interesting investment there by Volkswagen and Rivian. And like I said, Tom, strange bedfellows.
Yeah, I saw some analyst commentary on it. Some liked it, some thought it was just, saving grace at this point, but we'll see how that works out. Hey, they're based here in Illinois, so I like that portion of it. Let's take a quick break here, guys. When we come back, we're going to get into a discussion about Micron ahead of their earnings. Stocks popped over 60% so far this year on the need and the demand for memory chips based on those AI chips. So we'll talk about that when we come back. That's up next here on Fast Market.
Every morning, every trade, always live. Expert earnings analysis, in-depth technical insights on every changing trend in markets. Available anytime, anywhere, on any device for free. Welcome to Morning Trade Live on the Schwab Network. I'm Oliver Rennick. Knock, knock. Number one broker here for the number one hitmaker.
Thanks for swinging by, Carl.
No problem. So, what are all those for?
This lets me adjust the bass, add more guitar, maybe some drums.
Wow, so many choices.
Yeah, like Schwab. I can get full-service wealth management, advice, invest on my own, and trade on Thinkorswim.
You know Carl is the only front man you need.
Oh, I gotta take this girl. Schwab.
Have a choice in how you invest with Schwab.
I like that area. I think there is potential. Right now, as we speak, I think we are in absolutely a pullback on Bitcoin. I think you could see it to go to its support area, which is in the 60,000, and then possibly base there for a while. And then long term, still bullish, where it could go up to 70-some-odd thousand, which is its resistance level. If it breaks through there, I think it can run, but again, only for money that you can afford to lose.
Yeah, this week on Market Overtime, here from Susie Orman, host of the Women in Money podcast. From escaping debt to her Bitcoin investing thesis, Orman offers her unique market perspective. Investors are going to gain valuable insights from that longtime market legend. Tune in all week, 4:30 p.m. Eastern Time, right here on the Schwab Network. All right, let's get into a discussion about earnings. We've got Micron reporting after the close. I think this is the big name for the week, just based on how much memory is needed for these AI cards that are in these servers. Let's bring in Caroline Wood, Senior Markets Correspondent here. Caroline, when you look at this one, expectations are pretty big. Implied volatility levels gaining. The stock's just off all-time highs going into this report. But I was just reading through the amount of memory needed for these AI cards, individual cards, and then the thousands of them within just one server is pretty massive. I'm hearing anywhere from 4 to 6 times more memory needed for this type of server as opposed to other servers. So it looks pretty good for Micron going into earnings, right?
Hey there, Tom. Yes, I would say so. It's certainly a beneficiary of demand for AI continuing to tick higher, due in large part because it does require so much memory, both on the server side, but also on the AI PC and AI-capable smartphone side, that we're starting to see more of those come to market as well. So that's one reason that Micron could stand to benefit. Also, just the uptick that we've been seeing, the improving demand for PCs and smartphones, and the reduction in inventories that we've been seeing on the industrial and automotive side as well. So quite a few things working for Micron, but as you said, this is a stock that's already seen a really impressive run higher. It's up 13% this month, 13.6% this month, 66% so far this year, and then you broaden it out to 1 year, it's up 113%. Right now. So the bar is high. In terms of the numbers that we're actually looking for, adjusted EPS of 50 cents on revenue of $6.7 billion. So analysts largely expecting a beat here, but also expecting a raise in terms of outlook. Given how far shares have run, I think that in order to see this stock pop higher, we're probably going to need a beat and raise. And analysts are bullish on that because of demand and also pricing strength that Micron has. So in terms of what Wall Street's looking for the current quarter, consensus calls for $7.59 billion in revenue. That would be up 89% year over year. Adjusted profit of $1.02. And then for the fiscal year, which ends in August, the consensus is for revenue of $37.3 billion, up 50%, with a profit of $9.01 per share. So keep that in mind when those numbers come out after the bell today. For fiscal year 2025 revenue, that's expected to be up 16%, $43.1 billion, with a profit of $12.04 per share. So outlook going to be very key for this name. Shares are actually under pressure this morning heading into this report, but they've turned positive, and now we're up about 0.7% right now, already up about 2% this week. So the enthusiasm continues. We just have to see if Micron will deliver.
Caroline, this stock is a leader in memory, and memory is critical to AI. That being said, this is also a company that's very cyclical, and we are currently in the midst of a massive upcycle in terms of everything having to do with memory. High bandwidth memory is like the new horizon for these companies. But the question is, has this company already priced in most of the gains that they're talking about? And number two, this stock is down today because frankly Nvidia's down. And does every stock in this universe just follow Nvidia?
Well, actually, it turned higher, Kev. I'm just taking a look in terms of Nvidia because Nvidia's been bouncing back and forth. Nvidia's still lower, down by about 1.5%, but Micron has turned positive, so it's going rogue here, up about 0.8%. In terms of what's priced in, I think the fact that analysts are hiking price targets heading into this report shows that they do see more upside. And you mentioned that high bandwidth memory. There was an analyst over at Wolf Research that hiked their price target to $200 per share because they think eventually earnings will get to $20 per share, due in large part for HBM demand ticking higher, and then prices for DRAM going along with it. So that's the reason for their bullishness. So Micron currently trading at $142 a share. $200 a share implies quite a bit of upside. We've also seen Wells Fargo hike their price target to $190. Recently, Citi's up to $175, calling Micron a top pick, and then Barrick was up to $172. Those were some of the most recent price target hikes that I've seen. In terms of how much more there is to run overall, the median price target is 158, so that implies about, what, 12% upside from here, maybe a little less. So still room to run, but not necessarily as impressive of gains as we've seen year to date. That being said, as we've seen with a lot of these analysts, sometimes they have to play catch up. If we do in fact see a beat and raise, let's see. But given how far it's run, if they disappoint at all or don't blow the numbers out of the water, we could see these green arrows turn to red.
For sure. All right. Thanks to Caroline Woods, senior markets correspondent here, breaking down Micron into earnings. Let's bring KG back in here. Cav, when you look at this one, you know, the option market's pricing in a pretty hefty 12% move in the shares, over $17, nearly $17.50. So the bar's really high on this one, right? But at the same time, if you look at those comparables, Kevin mentioned earlier the fact that the bar was low last year because it's a seasonal type product. But now the partnership with NVIDIA moving forward, I mean, even if they just meet on expectations, the guidance might be the key here, right?
I believe so, and actually, if you kind of look at it, everybody's focusing on AI, and rightfully so. It's a growing business. Their high bandwidth memory business last quarter really did shock the street when it came to growth. But if you're looking at their core business, the DRAM, and if you're looking at the NAND chip segment that is out there, the analysts are really getting bullish that the customers or their customer base has kind of washed out of their existing inventory, and that Micron actually might have pricing power when it comes to those particular chips, especially when you're looking at handset and embedded systems. If that's going to be the case, that's going to be a tailwind for them on the back end of this, along with the AI story. And I have not seen a semiconductor stock yet fade after talking about artificial intelligence. And so there could be a little bit of a catch-up trade here. And then if you're looking at a trade, just an example trade, if we do have kind of these stars aligning and the stock can rip to the upside here, knowing that we have that implied volatility in the market, you could look at doing a bull call spread and then also selling a out of the money put spread in order to finance that. So that's really kind of the example that I have set up right now, looking at the June 28th 145, 155 call spread, and then selling the June 28th 120 put spread, trying to do this for a debit of around $2.40, with the max profit being $760. That's if that call spread does max out. The stock stays above that short call level, which is $155 at the time of expiration. Max loss would be $12,240. That's if the stock goes to zero, and then obviously the debit that I'm paying for with a break even of $147.40. Risk reward ratio around 3 to 1. Obviously looking for an upside move. If you don't get that upside move, there's going to be a lot of theta decay on this trade too, so keep that in mind. But that short put, that 120 short put, if we do get a pullback and you're looking for a longer term position in the portfolio, that could also be your entry point if somebody were to perceive value at that particular level.
All right, let's break this one down. As Kevin mentioned, June 28th weekly cycle, so just a couple days till expiration, really short-term positioning on this example. You're going to buy the 145 strike call just out of the money to the upside, sell the 155 strike call, so there's that bullish $10 wide call vertical. Then you're offsetting some of the costs on that by selling the June 28th weekly 120 strike put, net debit of about $2.40. That's your risk between 145 and 120, right? So you see it flatten out there. Break even to the upside, 147.40, so you're going to need a move to the upside within that one standard deviation range. But Kev, when you look at this trade, Kevin, KG's financing the long call vertical by selling a downside put, but you, as he mentioned, you got quite a bit of risk if the stock were to somehow go to zero. But on this type of strategy, Kev, you've got to be comfortable owning the shares if you're going to hold that short put through expiration. The stock falls below 120, right?
Yeah, what Kevin's done here is once he establishes the direction he's looking for, in this case bullish, he's got a risk-defined strategy on the upside, buying the call vertical, combined with the cash-secured put. So there's some room in between. He's long and out of the money call vertical, 145, 155. There's his upside. Now, on the downside, you've got some room now between where the stock is right now and where that short put is. So you're financing this call vertical using it pretty far out of the money put, but everything is accelerated. Everything is higher implied volatility. So 270 for a spread that could go to $10. Right around $10 is, you know, about 3.5 times your money. So, like I said, once you've established the direction you're looking for, using one spread or one option to finance the other is what we look at on a daily basis, Tom.
Yeah, and KG, you know, I noticed that the 120 put that you're selling in this strategy, that's 22 bucks out of the money to the downside, so it's outside that one standard deviation range also. And then I looked on the flip side, if you were to just buy the call vertical, the 145.55 that's embedded in this customized trade, that's going to cost you about $350. So you need a little bit more to the upside to get above the break even. But offsetting some of your costs on this might not be a bad idea if you are bullish on this one, right?
Exactly, yeah. I think the implied move right now is around $18, so this one's around $20 to $25 out of the money. So you're exactly right. And then the hope is that the market makers are correct, and even if we do see a miss and it's below or lower than that 18% implied move or $18 implied move, that there's still going to be some theta decay and being able to offset this particular position. The other side too, if you're looking at the upside, you're looking at an area of resistance of around $160. I think that's the recent high here. So trying not to really hit that new all-time high, trying to give yourself a little bit of room, but also looking at that 120 level to the downside as an area to try to, hopefully the stock doesn't go to that level. Hopefully the market makers have it right. And then from a technical standpoint, there is a support level sitting at $120 as well. So structurally, fundamentally, as well as technically, this is why this trade is built out in the way that it is, to try to get some upside potential while also trying to reduce some costs.
Yep, 157 all-time high that we hit just at the end of last week. Implied volatility levels near 52-week highs going into this report. This is a big one after the close. All right, thanks to Kevin Green, Senior Markets Correspondent, for joining us, breaking down markets and Micron. But coming up after the break, we're switching it up a little bit. Kevin and I are going to be joined by the chart master, Rick DeCat. He's taking a look at the technicals on Google parent Alphabet, which is at all-time highs again this week. Shocker there. Stick around. Fast Markets coming right back.
Wrap up the trading day with me, Oliver Rennick, for the biggest earnings coverage, 3 p.m. Eastern. It's Market on Close. No place better than the Schwab Network.
Trading at Schwab is now powered by Ameritrade, unlocking the power of Thinkorswim, the award-winning trading platforms. Bring your trades into focus on Thinkorswim Desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization, and track market trends with up-to-the-minute news and insights. Trade brilliantly with Schwab.
I remember when I first started flying and we would experience turbulence, I would watch the flight attendants. If they're not nervous, then I'm not going to be nervous. Financially, I'm the flight attendant in that situation. The relief that comes over people once they know they've got a guide to help them through, I definitely feel privileged to be in that position.
Welcome back to Fast Market here on the Schwab Network. It's time for our technical section. We're pushing aside Lightfolio today, but we're going to take a look at some technicals on Google Alphabet, hitting a fresh all-time high today. For that, we're going to bring in chart master. That's going to be Rick DeCat. Rick, welcome to the show. This is a good segment, I think. We love Lightfolio, but I kind of wanted to discuss Google Alphabet just because it's gone so so high so far this year, hitting all-time highs. What are you seeing on the technicals? Can this run continue? Because it's like any of the other Magnificent Seven, they continue to move to the upside.
You know, Tom, that's one of the tricky parts of trading, because just because something is high doesn't mean it can't keep going higher. So when you're in this situation where you're finding a stock is at all-time highs, you might be tempted to say, okay, we're due for some kind of pullback here, but it could continue. You could get burned pretty badly here. So there's some tricks we can use to try to assess this move here. So when we start looking at the chart here, we can see, for starters, that we have cleared above that previous resistance area, that green line representing our old highs there, and we have cleared above all three of our moving averages. We far outpaced them. Our yellow 21-day, orange 63-day, purple 252-day exponential moving averages, we've left them in the dust. We're just moving beyond this level now. However, I have some question marks about this chart right now. You may see on the chart we've got that thick, solid blue line. That's our linear regression line, our line of best fit based on closing prices for the year. From there, we can use standard deviation channels, which are one standard deviation to the upside and the downside to create those channels. Those are our yellow lines there. Then the +2 would be our orange lines to the upside and the downside as well. So you may notice now we are right on the money near that +1 standard deviation channel. So this could be a potential resistance area that price needs to work through before we can continue. This could be a consolidation point or even a reversal point. And I'm not saying that's guaranteed to play out. These aren't a crystal ball that tells you exactly what price is going to do. Rather, based on our own price history, we can tell that price is already at a relatively extreme point based on this study here. So when we couple that with looking at the RSI, our measure of momentum, we can see that momentum is actually trending downward for quite a while here. And we can see that there's a little bit of bearish divergence here. We have the point where the RSI was at during our last peak in price. You can see that line extends to the downside now. We're at a lower point now. So that tells us that momentum is waning. The pace of the gains is slowing down. Does that mean we're due for some kind of crash or something? Absolutely not. That's not really what we're saying here. What we are saying, though, is like I said, the rate of growth is starting to slow a little bit. When you couple that with the fact that we're near a potential resistance point, that could be, a sign that we could be in for some kind of slowdown or consolidation here, Tom.
Hey, Rick, quick question here. When you look from technical analysis basis, right, as a trader, how do you deal with, and Google Alphabet is our example today, we could use this on a lot of names, frankly, in the S&P 500. How do you look at the distance from the 200 and the 50-day moving average, and when do you get worried? Is there a level? Is there a percentage above? When do you start to get concerned about how far so many of these names are away from their moving averages?
That is a key sign that you can look for. The distance from these commonly followed moving averages can be a clue that price is perhaps getting a little overextended at this point. Now, off the top of my head, I'm not sure what the percentage is that we're away from that 200-day simple moving average here. But that's worth noting, especially when you are in a situation where you're moving above all these moving averages. It may make sense to look at a shorter term moving average, perhaps like the 9-day exponential moving average. The exponential moving average reduces some of the lag that's inherent in these types of studies here, because it gives greater weight to the recent price action here. So you may consider using a shorter term moving average to give you some idea of where you might find a supportive area or a buying opportunity, or also a threshold for which it could go below, and that could be the sign of trend change here. So if you do look at this, though, I've got our 252-day EMA in purple there. We're quite far above it at this point. Price has, as I said, far outpaced these longer-term moving averages here. So that would be perhaps one way you could look at this. Look for the shorter-term moving averages for price to break below them, and for the moving averages themselves to start to turn downward here. So that would be a sign of, once again, potential trend change.
Yeah, Rick, I noticed that, especially that RSI, the trend that you had on there, peaked out about 79 in January, and then 74 in April, 72 in May. Now at about about 68, 69 level right now. So that trend, if it continues and holds, this could be a potential top, right?
Yeah, and that's another good point to make here because we've repeatedly had trouble with the RSI trying to push above that 70 level, which represents the overbought area. A move above the overbought area in a trending market is typically regarded as a sign of strength. So that would be a bullish sign, price kind of going into overdrive there. So the fact that it's failed repeatedly to cross above that level is another reason why you could make the argument that perhaps we are due for a little bit of consolidation or perhaps even a pullback.
Yeah, in the overall market too, because we've got some RSIs that are elevated in the S&P 500 and NASDAQ also. Great stuff. Thanks to our chart master, that's Rick DeCat, for joining us, breaking down Google Alphabet. But Kev, let's get into a discussion about potential trades in here in Google Alphabet. I mentioned it's at all-time highs. The stock's up 31% so far this year, 55% from year-ago levels. It's just been a steamroller, but Kevin, maybe it's warranted at this point because of the fact that advertising revenue, which they rely on, they've got 90% of search, in their bag. Maybe it's warranted at this point.
Yeah, advertising revenue is what drives this company among all their products, Tom, and advertising revenue is doing extremely well. Now, there's always the fear of competition and the fact that AWS and Azure are still outperforming them in terms of AI. But Google and their search engine will eventually get there. You have to realize that, and that's probably why this stock is sitting at all-time highs. But the overall market could sell off, Tom, and that's what I look at when I see, it's getting up there. I think it's a 68 on the RSI now, so it's getting back up there among overbought. So, Tom, what I did just for the next 30 days, I went in and bought the 1 month out. I just bought the July 26th 175 put, sold the July 5th next week's 175 put. I paid about $215 for that. I think it's trading about $225 now. It's drifted higher a little bit as the stock has backed off, but this is just one of those short-term plays you can do over the next month. If you think the overall market is overbought, if you've got Google Alphabet in your portfolio, want to do some protection, this is one way to do it where you're, still setting up for a downside. Remember, you've got long Vega, so you would get that. What I like so much about put calendars is on the downside you get the directional play and you get the long Vega if you get any uptick in implied volatility, Tom. So a 1 month or 4 week put calendar in Google Alphabet, Tom, focusing on the 175 line, still $5 above the 50-day moving average.
Yeah, let's break this one. Let's break this one down here. Going out to July 26 weekly options, it's 30 days to expiration. Buying the 175 put, that's about $9 below the current share price in there. And then selling the near-term July 5th weeklies that expire in 9 days, that same 175 put. So basically a 4-week wide or 3-week wide put calendar to the downside. You're paying roughly, we've got $215 debit on it. That's your risk, $215 per spread. But you've got a range of about 182 to the downside, or to the upside, about 169 to the downside. The range that this stock can trade in, you could potentially be profitable on it. And Kevin, when you look at this one, as far as, you don't need a massive move to the downside. You're not expecting this thing to fall out of bed. What you want to happen over the next 30 days is this stock to start grinding lower where you can take advantage of time decay because your short options decay at a faster pace than your long options, but then also the potential ability to roll or adjust that short strike over the next few weeks, right?
Yes, what you want is a grind or a drift towards the 175 strike. There is risk in a calendar spread, even if it goes your direction, like we're seeing today in FedEx, Tom, right? You don't want that gap through the strike that you're targeting. So, yes, if you're looking for a small correction towards the 175 strike or down market in general, you do have the opportunities to extend some duration on this over time. But, yeah, this is one that plays about a $10 move to the downside, Tom.
Yeah, and I think one item of note that we can't forget, Kevin, is the fact that they report earnings on the 23rd. So that option that you're purchasing, Yeah, that you purchased in the July 26 weekly options. Implied volatility, because it's a long Vega trade and you're buying volatility in that July 26th, that should remain firm or even actually expand, which may expand the price of this calendar also. So keep that in mind, that going into earnings, that option that you're buying should remain firm on an implied volatility level also. And then as time decay warrants, you can adjust that short strike repeatedly over the next couple of weeks here. All right, good look at the long put calendar slightly to the downside there in Google Alphabet, kind of matching up with Rick's charts there. All right, let's take a quick break. When we come back, we're going to take a look at Texas Instruments. Chipmaker stock has rallied about 14% so far this year. It's just below its all-time highs that it hit recently. Fast Market's coming right back.
Binge watch the market with Schwab Network.
Back in time for another
24
knife.
hours a day, 7 days a week on schwabnetwork.com on all your streaming devices. Schwab Network is available
Let's wait.
anytime, anywhere, on any device.
Wait for the 200 SMA.
No place better than the Schwab Network.
Here on the Schwab Network. Before we take a look at Texas Instruments, let's bring in Ben Lichtenstein, senior futures contributor here on the network. Benny, we've got stocks firming up here a little bit off of those session lows, but you know, I look at the dollar higher, yields higher, dollar's at the highest level since May 1st. It's still not really providing any headwind to equities at this point, Benny.
It is too.
It sure hasn't. It may have slowed down some of the momentum we were seeing to the upside, though. But to your point, we're not far off those all-time.
Oh, come on, you Debbie Downers.
40 points right now. As we saw, the S&P is up to 54.75 today. I think the all-time high is 55.05, if I remember correctly. The NASDAQ trying to regain composure today as well. You can see it's up fractionally here this morning by about 12 points. I saw it as high as 19,757. The Dow and the Russell, on the other hand, they're still kind of a bit outside players to the downside, recovering some here as well, but they did exhibit a little bit of weakness earlier this morning. You know, Tom, this market reminds me of a market that's, well, for one, on the tail end of earnings, right, ahead of PCE data. And it kind of makes me think back to like when my kids were little. They'd spend the morning at the park, afternoon with their grandparents, and then the evening at a play date. By the time they got home at 8, 9 o'clock, they didn't know what to do with themselves, right? So kind of just spinning their wheels. And this, again, I think is a reflection of a market that's waiting for more information. But, again, to your point, not far off all-time highs. I mean, a win for the Bulls in many ways, that we've been saying for a while now.
Yeah, real quick here, Ben, and I know you got Luke Groman on tomorrow on the Futures Show that you host every morning at 8 a.m. Eastern. He keeps on talking about the dollar causing headwinds, and when you got moves like this, is this when you start having to perk your ears up when you see the dollar back to 106?
Yeah, especially if it continues, right? Because the move up that we're seeing, to your point, back to May levels, if we get above 106.50 now, you're talking back to November levels. So This could be significant, right? Looking at the yen as a factor, looking at Europe amidst ahead of some of those elections, yields even here in the U.S., which have been inching their way back up. But let's keep an eye on this. Again,
You
it hasn't
ready?
at this point necessarily derailed the momentum we've been seeing in stocks, the upside, but it's definitely a factor to consider. And, you know, when you look at gold, one could argue, again, the bulls have fared pretty well.
Just triggered my alert.
Some of the other commodities that you
Okay, here we go.
tie into, even crude, for example, right, holding up convincingly above this $80, $81 level. So, yeah, a lot of factors to consider when you're looking at the U.S. dollar, but inching its way up, and possibly if we take out those highs from last fall, ultimately, I think that would be more of a factor that investors would have to deal with at that point.
All right, great stuff. Thanks to Ben Lichtenstein. He's the host of the Future Show here, right here on the network, 8 a.m. Eastern Time every morning. All right, let's bring in George Tillis, Senior Markets Correspondent. George, we're talking Texas Instruments. This is one of the most broad-ranging of the chip makers at this point. They're in industrial, automotive, they're in smartphone. They seem to be in everything, George, and it's had a pretty good run this year. What are your thoughts?
Well, I think first, I mean, Texas Instruments, you're right. It's up about 15% or so this year, and the second thing is their technologies are not necessarily old school. I mean, they're one of the leaders in analog and mixed signal digital processing semiconductors, which primarily they sell into the industrial and automotive space, with about 40% of total sales in that area of the semiconductor stack. But you know, you look at where the favoritism has been this year. Obviously, it's been in computational semiconductors, which include, of course, NVIDIA, Broadcom, and, of course, the data center and AI infrastructure that's being built out. So I think, you know, overall, Texas Instruments has participated as part of the semiconductor stack. But nonetheless, I think one of the drags in the past year, at least from an earnings and sales standpoint, has been the automotive segment. So we know that the supply of autos is increasing. Prices are actually falling, and inventory has been rising. I think that's one of the reasons why TXN has lagged. Even though it's up on the year, it's like some of those other respective performers. But when I look at TXN, you know, I look at a dividend machine. This company is paying, you know, $5.25 in dividends, which actually, based on estimates for this full year, that's close to all of their EPS estimated. About $5.20 for the full year. So they're paying quite a bit of dividends, but they're also expected to resume EPS growth in 2025 with $6.58. And I think it has to do with perhaps pickup in their microcontroller and wireless controller technologies for the mobile application areas of their technology ecosystem. The other thing is, if you look at the growth rate in the last year, actually sales were down about 14%, and EBITDA actually contracted. I did also notice that their gross margins are down about 400 basis points compared to the 5-year average, and I suggest the reason being is they've actually had to cut prices to work off some inventory, and that, again, may be the reason we're actually seeing effectively EPS contract over the past year. So this is a cyclical one, and you know, I'm going to use this as an example of going quarter to quarter. They reported earnings back in April. It was actually a pretty solid beat, and the stock has risen since then. But in the last few weeks, it's been trading sideways, and I think it has to do with the fact that we want to see some pickup in the other areas of its business outside of the automotive and industrial space.
Texas Instruments, the world's largest analog chip manufacturer, about 20% market share, trying to bring, they said, 90% of their manufacturing in-house by the end of the decade. They've got a lot of things going on. It's not the sexiest name in chips because it's such a mature company. It's been around forever. What's the, other than scale and wide range of products, what are the other advantages that a company like this has? They're big in automotive. What else they got going on?
Yeah. Well, I think they have prowess, if you will, in the automotive and the industrial space, and that's where you have to look at this particular company. But if you look at some of the other competitors, like ON Semiconductor, symbol ON, this group itself, in other words, using the competitors as an example, haven't performed well this last year, and so the group has fallen out of favor. But I think the other thing about Texas Instruments is that their capital expenditures have increased over the past year. This is why you're actually seeing some activist investors like Elliott Management start to take interest in the company. The other thing I noticed too is that Texas Instruments seems to have a very favorable capital structure or capital allocation plan, because if you look at their financials, the company actually issued last year about $4.6 billion in debt, but they also bought back about $4.6 billion in equity. So I think that they're actually using capital allocation alongside their capex, which again has put some underlying pressure on the stock, but nonetheless they do have scale, and I think that's very important. But the factor that's come against them is the capital expenditures over the past year have actually increased.
Yeah, that Elliott investment they announced on May 28, 2.5 billion plus, proposing strategy. Stock did hit all-time highs after that announcement also. All right, great stuff. Thanks to George Teller, senior markets correspondent here, breaking down Texas Instruments for us. Cap, this one's kind of stalled out here a little bit, consolidated since hitting those all-time highs, but the consolidation's starting to trend a little bit lower. It's still above its 50 and 200-day moving averages, implied volatility levels going up. Now, Kev, they report earnings on, let's see, on the 23rd of July. So I want to avoid that. When I looked at an example trade here in Texas Instruments, I wanted to avoid it, but maybe take advantage of maybe a slight pullback, maybe a little bit more consolidation at lower levels. So I went out to the July 19th monthly cycle, so just over 3 weeks to expiration, and I bought a put condor, not an iron condor, not a butterfly, just a single condor using all puts on this one, Cap. I'll break it down for you. July 19th, buying one of the 195 puts, selling one of the 190s, selling one of the 185 puts, and then buying, to wrap it all up, buying one of the 182.5 strike puts. You're paying a debit of only $1.70 for this, Kevin. There's your risk, 170 bucks per spread. But it takes your break even, because you're buying that in the money 195 put, down to 193.30. Kev, that's only about 50 cents below the current share price in there. So you don't need a massive move to the downside, but you don't want it to go a little bit lower from here.
It looks like an iron condor, Tom, but it's actually called a condor. Why? Because it's all
go, baby.
But think of the idea the same here, which is
you
want it to be between 190.
No.
Right. Your short put on the first.
We're at 124.
Spread, and what?
So understand, we're at 124 right now. We called this out at 110. If you're new to trading, you got the 3 black crows, spinning top, 3 white soldiers, came back and retested the 200. So now it's got to break the 21. That would have been a great exit idea. If we break the 21, we're squeezing between the 9 and the 21. So if we break the 21, I think we can take it up here to the 63 and the 50 SMA. But if you're new to trading, I want you to learn how to take profit. Now I got back from my workout. First thing I did was sit in this chair and got a trade off. That workout, I made 140 bucks. We got bond auction coming up here in 4 minutes. There's your 124. You can get out of it if you're nervous going into the bond auction. Got to be in the now. Or we could have a big spike to the upside. And I'm going to take a risk on this trade. I mean, just after hearing these guys, you thought the world was over. Man, Boom, baby. 129. That's almost $200. $200 in less than 9 minutes. Damn. Storming outside already? I don't know nobody can trade these moving averages like me.
maybe deceased and could be featured on future songs, but then there's also an issue with that. I mean, I think the whole thing is problematic, but next name today here is Carvana, and Carvana right now we're seeing Needham keep a hold rating on shares, did not give a price target, noting that the company's investor bet has already exceeded these relatively high expectations. They cited a long runway of further efficiency gains, driven by some planned improvements, new apps, and a wider rollout at their ADESA locations and the company's software platform as regions that this name has been underappreciated. They also do see this widening competitive moat set to drive profitable growth now going forward. And although the stock's valuation at 25 times expected forward EBITDA does remain a point of contention, they actually believe that relatively speaking, maybe we're a bit more balanced from here. Now, Carvana is truly one of the most ridiculous charts. I mean, we're up 140% on a year-to-date basis. We've risen 27% this month and did touch a new 52-week high today. We're 500% from our low, but still not back to all-time highs.
Yeah, $4 billion more valuable than CarMax. Okay, I don't know how many cars off the top of my head that either one of the companies sell. There's no way it's within a multiple of CarMax. The scale is not comparable.
I'm going to find out that answer for you because now I'm also deeply curious because there's no way. I think last I checked with CarMax had like 70% of the used car market.
I would almost guess, and I don't know exactly all of it. I'm not an analyst. I'm not a Carvana enthusiast or a CarMax enthusiast. One CarMax location may have more vehicles than like 25 or 30 of these vending machines.
It's true. I was actually recently on the highway looking at the one, like on the way outside of the Chicagoland area, and there aren't very many cars in that thing, or maybe this one, which then makes you wonder what's the gimmick if it's kind of sitting empty.
You know, there's a lot of questions, but at some point, technicals take over, and technicals and momentum and excitement lead to the trading almost more so than the fundamentals. Fundamentals are oftentimes an investor's discussion, evaluations an investor's discussion. From a trading standpoint, Carvana's been very, very powerful to the upside ever since bottoming out at $3.55. What a return if you bought that thing under $5 as it's trading $126. And this is what's a down move today. So really, really impressive looking chart as of late. Next one is Netflix. This is another name that's in that streaming world, completely disrupted, and looking to make a move into theme parks and their kind of version of theme parks. Recently, we talked about what's the news today.
So the news today is that Netflix, as well as some of their other peers like Paramount and Disney, as well as others that are represented by the Alliance of Motion Picture and Television Producers, did reach this tentative 3-year agreement with the International Alliance of Theatrical Stage Employees. The union members are to ratify the deal that includes agreed-on paid hikes and safeguards from the use of AI. So it speaks very, very closely to what we're seeing from YouTube now. But the union did say that the agreement provides scale rate pay increases of 7%, 4%, and 3.5% over a 3-year term. It also does include languages to ensure that no employee will be required to provide AI prompts in any manner that would result in the displacement of any covered employee. Now, I think this is really interesting because it's like the precedent of being set that we're going to continue to value our employees over hopefully just artificial intelligence. I feel like we might see companies more and more do this on the concern of like, we can't have all areas of jobs lost, but this is a really interesting way in which they're navigating what is, I think, a major concern as far as like individual copyrighted content, which of course Netflix has produced.
I'm going to use a kind of a stretch comparison, but this, and I hate to do this, this involves, people and their jobs, but Broadcom was trying to be, kind of cut out by Apple. Apple made an agreement for like the next 3 years. They kept extending that, but Broadcom was basically playing some defense. They were saying like buying themselves some time to figure this out once Apple, if they ever do cut them out. This is essentially the unions doing the same thing, assuring their workers some time, regardless of the fact that we're clearly heading that direction, and some of these maybe lower wage paying jobs are looking to be kind of cut out through AI. Rightly or wrongly, that is where this is going.
Yeah, that is where this is going. I'm not sure that this necessarily means that you're in the all clear. I think that we'll see this continue to evolve and change as we see AI actually further and further implemented into our lives. But at least reaching a deal, and I always think when you have like these battles between unions and companies, I like to see things resolved and over and done with. But last name today here is DoorDash. And talk about another name that has been really strong. It's pulled back pretty substantially this year, but still hangs on to about a 60.5% jump from its 52-week lows. They initiated talks, though, with Deliveroo last month According to reports, the discussion did cease after the two companies did fail to reach an agreement, but the report did say the two are currently have no more ongoing negotiations. They did not necessarily respond to this report, but since we know that Deliverr went public back in 2021, shares have been under pressure. As we've seen this investor preference for more profitable ventures and just more consistency, the company does collaborate with this pretty vast overall infrastructure of already riders and restaurants. So some would say that there's like the argument that this would be a necessary, or not necessary, a maybe a partnership that makes sense. But what we do know is this was an attempted acquisition. Doesn't seem like it's going through this point.
At least not at the prices that they discussed. They could always come back to the table, but it does seem that DoorDash carries the bargaining chips in this one. DoorDash is the exception to the rule, the one that has survived the onslaught from Uber and really kind of gave it back to Uber. They're dominating the food delivery market.
It is amazing to me that how much they dominate the food delivery market, because while Uber, it's like basically those two names at this point. I know in my world there's like 1,000 delivery apps, but pretty much as far as market share goes, Uber Eats and DoorDash are the ones to keep on your radar. But we will be looking more at the chart of DoorDash as well, coming up next, as well as some example trades. We will also be diving into the chart of Netflix as well as looking at ways to trade that name. Stick around, Next Gen Investing. We'll be right back.
Wrap up the trading day with me, Oliver Rennick, for the biggest earnings coverage, 3 p.m. Eastern. It's Market on Close. No place better than the Schwab Network.
I was born on the south side of Chicago. It has been a long road, but now I'm working for Schwab. I love to help people understand the world through their lens and invest accordingly. You can call us Christmas Eve at 4 o'clock in the morning. We're gonna always make sure that you have all of the financial tools and support to secure your financial future. That means a lot for my community and for every community.
No politics, no noise, from bell to bell and beyond. Available anytime, anywhere, on any device or phone. Schwab Network.
Welcome back to Next Gen Investing. It's time for our massive segment. Today we are looking at Netflix as well as DoorDash. We'll start off with Netflix, the clear winner of the two, at least on a year-to-date basis. Netflix is becoming a league of its own as far as these streamers, because I mean, like Paramount, Warner Brothers, Comcast, this chart is objectively so much stronger, at least as of late.
Looking pretty good here, and we're up about 63% from our low point that we hit earlier in the year here near 345. Since then, trending upward here, we've got this blue line connecting with this low point here. We could also draw a line going across all these highs that we reached here several times. So that gives us kind of this rising wedge type shape here that we did see an upside breakout from beyond those boundaries here. Now we're in a situation where we're having a nice green day here, but we haven't quite taken out those previous highs near 690, just a little bit shy of 690 there. So we can see that one other thing that happened recently, we had a high point right here near 664. That wound up being the low point that we reached during the past couple of days here. It also coincides with our line we drew going across the highs as part of our wedge here. So we held on to a supportive area, and now we're getting a little bit of a bounce here. We could also draw in the shorter term this white dashed line here, giving us an upward trend line to keep an eye on here. So we're still well within the boundaries of that line as well. In terms of our moving averages, we're above all three of the moving averages that we follow. The moving averages are all tilting upward. You know, the trend is more favoring the upside at this time here. Not really any notable volume or anything recently here. You know, we're actually saw quite a bit below average volume yesterday, and still, you know, pretty low numbers today. So keep an eye on if we do get a big move for the volume to accompany it. That would show more conviction.
So now when we look at RSI here, what is momentum telling you? Because, I mean, yeah, as clear of an uptrend as any as of late.
So price has held on to the uptrend here. We've got our short-term white dash line here, our trend line. However, when we look at RSI, we can see that we had a green trend line that started around the same time. That green trend line has been invalidated here by the price action. So we had a situation where we were bouncing above and below that overbought threshold near 70. The declines during the past couple of days here have resulted in us breaking that trend line though. So, you know, not a terrible sign. We're still above the 50 midline. Momentum is still more geared toward the bullish side here, but not exactly what you would want to see here. Now, this could change. We could recover. We could take out those previous highs. We could push into new 52-week highs and recapture that trend line. That would not be, you know, super difficult at this point. We're still quite close to the trend line here, but worth mentioning at least. You know, you try to look for these trend lines and support and resistance lines on the RSI to help you gauge your trading decisions here. And we did have a bit of a slip up for the bulls by this metric.
So now when we look at some levels here, I mean, we do have earnings like in about a month and a half from now, so we have that to look forward to. But as far as support and resistance, what are you watching?
Well, like I said, in terms of support, that's the easy part here. We had those old highs and the subsequent lows that wound up being around the same point. So near 664, this green line coincides with our upward trend line in blue and our white short-term trend line all around the same area, but there's actually a good deal more just below that. We've got our yellow 21-day exponential moving average coming in just below 659. We've also got our yearly linear regression line. That's our solid blue line that comes in just a little bit below that there. So we use this linear regression line to help us with the other side. We can look at the linear regression line, take one standard deviation to the upside. That gives us our standard deviation channel. That comes in near 746. This could be a place to look for some potential resistance. So obviously the first point to clear is our previous highs near 690. Beyond that, 746 could be another spot to watch.
Yes, so a lot to look at here when it comes to Netflix, of course. One of these names that's actually held up pretty well this year. I mean, continue to actually hold up is actually not doing it justice, really. But with this in mind now, walk us through what you're thinking for trading it, for, of course, for example purposes.
One of the few high flyers, though, not to yet set a new all-time high from the previous bull market that we saw. The previous all-time high, 700 and just a few pennies. So looking for a test of that all-time high over the next few weeks as we basically kick off the beginning of earnings season. This stays ahead of earnings season, though, but maybe that momentum and that hype lead to that test of that $700 mark. Looked at selling next week, buying the week after, a call calendar spread around 700. 350 debit, that would be risking $350. You need to move higher, but not a lot higher over the next few weeks. Certainly within the realm of possibility here, Jenny, about 3% to get to that level. $700 would be a new all-time high, so perhaps sellers would come in around that. You can see by this risk profile, that mountain-like peak, really a pin near 700 is the best case scenario.
Yeah, Netflix, a name that's still hanging on to a near 40% gain now on the year, so it's not looking too shabby. 2024 for Netflix, but now a name that was one of the highest flyers in really our coverage of last year. It's pulled back. I mean, we've retraced about 22% from its highs here, as you can see very clearly from this chart, but it still looks strong, just not quite where we were about 2 earnings quarters ago.
it was looking quite good actually before we had this earnings event here back in October that happened shortly after the yearly lows. Then a strong move to the upside, basically straight up into those yearly highs. We're still up over 60% from those lows, but now we're down about 21% off those highs. And really, you know, a lot of the decline came on this earnings event that we had here. Since then, we've been largely sideways. We've got a pretty clearly defined range to the upside, at least. We've got our red line here near 118. These high points that we reached hit a ceiling repeatedly here. We haven't really tested that point recently, but we've also got a low point here near 106. That's our green line. So we've got a different situation in terms of our moving averages. We're below our yellow 21 and orange 63-day exponential moving averages. Both of them are trending downward, which suggests the trend is perhaps more geared toward the downside right now. Our 252-day EMA in purple still modestly trending upward and still could serve as a supportive point here. So that would be a crucial point to keep an eye on, especially if we do start to decline and that moving average starts trending downward as well. That would be an important sign of potential trend change.
Yeah, so now when we look at here momentum and the overall trend change, which is, I think, continuing to pick up some degree of concern as you continue to see the visits. I mean, so first of all, this massive gap down, but now finding this new range, as you pointed out. What is RSI showing you, though? Is there reason to be concerned with its recent pullback?
Well, I think perhaps we could be in for a bit of a breakout to the upside here. RSI has been trending upward here. It's still below the 50 midline, but we're getting quite close to that point here. Take a look as well. We've got this white trend line going down, starting near those highs. We're testing it. We tested it to the upside yesterday. We came quite close again today. We're pretty much running out of room here. So even a sideways push beyond that trend line would be an improvement over a downward trend line here. But really, that would kind of be just continuation of what's been happening recently. This sideways price move here between 106 and 118. You know, the bulls need something to shake it up, give us a push to the upside, and break out of this range here. Look for signs of that happening in RSI. If we cross above the 50 midline, that would be one sign to watch.
So now when we look at like some levels that we're keeping on our radar here and overall, hoping for maybe some optimism in DoorDash, walk us through what you're seeing.
Well, when we reveal our volume profile study here, that's this blue bar graph on the right side of the screen, the area we've been in recently is even more important than it seemed initially here. So not only do we have this range, this is the volume profile point of control, this thick red line here, that's the area of heaviest trading right near 113. So we need to clear that area as well as the confluence of it with our trend line and our 21-day exponential moving average here. So that there's a key point that's very close to where we are right
Today's
now.
salad.
To the downside, we've got our recent lows near 106. Just below that, we've
Tomato
got
salad.
52-day EMA near 104.77. So let's call it maybe 105 to 106 could be a supportive area to watch out for. We've also got some quite clearly defined volume nodes to the downside as well. That could help inform your trading if things really do start to fall apart. To the upside, we've got our confluence that I mentioned, then our highs that we had here as part of our range near 118. Beyond that, you know, who knows? Probably the next point people might be looking for would be either to fill the gap or to break the low point that we hit just before the gap, so maybe 125 to 128 or so.
Okay, so DoorDash, this is a kind of an interesting chart. I think it makes the compelling case for perhaps maybe an entry point because we're obviously getting things a bit more on sale than when we peaked out at around 143 a share. But we will leave it there for our chart master. Appreciate it, as always, Rick Ducat. Now, when we trade this name, Alex, say you're looking for an optimistic stance here for example purposes, but maybe a little bit less optimistic than Netflix because the chart has been less optimistic.
Yeah, it's trying to go sideways, which is very different than one that goes higher. Of course, that's what we saw in Netflix, a uptrend. This is more of a sideways basing-like trend. So perhaps you want to look at a neutral bullish strategy, focusing in on that green dashed line that Rick had talked about around 106. One way to do that would be, if you think that could be support, go below that level just slightly for your example trade. So 105, 100, going out to August, $1.50 credit. If you could get that, would be $150 in max profit, risking $350 with a break even of 103.5. So this is a strategy that just needs this stock to hold on to those levels, stay above 105, going through the middle parts of the summer, going out to the middle of August. If it does, keep the 150. If it does break down, fall below 100, you have risk definition. So not as much risk, of course, just buying shares or buying something a little bit more speculative that needs upside, but a little bit over 2 times the reward potential here with that risk, with $350 at stake versus the $150 max profit.
Yeah, so a name that I mean, Sam's maybe sees some degree of a recovery of its recent downtrend, but still actually looks pretty strong if you zoom out and look at a 12-month basis. But of course, we're looking at trading stable. We will leave it there for this segment. Now coming up next, it's time for FOMO. We are talking all things Apple, which is making a nice move to the upside today. Analysts seeing optimism related to everything AI with some of their AI features unveiled. We'll dive more into that with Caroline Woods coming up next.
Empower your portfolio with the Schwab Network. Schwab Network is available anytime, anywhere, on any device for free. Schwab Network.
With Schwab investing themes, it's easy to invest in ideas you believe in. Spot a trend in electric vehicles? Have a passion for online gaming? Or want to explore the space economy? Choose from over 40 themes, each with up to 25 stocks identified by our unique algorithm. Buy it as is or customize to align with your goals. All at your fingertips. Schwab investing themes, 40 customizable themes, up to 25 stocks in just a few clicks.
At each and every angle, the whole picture, everything comes full circle on Trading 360. Catch us right here at the New York Stock Exchange on Trading 360, only on Schwab Network.
Kickstart your morning with a full dose of commodities, technical analysis, economic data, and live reaction in global markets. Available anytime, anywhere, on any device for free. And available on all your favorite streaming services. Futures with Ben Lichtenstein every weekday, 8 a.m. Eastern on the Schwab Network.
Yeah.
Welcome back to Next Gen Investing. It's time for FOMO. So we are talking Apple, of course, one of the biggest, if not the, I think it's now the third biggest names in the overall market. So it has some pretty big influence with now more and more optimism regarding everything AI in relation to its smartphones. So here to discuss more on that, I'd like to welcome in Caroline Woods, Senior Markets Correspondent for the network. So Caroline, we're seeing some optimism from the analyst community today. They're not the first, but Rosenblatt I saw upgrading shares. So walk us through the story. Hey there, Jenny. Yes, a bullish rating from Rosenblatt. The analyst there upgraded Apple to buy from neutral, was previously on the sidelines. New price target 260. That's up from 196. Apple's currently trading just above 213 right now, so that implies about 22 upside from current levels. One of the reasons that this Rosenblatt analyst is getting bullish is because of its privacy, Apple's privacy surrounding its Apple Intelligence. The analyst said strong privacy is by far the top feature that consumers want in AI based on its recent survey of U.S. consumers, and said to date it's unmatched by Android. So another reason outside of the privacy around AI is that Apple can minimize the hyperscaler cost risk, according to Rosenblatt. Thinks Apple's AI network or AI work will immunize it from cost pressures of hyperscalers.
Man, that's so refreshing.
Amazon, Meta, Microsoft, while enabling Apple to benefit from their investments. So he says, so Apple can have its cake, healthy margins, and eat it too.
I'm serious. I'm so glad I started eating right.
And actually gave a hockey
I mean,
here too. The
you don't know what's right, but
greater AI interest, we believe. We'd rather step up with a Wayne Gretzky-esque skate to where the AI puck is going, and then stand in place and watch the AI puck pass us by. So as you can see here, good day for Apple. Shares are up more than 2% right now. Now up about 11% this month alone, which is actually a little bit more than it is up year to date. Only up about 10.8% year to date.
And it seems like they announced some features today as well. This rich communication services. What do we know about that?
I know you're all going to get stuck in it.
Announced at the Worldwide Developers Conference, but it appears that iPhone users can now do things like share media with Android users and actually also get read receipts from non-iPhone users, things that they couldn't do before, and that's because Apple has finally added support for Rich Communication Services, or RCS, to its Messages app. The feature is part of the second developer beta of iOS 18. So RCS uses the internet to let you do things like send and receive high-quality files, see the typing bubble, and get read receipts, start group chats, and more. And up until now, iPhone users could only send SMS or MMS text messages to communicate with those that didn't have an iPhone. So I actually tried to go into my settings and update my phone to iOS 18 to see if I could test this out, but couldn't find the ability to update to the beta of iOS 18, so I'm still running iOS 17. I couldn't see this, but as far as I know, the green bubbles are sticking around. It's just
they don't look too good.
Hopefully now, when the Android user texts in the group chat a video, it's not going to be the tiniest little thing that you can't see. It should actually be a high-quality file, and that's because of this RCS feature. Okay.
Okay, Apple this, Apple that, Apple, schmapple, bapple. NVIDIA D, NVIDIA B. When these analysts are constantly talking about Apple or NVIDIA, or if it's Microsoft, or if it was Lilly, or if it was on a continued everyday basis, that they're telling you that the people behind the scenes are bullish on these stocks, which means they're going to be more momentum and easier to trade. Check the previous volume on them. But that's why I get interested in stocks like this. We come back and we hit the 200 SMA. 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 So whenever you're looking at the 1 hour time frame and this thing touches the 200 SMA, I think you know what to do. Jimmy doesn't buy at resistance. Jimmy buys at support.
High single digits through 2026, even despite some of that uncertainty around the antitrust issues that Apple is facing, as well as other tech companies are facing in the EU. So some bullish calls there. But one thing that I do think is important to point out is that despite some of these price targets that imply quite a bit of upside here, the highest I should note is $275, which implies about 30% upside. Apple's median price target is $210. So Apple's
fat cats are here.
That, despite the fact that more than 70% of analysts still have a buy rating on shares. So it'll be interesting to see if we see some analysts play catch up to notch that median price target a little bit higher.
Caroline, is there any chatter? I mean, you're on the floor, you see the traders and everybody walking around. Is there a feeling of uneasiness about the amount of market caps?
I want to work next to Caroline.
These big names. I mean, Apple today alone, you're talking 60, 70 billion. Amazon, 70 billion. I think Nvidia's down 50, 60 billion. Like, these are huge companies that just the net change in Apple just basically is just like, oh, you don't even exist. You're smaller than how much our stock moves in a matter of minutes.
Not so much talk just in terms of market cap, but just still a lot of bullishness for the AI trade, and I think that's just because people are worried to bet against it because it's really been what's powering this market higher. But yeah, no, I mean, I talked to quite a few of the traders who, some of them I know personally got out a little bit too soon. They lot of bullishness in terms of the AI trade. Not necessarily, depending on who you talk to, as much bullishness about the broadening out of the rally, not necessarily seeing a fundamental reason for that at this point from some, but in terms of the Apples, the Nvidias, the Amazons, Metas, still a lot of green arrows expected.
Yeah, and a name that's looked pretty strong as of late. I have to say, a 2.2% move to the upside today, a nice 3% rally this week, and up 11% this month now. So it's been a nice turnaround. I know we saw a huge, massive upswing just a few weeks ago, but it's held on to this nice upper range. So appreciate the insight as always. Caroline Wood's great breakdown on all things Apple. So now we trade this name, and I think that Caroline made a really good point in the sense that there's a feeling of FOMO all the time when it comes to Apple. Either you got in too late, you got in too early. I think that's probably like the nature of the overall market, but Apple's...
I feel like we have a short-term memory with Apple because like a couple weeks ago, Apple was like, you couldn't touch it with a 10-foot pole. Like this thing was just the biggest dog of the mega caps, and then it turns around and now it's like, oh yeah, of course we loved it.
Right. I remember all these analysts at the beginning of this year were like, sell Apple, get rid of your Apple. I mean, I know that
yeah, sell at 170, buy at 213.
Right. It makes no sense. Absolutely no sense. Yeah, high peaked at 220, so we're about $7 off the highs, but we're definitely closer to highs than we are at lows now. We're 30% off the low, and I agree. Markets have a short memory here, but I will say there is a degree of optimism ever since that WWDC event. So it was maybe the watershed event that I know what Bush's DNIs have been calling it. But as far as an example trade today, what are you thinking?
Yeah, it's still some time until we find out whether that's the case, because we're not going to find out until they tell us how many phones we sold. And so that thesis is just simply who's better at messaging until ultimately we get numbers. But I also think you can look at risk-defined strategies, Jenny, that protect from those drawdowns, but at the same time allow you to participate in the upside if you do get a bullish move. So I looked at a July 12th call vertical, but it's structured in a way that you risk less than you have reward potential. So it's the 212.5, 222.5, looking basically for a new all-time high in this stock. Spending about $350 on this would be risking $350 with a max possible profit of $650, so you can make over, or almost, let's call it 2 times the risk on this trade. Break even would be 216, so you do need a little bit of a rally over the next few weeks just simply to break even, but that should be expected. If ever you're in a situation where your max reward is greater than your max profit, or your max loss, then you should expect that you need something to happen. That's usually how probabilities work if the market is to be considered efficient. And so when looking at that, in this particular case, you need to move to 216 or higher by July 12th, and just a couple weeks away.
Yeah, and I would say that it'll be interesting to watch how, once we get more details on the iPhone 16, which we haven't even gotten any details on that yet. It's like I'm already saying that that's going to be the big momentum, but we don't even know about the iPhone 16 yet. We're just hoping that comes out, as historically they unveil their new iPhone pretty much every September, October. But we will leave it there for all things Apple. Now coming up next, time to talk about Chipotle's stock split. It is ridiculous to see shares trading at 65.46 now. It's actually kind of nice, I'd say, a bit of a relief. But shares are down about 0.25% after the split. We'll discuss more with 3 coming up next.
Do, do, do. Let's just pull back and get it over with, or we're going to break outs. Do. Dee, dee, dee. Uber, they were pumping yesterday. Wait for that 200 SMA. Set an alert on the 1 hour time frame.
Ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
My dad was a hard worker.
Your dad.
He used to do side jobs and stomp.
Your dad ever teach you how to shave? What the hell you got growing there? Makes you look huge. You still in diapers, boy? Windows. I'm going to make about 150 this weekend cleaning windows. I'm going to call that the pivot point. We've got a sending triangle developing now. It's a bullish flag. This is on the SPX. Getting ready to squeeze. You ready? Randy. Break it. Okay. Always clean, this Jim. May I help you? Hello.
Hi, good afternoon. My name is Eric.
Yep.
How has your day been so far?
Oh man, I'm making a killing.
I'm sorry to hear that.
You're sorry to hear it? Really?
Subsidy to pay your bills without any cost to you. I just have to check a couple things to confirm your eligibility. May I know if you already have any government or state provided health coverage like Medicaid or Medicare?
No, I don't, sir. Like I said, I was making a killing today.
That's perfect. You do seem eligible for this subsidy. Just one last thing.
Yeah.
Are you under the age of 65?
I am 63. No, I'm 62. I'm 63.
Well, it seems like you don't fit our qualification criteria. Thank you for your time.
Why? Are you age discrimination here? How dare you? SPX, baby. Jimmy called the ascending triangle. I said I was making the killing. He says, I'm sorry to hear that. I'm having so much fun with these AI generated calls. Hey, June. Nivea on the hourly needs a little more time. Not ready yet. I could agree. Not until they shut up on CNBC. Beers. Using the 3 minute. I used to use 3 minute a lot. And I started using the 2.
Star Investment Conference. Good afternoon to you. A lot of chatter there. Are people feeling bullish, bearish? What are they saying about the markets these days?
Yeah, there's lots going on here today, but in the fixed income markets, we continue to be very data dependent. The Fed's told us that they're watching the data closely to determine when is the right time to start cutting rates, and so the market is on edge, watching every data release that comes out. The more recent data prints have been more supportive of
The market's on edge.
later this year, but if we go back just to earlier this year, we were of the mindset of higher for longer.
Honey?
So really every data release
You wanna know a
is something to
secret?
focus on.
There was a day that we used to have 60-40 in our portfolios.
The market doesn't care about the data. We got an election coming up, honey. Yeah, you heard me. That's what we care about.
Treasury.
If this market cared about data, we wouldn't be up here where we are today.
Last 15 years. So the approach we've been taking in our Core Plus strategy is to look for high quality income. So
Oh,
that's
God.
to definitely have diversification in the portfolio. moving
Everybody
around
does that.
But the tilt is more towards high quality fixed income instruments. Securitized or structured product is a favored allocation for us in the portfolio.
Oh, that's scary.
We do still have some allocation to the plus sectors like high yield. It's just at the lower end of the range. That puts us in a really good spot. In the event we have a risk off moment in the market, we'll be able to redeploy that at more attractive spread levels.
Ooh.
Yeah, understood. I mean,
Understood.
When you said, so much of this is data dependent. What data are you watching for specifically? Any way to sort of surmise where we may be heading? I know we're waiting on this week on Friday, the inflation print, and next week more on jobs, for example.
Yeah, certainly inflation is top of mind when we think about the data. The Fed wants to see that inflation is moving towards target. Certainly, we're well off the highs in inflation and progress has been made, but it's proven to be sticky. And the Fed will want to see several months of improved inflation to have the confidence to start cutting rates. On the other side, we're also watching growth and the employment picture. The most recent jobs number came out quite strong, so that shows there's still strength in the economy. On the growth front, well, we've had a few mixed data points there, but nonetheless, our view is we are still in a growing economy, and that does allow the Fed to be more patient and keep rates higher for longer.
Can we talk about corporate credit, global government bonds, some other parts of this story here?
Yeah, so an area where we have found some value over the last year have been global government bonds. Looking at Europe, for example, some of the yields there looked attractive compared to the U.S. Some of that value has gone out of the market now, though, so we have been reducing our allocation to global government bonds. Where we have been adding is structured product, agency mortgage-backed securities, a high-quality, very liquid part of the market, does provide incremental yield to what we see of treasuries. We also like ABS, asset-backed securities. Here, there's a lot of consumer exposures as well as business exposures, a very good source of diversified income.
And, you know, as we look at the big picture here, is there anything when you're giving advice to folks and looking at the market, you know, because you said we're probably in this higher for longer environment, and we look at the different sectors, do some seem more favorable to you, more interesting or better to invest in?
Well, you know, one thing I would point out on that higher for longer, you know, conversations we have with investors about when to move out of cash, now is a good time to start considering that. You know, with rates likely staying higher here, and the next most likely move for the Fed to be a rate cut, now is the time to start adding duration to a portfolio. We think having a diversified set of duration exposures is prudent. Many investors are still crowded on that front end of the yield curve because cash yields are so high, but that really just sets you up for one scenario, and that's the scenario of rising rates. So, you know, constructing a well-diversified portfolio and that security type, but also having different exposure to different points on the yield curve, we think is a good way to position.
Yeah, I thought it was interesting when you talked about asset.
It's too complicated, honey.
Which actually includes very popular thing right now, and those are the data centers, whole businesses, oil and gas reserves. Quick thought on that, because data centers is where it's at with AI, right?
Yeah, we see that something like ABS, you can have exposure to those data centers.
Yeah. Thank you so much, Janet. It's great to see you. Appreciate you being on here. Enjoy the conference, the Morningstar Investment Conference there in Chicago. Janet Riley of Allspring. Coming up, Options Corner. Tom White is standing by, and he will highlight some unusual options activity for the day and how investors are looking to trade on recent news of Chipotle, Microsoft, and Carnival. Stay with us. We'll be right back. Schwab Network.
Oh, where's my... I got my lid.
Empower your portfolio with the Schwab Network. Available anytime, anywhere, on any device for free.
The dinner.
Schwab Network.
trading the trending names every day. I'm Tom White, host of Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
Welcome back to the watch list. It's time for Options Corner, where we analyze unusual options trades that we're seeing throughout the day. And Tom White's all over it, host of Fast Market here on Schwab Network. Tom, you're looking at what's been going on with Chipotle, a 50-to-1 stock split that occurred. I have to double check, but I think it's the largest or one of the largest stock splits that's ever occurred here at the New York Stock Exchange. I was, in fact, over at the Post, seeing a lot of action and activity. You're looking at some of the options activity.
Yeah, not surprising, Nicole. After that 50-for-1 stock split, they were seeing a lot of activity, and they're not only on the volume side, but on the option side also.
CMG had it split.
What we normally see in there, but you have to actually take that 50-to-1 stock split into account there. Remember, there was only less than 20 million outstanding shares in Chipotle ahead of this 50-for-1 stock split. So this is going to make it easier for retail clients and also the employees of Chipotle to participate in their stock program. Last quarter, pretty decent earnings. They grew comparable restaurant sales 7% year over year. They expecting to open about 300 new stores, 80% of those having that drive-through, which has become a real boon for them. And then also the rewards program. That's been a big area of growth for them moving forward as they get those repeat customers. Now, one of the concerns has always been about inflation with Chipotle because they continually raise prices. At what point will that negatively affect the consumers who are tightening their belts at this point? They've been able to pass those along to the consumer. It hasn't negatively affected them. They still expect growth rates in the mid to upper single digits throughout fiscal year 24. So some positives on that side of it, along with the 50-for-1 stock split. We saw a lot of call activity, as I mentioned, double the normal daily average volume that we typically see in there, but you have to kind of pivot that and rearrange it based on that stock split. But one that stuck out to me was out in the July 5th weekly cycle that expires in just 9 days. Trader bought over 2,500 of the 65 strike calls. Average debit of about $1.20 on these, Nicole. So that takes that break even to 66.20 over the next week and a half. That's about less than 1% above the current share price. So you don't need a massive move in the shares to get above there. Now, you'll see open interest and strike prices get adjusted for that stock split, so you have to be careful with that. But I was pretty surprised because the stock was down earlier after the stock split, but then kind of rallied back. We're basically flat on the day, still up about 43% so far this year, just off its all-time high of 69.26 that we hit last week. So yeah, if there's some support here, continues moving to the upside over the next week and a half, this will pay off nicely for this trader.
You know, it just needs to go nowhere fast. I mean, that's not a huge move at all. In such a short time to actually attain that and have that happen. At the same time, there is some overhang. I mean, often when you have a stock split that runs up beforehand and then sometimes pulls back.
Yeah.
You in your notes talked about a TikTok food critic.
Yeah, definitely. That came out about a month and a half, 2 months ago. That was negatively impacting the stock for a short period of time. But typically, you'll get through those periods of downturns. But I think one key item of note is that you mentioned if some trader or some investor had 100, 500 shares of stock, and then all of a sudden in their account they see all these stocks piling in. Typically, we'll see the option market pick up because maybe you're going to hedge some of that stock that you get. It doesn't change the total value of what you have in your account or in your position, but just seeing a different number of shares outstanding sometimes gets the panic button pushed here a little bit. But I'm pretty surprised that we haven't seen a move either to the downside or the upside in the shares today.
All right, next up, I'm looking at Microsoft, which of course has been front page with all the EU of the Digital Markets Act. First it was Apple, then it was Microsoft. You have a bullish trade you found. Some of your thoughts there. It's at 451 today.
Yeah, it was Apple earlier in the week, and then Microsoft yesterday, and it'll probably be Google Alphabet again. It'll be Meta Platforms. The EU is going after these big tech giants, with penalties of up to 10% of their annual revenue. So
Bullshit.
That's a big deal. Most likely, typically, they don't get paid out at that 10% level that the new Digital Markets Act has over in the EU. But this stock shook it off just like Apple did. Apple's up today. Microsoft hitting fresh new all-time highs today, up 20% so far in the year. Hitting those all-time highs. It's not surprising that they just kind of
Woo, Amazon.
the potential penalties that the EU could put on them. It's about bundling Teams with their other programs within Microsoft 365.
I'm gonna share that, Parge.
They did actually, state earlier that they did unbundle it. They said that you didn't have to have Teams with some of your Microsoft products, but that didn't seem to appease the regulators at this point. And then you start looking into AI and the monetization because they've got it across all their silos of revenue generation, from LinkedIn to Azure to Microsoft Office and others. That $10 billion investment in ChatGPT that kind of kicked off this boom. And with the stock moving higher, it's not surprising to see a lot of call activity in there today. Also, one that stuck out to me was a big, massive rolling position. So they took an existing position that they had and they rolled it to a new strike using the same monthly cycle. So out in the August 16th monthly cycle, so about 51 days to expiration, trader bought 64,000 of the 440 strike calls in Microsoft. They paid a pretty hefty debit of about $23.60 because these calls are in the money. So that break even at $463.60 over the next month and a half. That's about 2.5% above the current share price in there. Now, I did mention they rolled out of a position. They were actually long. There's big open interest position in the long 420 strike calls in August also. They sold out of those, so obviously taking some profits. And then they upped the strike price up to the 440. Put call ratio down to about 2.25. So for every 25 puts trading, 100 calls are trading. So it's skewed a little bit to the calls, but that's probably based on this rolling position. But pretty hefty size there. 64,000 options bought on that August 440 strike call.
Right, and making the adjustments as they see needed, right? Rolling out of one and getting into the next one, and having the time, nearly 2 months to have that executed. How about we take a look at Carnival, which, wow, I mean, it sort of blew the doors off with its last numbers. Some of the bullish thoughts you have based on some of the trades you're seeing.
Well, I think the key going into this report that Carnival Cruise Lines was, down over 10% going into their earnings report. They expected a loss of 2 cents per share on EPS. They actually came in with a profit of 11 cents on an adjusted basis. That was, I think, the big turning point for them, because this stock in that cruise line sector has been underperforming RCL, which is just off all-time highs. Even NCLH, Norwegian Cruise Lines, they've been underperforming because of the debt load that Carnival had to take on to survive during the pandemic. Now things have turned around. Revenue was up 17.7% to just under $5.8 billion. That was above estimates. Booking levels setting new records for the second quarter, which is seasonably one of their weakest quarters. Total customer deposits over $8 billion. That was an all-time high. And if you look at some of the bookings through 2024, they're fully booked at over 100% capacity rates. And they're making more moves to reduce that debt that was helping these shares. Now, the stock's up about 22% this month so far, nearly flat on the year, still making some inroads. And somebody in the option market betting that we're going to see some more gains in the near term. One that stuck out to me was in the July 19th monthly options that expire in 3.5 weeks. They bought 20,000 of the 18.5 strike calls, paid an average debit of 62 cents for those, so that break even of 19.12 over the next 23 days. That's about 4% above the current share price in their call volume, about double normal daily average volume that we've seen over the last week of trading, and we've seen a lot of volume in their into earnings and post earnings yesterday. put call ratio down to 0.22. So everything's skewed towards people buying calls in here, and this trader's betting that over the next 3.5 weeks we're going to see some more gains for Carnival.
Yeah, and look, I mean, all you need is that momentum to continue that we have seen this month, and you get to that break even of 1912. And so we will watch for that. Thank you for all of these today. Tom White, Options Corner, every single day. Look at Chipotle and Microsoft, and also Carnival Cruise. Thank you, Tom White. Coming up next, Dan Ives is standing by at Wedbush. We want to talk about Volkswagen's $5 billion investment in EV brand Rivian. What do we need to know? More details coming up.
Yeah, what do we need to know, Nicole?
My dad was a hard worker. He
Your
used to do
dad.
side jobs, installing windows, charging something like $100 a window.
A window.
Charging $400 to $500. He just didn't want to do that. He's proud.
And this was back in the 70s, 60s? You got to be kidding me. I'd been charging $50. So remember the news that made this stock pop. It was interest. I mean, $5 billion is a lot of money. And $1 billion right out, that's a lot of money. But that money ain't going to go to work for a bit. Now, Volkswagen had problems with emissions a couple years ago. Obama wanted to put an end to them. With this environmentally green crap. So, you know, it's not like they solved cancer or anything like that. It's going to take time for this to work. So profit would have been the best thing to do today, right it open, if you were in the swing. I know a girl that was in it at about $8 and sold it at 16. She doubled her money. She didn't know if she did the right thing, and I said, you did the perfect thing. You want to get out of them stocks when they spike. Tell you what, I enjoyed that tomato salad. I've never had one before. AMC popping. Whoa, sure is. Robinhood stock gets a upgrade, not a bullish view on meme trading. GameStop, short squeeze anniversary. There's nothing in here to drive this thing up. Disney could express joy on this milestone of $1 billion on the Haunted Company of that movie that came out. You notice there's no actors in it. is all cartoon. I'll tell you exactly. Hollywood became woke. They got involved in politics. To me, I haven't watched it. I've probably watched 20 movies in my whole life, all the way through. I never was turned on by Hollywood. I mean, back in the day, Willy Wonka and the Chocolate Factory and Blazing Saddles and Warriors, The Godfather. I watched them movies, but I haven't been Brad Pitt. I know him, so I watched one of his premieres. Brad Pitt went to the high school up the street from us on Campbell Street, Kickapoo High School. And back then we partied a lot. I think Thelma and Louise, that was the movie I remember. Do. $136. And the video's got a fallen wedge. It's going to break out soon, either way. I would like to tomorrow's Thursday. We got the speech tomorrow. That's been my catalyst for trading this week. That's probably market. It does care, but then it don't. If you listen to CNBC, it cares a lot. Oh, how we can get the gasoline prices down? Why in the frick are you worrying about it now? You should have worried about it 3 years ago. They know that the commoners are stupid. CNBC does. Retail traders are stupid. took my eye off the spy. I'd rather cry. We're at the VWAP. We're at the VWAP. VWAP box. We're at the VWAP box. The spy's now at 102, the 545s. Get. Jim, are you going to take it to 120? No, I'm going to take it to 114. Amazing grace. Uh-oh. The trumpet has sounded. Now, we could knife more. Yoko. I'm scalping this baby. Yeah. Blanket. Two, 4, 6, 8. Who do I appreciate? Phyllis Diller. I want one. What did I say earlier? Rodney. We're at 112, 113. Here we go, baby. Reel it in. I don't mess around. I'm the sexiest guy in town. There we go, baby. 115. Oh, baby. Out of the trade. 1, 2, 3, 4. Buckle my shoe. You're looking at what? I'm looking for 543. Man, what the hell? Oh, 121. Shit. All right. 122. That was just not fair enough. Magnificent. Give me an A+. Oh, shit. 129. You got to be kidding me. Oh, you cockroach. Ugh. Give me an F. Can you believe that? The hell? I got lucky when I traded you. YouTubers, what do you got to say about that? VWAP, baby. If all you did was just sit here and waited for the SPY or to break or to even pull back to the VWAP, if you're at the bottom and you hit the VWAP, scalp. But I waited patiently for that thing to pull back. Boom. it's got to become very easy anymore. I think patience, instead of rushing yourself and trying to get in there and, oh, I got to get a trade, man. I got to get a trade. I mean, I'm sitting here having a good time, drinking tea, thinking about my phone that I cracked yesterday. How dare you? What the fuck is up with Bitcoin? Whoa. We got 2 minutes to power hour, and the crowd is going wild here at the sports arena today. That's interesting. Okay, we're coming back down here. You know, I'm sick and tired of this thing going back and forth. I don't know if I'd scalp it here. I'd like to know what I'm missing out. We are at a pivot point. But I trade. But this last sell-off is, well, it's into power hour. I can understand that. There's a big hammer. Ooh. Oh. That could have probably been it. Let's just wait. I just got a message from one of my bosses here. If you hear or you see anybody on site from Otis Elevator, I need to be notified immediately. They are not authorized to be on the premises or service the elevator for any reason. That's the strictest message I ever got from these people. They must have, I mean, people are charging humongous fees anymore since the Biden regime come into office. They charge $1,500 just to find a problem with the air conditioner. $1,500. Just to find the problem. I mean, I'm going, wow. It's like that guy's dad, you know. Other people were charging $500 a window, but Father just didn't feel like it was the right thing to do. And it is getting a little bit scary out there. That's pretty strict right there. They probably charge her $2,000 just to come out and look at it. Too much risk right now, yep. Mike agrees. Tomorrow will be a consolidated day. We might get some good knives. And NVIDIA has been holding a well-respected support. And we could expect the same thing out of Chipotle, CMG, kind of like what NVIDIA did after the split. I mean, this is $86 for this stock. I've never seen it that cheap. Let's see if they bark the same words they did with NVIDIA. Well, market cap's too big. All of a sudden, they become very bearish on it after a split. Schwab says it helps the retail trader out, and I said, I guarantee it helped me out. Made them options a lot cheaper. But fundamentally, I don't know what the deal is with these people anymore in CNBC. I'm getting a little tired. Hopefully I can get some sleep tonight. I don't have any likes on my YouTube channel. What's up? Exactly. Oh, I have 6. Never mind. I had to reboot it. I want to say thank you to Mannequin, Parge, for being here from the very beginning. We got earnings tonight. Nike. I think shoes are going to be up, but they got competition.
We're going to lose energy in the next reading.
All right. And to your point, WTI holding $80 still.
Yeah.
So a little bit soft
Bonds
there.
didn't do
Still
too
on.
well.
All right, thanks, Kevin Hanks. Good look through the macro session today. Let's talk about another mega cap winner, though. It's not just Apple. Amazon's having a pretty decent day. Of course, it's been dealing with a little more competition, but from Pinduoduo's Temu, PDD's Temu in
What?
China. We got Jenny Horn taking a look at some of the news in the online retail biz. What's up, Jenny?
So, okay, touching new all-time highs earlier today. We've pulled back about 0.5% from 194, but still, it's the 4th best performer in the S&P 500, which is amazing, with a 3.9% move to the upside. That strong move performance gives it that high of a rank on the session. But like you said, trying to compete in what has been a very difficult playing field as we see competitors like Temu as well as Shein really come in with extremely low prices. So according to a report we got from The Information, they're trying to make a shopping section that directly right now will be able to then buy some of these super cheap items. So the new online catalog will feature some unbranded fashion, home goods, and other items that can be delivered in 9 to 11 days from these Chinese sellers to, of course, Western buyers. Amazon allegedly showcased the idea to a group of Chinese sellers in a recent closed-door meeting, but the new section is expected to begin accepting inventory as early as this fall. And an Amazon spokesperson has said that they always are trying to explore new ways to work with their selling partners to please their customers with this updated selection of lower price and greater convenience. So this is their way to do so. Actually, I was seeing PDD initially dropped on these reports once we saw this information report come out. We did also see that Shein is preparing to make its public debut sometime in London. I mean, I've been reading about this IPO now for what feels like the better part of the last year. So I'd say don't hold your breath there, but it's expected
Don't
to
hold your breath.
sometime. Now, we also saw B of A today keep its buy rating on Amazon and say that there's still future efficiency gains ahead as far as their logistics business goes. So it's been a pretty good news cycle for Amazon here, with the fact that overall it seems like as efficiency starts to build, it only is leading to more and more dominance in e-commerce. And I know that there's so much focus on that high margin business being AWS, but I still think e-commerce is compelling. It's still a massive, massive part of their revenue.
Yeah, there's a comment section.
More and more brands you see on it. There was, I think, one day there was a perception, or previous days, where it was like the Amazon type clothing just wasn't high quality, but they now have like major brands like Madewell, Victoria's Secret, Gap being sold on Amazon, which gives it more credibility, and now trying to bring in these super discount items. I mean, I think this is a win-win. Obviously, there's been unprecedented demand for names like Shein and Temu. So I think that this is them basically trying to steal a page from the success of PDD, and hey, I think it seems like it could only pay off.
Hey, your mic's down, Anthony, or whoever you are. You're not Anthony. That's because my volume's down.
Right now, basically. I think it's a well.
Interesting. I guess they did have some issues.
Download the Schwab Network app and join in on the latest market trends. Anytime, anywhere, on any device for free. Schwab Network.
Knock, knock. Number one broker here for the number one hitmaker.
Thanks for swinging by, Carl.
No problem. So what are all those for?
This lets me adjust the bass, add more guitar, maybe some drums.
Wow, so many choices.
Yeah, like Schwab. I can get full service wealth management, advice, invest on my own, and trade on Thinkorswim.
You know Carl is the only front man you need.
Oh, I gotta take this girl. It's Schwab.
Have a choice in how you invest.
I like
Schwab.
that.
Being part of the latest commodities action on Futures with Ben Lichtenstein, weekdays, 8 a.m. Eastern on the Schwab.
Randy, we have 46 minutes left. Take a good look at Nike before I just make a business decision. Yeah, this could be the pullback we needed. Have a 1, 2, 3 on the 20-day. Price target lowered to 89 bucks. Oh my gosh. Cohen keeps a hold rating. Come on, another drop. Come 4 o'clock here Eastern time, I'm going right behind me and lay in that bed for 15 minutes, not hear a sound. Meditate. Might even fall asleep. He is the one that pulled the fire alarm, ain't he? It was racist that he didn't get elected and the white guy took over. Racist. I'm gonna share that on my social media. You know, I do want to buy more Nike, but I'm just going to leave it like it is. Oh, live on CNBC had bought Nike ahead of earnings. Joe Terranova. NKE. Hey, June. God, I played the heck out of this stock today. It bounced up. I regret that. Right to the 200. Carnival catches wave of the bullish analyst. Firing on all cylinders. Dadgum. What am I in on Nike? I mean, I'm way out there. December 20th. I'm going to call it I was going to call it my Christmas special. The 110 strike. At 305, and I sold some. We had a nice spike on it, and I held some. Right now we're right at 340. And I bought this a long time ago. It's held up pretty well. Whoops. That was my setup. So one analyst is bullish on it. A lot of others have not been. I've not been bullish on it because I picked on them during during the woke spread when they had that transsexual try on a woman's bra. I stand up for women. They can bash women all they want. Them liberals, I want the women to stay the way they are. There's something special about the woman. Not for some pervert to come in there and compete with them. Soon you'll hear, what? What's a woman? They'll become instinct. Oh my. Dang, I wish I'd have took that now, but oh well. Carnival might have a good run because they're really talking a lot of good stuff about it. What the heck's going on outside? Can you hear that wind? I gotta look. I think I got my windows up. Man, I'm so sore.
It seems like the dealer kind of walls that you're describing are a little bit closer than the market maker move. Because the market maker move is saying like $16 or something like that last I checked. So the market maker move kind of implies that we're going to be testing. Because if we get the market maker move, the options implied move to the downside, that would be putting a lot of strain on the dealer levels that you were pointing out at 135. Because that would be below that.
I never really have followed MU that much.
Market maker moves, we basically add up the straddle. So you're looking at the call premium at the money, you're looking at the put premium at the money. You add those up and then you divide that by the current stock price. The reason why we have this skew though, Oliver, is because the call side actually has more premium being built in, there's more opportunity to the upside, which is kind of providing that skew when you're looking at the overall implied move. So hopefully that kind of makes sense. So basically $10 move to the downside is being implied, and then you're looking at an upside potential between $18, $19 upside that the dealers are trying to be able to price it.
All right, good stuff. Thanks, KG, very much. Nice. Looking ahead at Micron, our event for this afternoon. S&Ps, though, pretty much glued at that neutral level. Heading into the bell. When we come back, we're going to talk some more bond funds and ETFs.
I was looking at this one yesterday.
Funds, active versus passive managers.
Now they're talking about a straddle.
Hey, and look, before the index is
damn
now
it.
up. We got a little bit of a bid coming into the market.
God. Oh, that's September 20th. Never mind. Do-do-do-do.
Trading the trending names every day. It's Fast Market. Ready for you, ready to go. I'm Kevin Higgs. Catch me on Fast Market, weekdays at noon on the Schwab Network.
Trading at Schwab is now powered by Ameritrade, unlocking the power of Thinkorswim, the award-winning trading platforms. Bring your trades into focus on Thinkorswim desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization, and track market trends with up-to-the-minute.
Still expensive. They're still very expensive.
Trade brilliantly with Schwab.
There's no way I'd trade that much money on a stock.
I'm Nicole Petalides, live from the New York Stock Exchange. Catch me on Schwab Network anytime, anywhere, on any device, for free. Schwab Network.
You're hot, baby. I'd have a hard time working with you.
I remember when I first started flying and we would experience turbulence, I would watch the flight attendants.
We had a lot of turbulence in our relationship. And then I caught you with a pilot in the cockpit. That was it. I couldn't take it anymore. Oh. Donald Trump moving for tomorrow. I hope he scores big. I don't know how he's going to handle it. He does real good, though. I know Biden will get mad and angry and talk about January 6th and democracy and race, and I think Trump needs to just talk about the border and security and the world's a mess. Inflation. I don't know if he should bring up how crooked he is. Kind of like picking on an old man, but I think I don't like Biden. I never did. Wall Street wants him in there. I don't know why. They're not that bright.
Not to kind of go with the stereotypical.
Talk about the debt. Talk about uniting instead of dividing. I hope if I'm too tired to listen to it, I'll catch it early in the morning. But that's 90 minutes of listening to that. I don't know if I can't handle that. Biden could have a stroke right on stage. That or shit his pants. They busted some girl around here that was given, I think, weed killer or something to her husband trying to kill him. So he put a camera up and caught her. Tesla. Look at that day to day, boy. Solid. Damn, look at Spy go. Fudge. That'd have been a good trip right there, but I would have probably never stayed in that thing. It's still going. Seen multiple reports of active coup in Bolivia. Always clean. This Jim, may I help you? This is a recorded call. Bam! What a run. I just neglected it. Fudge. Yeah. We have one more minute left. YouTubers, thanks for today. Appreciate that donation today. Hopefully we'll get that up there a little bit more and I can be very, very happy during vacation. I'm going to take it easy once I get out of here and watch a few videos and clean my kitchen up. So today's story, we got the big day tomorrow with the Trumpster. Tomorrow afternoon, we're going to see probably more politics on CNBC. What can we do to bring the gas prices down to elect Biden in office? I think I'm the only one out there that's saying Biden ain't running this country. If you want bureaucrats running your country, I hail to you. I think it's Obama's third term. Because it's kind of same situation. We had stagflation real bad, and we had wars going on. We had genocide, and we had the same thing going on now. And it could get a lot worse because the debt's a lot more higher now. And all the unfunded liabilities that go along with it. Ugh. Our grandchildren are going to have to pay badly for it. Look at that knife. Right after that run. So I'm going to kick back. A lot of NVIDIA buys into close. Good. We're still bullish on it. And we're going to watch CMG. See if that gives us an opportunity. Now I'm in Nike. I want to see Nike bounce. We're set up for it to bounce. And we got MU. Ah, damn. I gotta get out of here. I'm just so tired. So we'll catch y'all later, YouTubers.